So the $2 billion number that Daniel quoted at the Barclays conference is indeed a real number, and we're quite diligent about the way that we look at those numbers and audit them, and if anything, they're maybe a bit conservative because what they're not capturing is the efficiency of generative AI. Those benefits are almost exclusively derived from traditional AI and machine learning. So it's in the areas that you would expect, fraud detection and prevention, risk management, marketing in our consumer bank. So it is really the more traditional applications. But what we see is we continue to refine those technologies. Generative AI is complementary in some cases, and so you do help to continue to drive the value. And we've seen a very steady trajectory of value increase year over year from that, and we see still a continued glide path, and that's before we actually start to look at where generative AI factors into that equation.
For those that aren't lucky enough to have had the leadership and the idea of putting in place the infrastructure needed for this as quickly as Jamie, and then bringing you on board to be the executive sort of responsible for it, take us through the steps of the last year. Where were the blockers? Was it about ensuring that your data was clean, that it was accessible? What was it that then became easier than you didn't realize?
Yeah, look, this is a journey. There's no question about it, and I think it's a multi-year journey, and it's one that's not certainly. I wouldn't say we've reached the finish line by any stretch. I think you have to have the right foundation. So the work that we've been doing as an organization around cloud adoption, technology modernization, data modernization, all of those things that have been in flight for many years provide the groundwork for being able to adopt technologies like this and be able to use them.
Did you do that internally? Did you bring on partners to help you with that?
Yes, of course, we're working with major cloud providers, but a lot of it's been driven by our technology organization. My partner, Lori Beer, within the organization has driven a lot of that overall technology strategy. In terms of like the blockers and where do you go next, I think there is a lot of focus on data. We have, I think, when we look at this space, in my opinion anyway, the differentiator going forward will be data. I think this is one of the technologies that does favor the incumbents. And when you look at JP Morgan, we bank 80 million households. We are the investment bank and the commercial bank for most of the Fortune 500. We move 10 trillion of payments a day. So if you can harness all of that information and use it in a way that provides you with the right insights, that's very powerful. Now, like most organizations, a lot of that data is siloed within applications and business units and what have you. So the question is like, how do you unlock that value, do it in a safe way, certainly protecting all of our clients' privacy and data privacy, but I think that's part of the journey. And when you think about generative AI, it unlocks a wealth of additional information in the form of unstructured data, right? So that now, how do you construct knowledge bases and work with all of that? I think, great examples are, you could have a knowledge repository with wonderful procedures, but if you're a client service representative and you're having a conversation with somebody on the phone, the procedure might not be the thing that is actually going to help you with a fluid conversation that helps you resolve a client question most quickly. So it's now the process of going into all those knowledge stores and how do you refine what's in there? How do you make sure that you're actually looking at what are the most commonly asked questions? What are the conversations you're having with clients so that you can curate that information to be able to serve it up in ways that are really useful and do it in a way that helps the response time get that much faster.
So the way in which we've managed to decide you are number one, and Evident picks away at all these different layers of where your expertise lies in the AI stack and whether it's talent driven and how much you're thinking about AI governance. I would just want to go into the talent element of it because this does take absolute remarkable expertise. Where are they coming from? Were they already in-house?
Yes, so we have been very focused on building up the talent, again, leaning into this early. And we're incredibly fortunate to have some of, honestly, the most talented people I've met in my career. PhDs, people from academia, people that were leading major practices at universities, in industry. So they're coming from different places. And I think that what we see is the collaboration of people who bring deep expertise in all the techniques of data science being put together with deep domain experts in our business and creating that cross-cultivation of an awareness of business people of the technology and certainly a willingness of the technology folks, the AI experts we have in-house. They're very eager to understand the business. They're eager to create value for the firm. So like it's the combination that actually creates the real leverage.
You go onto your website and AI research is a massive area. You're sort of open sourcing this. It almost feels like you're breeding a mini university within it. But how does academia feel about this? How are you trying to work within them without sort of basically sucking all their talent and paying them rather nice amounts of money?
Well, we have a lot of partnerships with leading universities that we're very proud of. And I think that a lot of the work that our research team does is very much in light of advancing the science. So we have done a lot of work when it comes to things like explainability or thinking about synthetic data or thinking about the responsible uses of the technology. We do that oftentimes in collaboration with universities. And I do think that there is the desire certainly to publish those findings for use, to advance the science. So I think, and that also helps us, I think, to create a very thriving community within the firm. I think when people come from academia, they want to be able to continue to contribute to the science. And I think the fact that we allow them a bit of flexibility around looking into novel topics, being able to publish their work is also part of what helps to create a very vibrant group of data scientists within the firm.
You're just talking about how thinking around how to use it responsibly.
Yeah.
Corporates having to lead this themselves. At the moment, there have been executive orders. The EU, once again, has front run in terms of thinking about regulation. But you're kind of just having to develop governance standards in and of yourself, right?
Well, one of the things that I would say, certainly for the financial services industry, is, again, this is not new. Like these techniques, algorithmic techniques, AI, machine learning, have been in place for a number of years. So when we look at the structures that are around them, either by regulatory or by practice, you've got model data governance, you've got data use practices, you've got cyber practices and resiliency practices and operational use practices. That whole framework is also very transferable. It lends itself to the work we're doing across the spectrum, whether it's generative AI or traditional AI. It just may be that the emphasis could be a little bit less on the model itself, but how it's being used. And I think when we look at the way that we've rolled this out, it is very much we consider use case by use case. How is the technology being used? Is this an appropriate technology? I think of it like what's the tool in the toolbox, right? It might not be the thing that you're going to use to make a credit decision for an individual, but it might be the thing that you're going to use to help with a marketing campaign. So I think we just have to make sure that our folks, and we've spent a lot of effort in training, just understand, which tool is best for which purpose, and understand like what the technology is good at and where some of the limitations are.
Training. How has that been executed internally? How much is that something that is bringing on board the employee base?
Yeah, so there's just a tremendous thirst for information about AI. So this has not been a training that we've had to force on people. To the contrary, there's been just a great demand for it. So we've rolled out all kinds of courses about the technology itself, how to do effective prompt engineering, because initially when we rolled out the technology, if you're not asking the right questions, you might not be getting an optimal response. So helping people to understand how to most effectively work with the technology. We've done things in person, training classes, and then we also have the super users. So in any organization, there's going to be that 10 or 20% that are very, very keen and really take it to the next level. We embed people within the different groups to be the local source of expertise to be able to help the people that they work with understand how to adopt it. The biggest question is, this is amazing, how do I use it in my business? And if you have people within the group that have the domain expertise to be able to help bring those two things together, that's where we really see the kind of flywheel effect.
Super users, are there themes among them? Do they look the same, sound the same from different geographies? How do they tend to show up?
Not at all. We were having a bit of a chat before this about whether it's a demographic or older people, younger people, people that are more technologically oriented. It's been kind of across the board. And I think it's just people who are enthusiastic. 9 times out of 10, it's somebody who has something that they're doing every single day. So a great example is our legal department. If you are having to look at contracts and having to look at regulation, and I give you a tool that says, I can summarize this work that would have taken you hours, and I can give you a pretty good synopsis in minutes, those are the super users. Because like people see the advantage of, wow, this is going to make my job so much easier. This is going to make me so much more effective. And it just becomes, something that they naturally want to adopt.
Is there anyone that pushes back?
I don't think that pushback, but I do think that as we get into this and we really start to get to the next level of efficiencies of really looking at workflows and things, that's where I think you're going to have to get people really involved, because I do think it will require, in some respects, reimagining the way things are done. And that's hard. That's hard for all of us. If you've done something and you're an expert at something and it's always worked this way for many, many years, having somebody come in and tell you, no, rethink the whole thing is not usually natural for people. So I suspect that there will be, pockets of resistance as we go through this. But I think the important thing is you have to bring people into the process. You have to bring them in early. They have to be part of what you're trying to solution for. And you have to have their expertise. You have to listen to them and understand, like, this is going to work, this is not going to work.
I think this time last year, the big hand-wringing was around jobs and whether everyone was going to be wiped out or whether ultimately everyone's going to be augmented. What have you seen in practice coming from that?
It's really been augmentation thus far. I mean, where we have live use cases with generative AI, it's in places like our asset and wealth management group, where we are making our bankers more effective by being able to help them prepare for meetings more quickly, being able to help summarize research so that they can have insights to their clients. And what that provides is more time to spend with your clients, right? And frankly, getting rid of a lot of the administrative work that I think most of us would prefer not to have to do. So I think that, what we're seeing so far is certainly not that, there's no need for this particular job. Like, it's just a way of making that person, like, just take away the things that are, not the highest value order of what they're working on, and just give them the time and the space to be able to do more of the latter.
Do we as a society need to be better at saying those things out loud? I think the media does a good job at sensationalizing the odd thing. We're either this is mass extinction or indeed the pushback or the adoption. How have you managed to drive that narrative that this is going to be help you have time with your family and with your clients and ultimately help you rather than hinder you?
Yeah, I do think it's, again, having it in your hands, I think demystifies it quite a lot. So if you're a developer and you see how the technology can help you write a test case or help you accelerate what you're trying to work on, I think it comes to life for people that, like, this is not something that's going to be done without me, but it's just a way of making my work that much more effective. I think that helps quite a bit in just whatever was in your mind of what this is. It's scary when it's not accessible to you. When you can actually work with it and see what it does, I think that's what starts to change people's perception.
Is that how you've done it personally, bringing on the other leaders across the business to work alongside you, or have they come battering on your door?
It's more the latter, to be honest with you. We have a lot of very, enthusiastic business leaders that have pushed this, and there's, as I said, there's a bit of healthy competition. Last year, when we were talking about this, we were saying, okay, well, we'll roll it out. Maybe we'll give it to a few hundred people in the firm, but we'll have to be awfully careful. And then we started. And we actually started with asset and wealth management. We rolled it out to the entire organization. Mary Erdos is a big proponent, and she was really making this something that she wants our team to adopt. And then
so this was LLM Suite,
this was LLM Suite. And then when the investment bank found out, they said, well, wait a minute, like, we want to be on there too. So it does create a flywheel effect that once it starts to be out there, we've seen massive adoption. And as I say, we're basically rolled out to the entire organization at this point.
Have there been any moments of fear or worry or, oh gosh, there might have been a leak or there might have been some sort of interference?
We have spent inordinate amount of time, and actually that was the one throughout the course of the year, if I got one incoming that was like, where are you guys and why is this taking so long? And it was taking so long for those reasons. We really wanted to make sure that we did this right, that we had thought of everything, that we had all of the protections that we needed to have, that we had the right training and the right guardrails. I mean, when you log on to the platform every single time, there's a screen that says, this is what it's good at, this is what it's not. You're responsible for the outcome. Like, we remind people constantly, and I will say also, our use cases are still internally focused. We are not facing clients directly. So we are augmenting people that speak to clients, but we are not putting it out to clients yet. I suspect at some point that will come, but we are taking this very slowly, and the use cases generally are those that don't have the highest risk associated with them. So it's like any technology that we adopt, you adopt it in a very considered way to make sure that you are not creating any opportunities for risk or things that you hadn't anticipated.
You were clearly considered when you wanted to have, sort of be agnostic to the large language model providers. How did you go about comparing which ones you were going to integrate within LLM Suite?
Yes, so we do a lot of benchmarking of models and different capabilities, and again, it's the tool in the box.
Yeah.
Depending on the use case, a model will be better for latency or performance or actual output. So, we have a very talented group of people that do this and look at this across the different use cases. Our proposition was more of, when you think about large language models, you're working with multiple cloud providers, and how do you traverse multiple cloud providers? How do you make sure that where your data is and the model that you're using, you can connect those things effectively? So we thought of that kind of early, of putting that layer there, because over time, like, we don't know who's going to end up being the winner, if there is one winner or there are multiple winners. So we're, also being able to now look at models like, Llama, and we'll soon be using Anthropic. And so making sure that we have that flexibility of being able to go across the different providers was really important. We want that. We want to use the best model for the best use case.
How much do the cloud providers woo you with all these different models? I've heard extraordinary stories of just how supportive the cloud providers are of integrating the models and getting some of the new startups in the space to come on board and help with their resources.
Yes.
How much, when they're going to you as the client, are they being like, look at the array that I can offer you?
Yes. Well, I think you have to look at the whole stack. There's compute, there's storage, there's the models, there's a whole ecosystem of services growing up around all of these technologies as well. And it's just a question of, like, being very thoughtful and intentional about how you construct those verticals, and not leaving yourselves in, we don't want any one-way door decisions. We want to have as much optionality as we can.
You're a global business, but we think of you as an American focus, and of course that is what you have, but there's inroads in Europe. Have you had to think about a geographic diversity and language diversity and how you best satisfy a very rich, different kind of employee base?
Absolutely. I think less so in the employee base, but more so in the implementation. So, I think one of the things that we're watching closely is the regulatory environment,
Yes.
right? Because if that starts to become quite bifurcated, that creates challenges. We already see challenges with data privacy and data storage and all of those things. So those are always considerations about how we think about our uses of technology. But generally speaking, in terms of adoption in the organization, our businesses are global, our client bases are global, and so the adoption, the way that you're going to use it is probably similar in different groups across different geographies, but we do have to consider all of the relevant regulatory and data privacy aspects of how we implement.
Are you hoping there'll be some sort of global coordination? Do you have any optimism post beginning of this month?
So we spend quite a lot of time with the regulators, and I think it's been a very healthy engagement. I actually welcome the engagement because I think there is a genuine demand and interest in learning, and we try to provide as many of our experts to help regulators really understand the technology as possible. I think what I've been very encouraged by, certainly in the financial services space, is that there is an awareness of looking at the use of the technology. So we have a prudential framework that looks at protecting the integrity of markets. It looks at protecting the end investor. It looks at, fiduciary responsibilities. None of that changes. It's a technology, but the outcome, I think if you focus on the outcome and you are adhering to the outcome, that makes a lot of sense. And I think that most of the regulators we speak to, certainly in financial services, understand that they're not trying to regulate the technology, which will continue to evolve. They want to make sure that the outcomes are fair and that market resiliency is preserved and all of the things that, are the basic fundamentals of financial services.
Do you think there's any risk, as Gary Gensler has often sort of voiced, that everyone ends up having the same outcome and the risks become significant because it's a systemic issue, that if everyone's building off the same sort of models with the same sort of outcomes and the same impact from the market, we don't have a spread of risks? It feels as though if you're trying to be large language model agnostic, is that a real threat?
Again, I think it's how models are being used and whether that's really going to be the case in trading and different markets areas. I do think, though, that the likelihood of convergence, even if you're using the same models, your input's different. Your customer base is different. Your flows are different. So I don't know that you're going to see that level of convergence. That's a topic that we do engage pretty regularly on.
And you've done, clearly, an awful lot of work on engaging your employee base. How much have you had to educate me as a Chase user about my data? How much have you had to make people's own concerns about their data not one that they need to be considering?
I mean, I think that that's a consideration irrespective of the generative AI or any kind of AI technology. Customer data privacy and all of the rules that go around that are certainly pervasive across a lot of the things that we do, and that's obviously top of mind, is making sure customers have that trust in us, that transparency of how their data is being used, and that they have the ability to contribute to those decisions.
If there was a magic wand right now, what would you wave to make things ramp up a little easier, a little smoother? Is there anything that you're like, here's this blocker again, or here's this stumbling block, or here's this set of conversations I'm going to have?
I think, I'm not sure there's one thing. I do think that as we now evolve and get into the next levels, there is a lot of work to do to get your data AI ready. There is a lot of work to do to make sure that all of your applications are properly hooked up together in ways that are going to allow the technology to work more fluidly. So it's a journey. I think it's a path that continues to evolve. I'm not sure there's any one thing, but I think, again, we've been pretty intentional about setting objectives. It was a big objective for us to get the technology in people's hands this year. That's been a long road, and I think we've kind of achieved that, and now we're moving on to the next thing of how do we then make it that much more effective for people in more complex tasks.
Take us through the hype cycle of Teresa, and whether you've had. I think last year I asked you, how many people are coming up to your cocktail parties asking you what on earth this generative AI thing is all about. Has that remained sustained? Have we peaked and troughed a little bit? Where are you in terms of knowing everyone's desire to understand your business?
Well, I certainly joke. I used to run the security services business at JP Morgan, and I'm a lot more popular today than I was then. So there's still people that are very keen to understand the technology, understand what we're doing at JP Morgan. And so, we spend a lot of time with our clients, our regulators, at forums like this to share information. I think we're all learning, and it's an evolution, and I'm sure it's going to be another exciting year ahead for us.
Just perhaps you're first again next year, and you're sat here once again with the top of the Evident AI Index. What then are you talking about? What's your next big? Is it quantum? Is it where does your conversation go?
I'm hoping that we're going to be talking about how we're enabling employees with their own assistants, that the assistant is really specific to you and the job that you do, and how we're able to link things more effectively together for you. I think we probably will still be in the earlier stages of that, but that's where I think the evolution is heading. So I think that's where we're going to be focused.
Teresa, one way that you used LLM Suite or whichever particular chatbot is your favorite on your phone right now. What's the one you've done of late?
We run a very tight ship at JP Morgan. We do a lot of business reviews, and so before I go into my business reviews with Jamie, I put my presentation in there and I say, what is the message coming out of this? Make it more concise, make it clear, and it certainly has helped with that. So I think executive communication, if you haven't used the tool, I highly recommend it. It's a great way of
Does Jamie know this?
clarifying
And is he
your
cool?
thoughts. He's a tremendous user. We're just about to roll it out on mobile devices. He's been desperate to get it on his phone, so that's a big deliverable before the end of the year. But yes, he's a believer.
Teresa, thank you for helping us become a believer and why you're number one on the index once again. Teresa Eisenreuther, thank you so much indeed.
Thank you very much.
Please welcome back to the stage Evident co-CEOs and founders Alexandra Musavizadeh and Annabelle Ailes, and our moderator, Bloomberg New Economy's Eric Schatzker, for a conversation on the Evident AI Index results.
Good morning, everybody. I've already recognized a few faces here from last year. Nice to see you all again. Nice to see those of you who are here at the Evident AI Symposium for the first time. Alexandra, Annabelle, thanks for having me back. Please don't mistake this for pure marketing. It is important that those of you who are here and those of you who are watching from afar know a little bit more about what this is, know a little bit more about what this is. And who better to tell you than Alexandra and Annabelle? Let's start with a little bit of background, right? A context, I suppose, for those who are new to Evident, haven't been to one of your symposiums before, or simply forgot what we told you last year. So what is Evident? What is the Evident AI Index? In short, why are we all here?
Thank you. I'll jump into that. There's a lot of detail, so I forgive people who've forgotten. So, but on Evident, so just a little bit of background. I've, as you know, spent 20 years in the sort of ratings and ranking business. And then in 2018, we established the Global AI Index, which was the first ever benchmarking of nations on the strength of their AI ecosystems. And with that, we got really into the weeds of how to measure something as nebulous as AI in the early days, and looking at sort of the AI development and deployment at a national level. And then, we found that with the accelerating pace of AI and the growing need for businesses to see, and there was a lot of demand from the businesses and banks in particular, who had already been spending a lot of time and money on traditional AI, to look at sort of how do they compare and contrast and where are they on that journey. So that was sort of the reason why we set Evident up back in 2022. We actually started building the methodology, and we had it ready just when ChatGPT got released. So it was sort of, it happened pretty much at the same time. So we were
exquisite timing.
Quite lucky with timing. I think what luck follows the prepared mind, as they say. But anyway, so we released that index it was the first edition in 2022, January, and as 2023. And just a few weeks ago, we released the third edition of the index back in October 17. And yes, we're here to discuss the results of that and how we put it together.
Yeah, and maybe just to touch a bit on the index itself, for those of you that don't know. So the index ranks 50 of the largest banks in North America, Europe, and then a few from Asia Pacific as well. It's based on publicly available data, so it's holding up a mirror to what banks look like from the outside. And it measures 4 things. So the first is talent. How much talent do each of these banks have, like AI and data talent? What are you doing to invest from like hiring initiatives, training initiatives in that talent? We look at innovation, which is all around the research teams, the patenting, the investments and acquisitions that banks are making in the AI space. We look at leadership, which is all around the executive positioning, the executive leadership team, what they're saying about the bank's AI activities, and then transparency, which is all about how these banks are talking about responsible AI and ethics and how they're organizing those teams that are focusing on AI governance and how they're building trust with external stakeholders. So that's kind of what the index is.
I don't want to go too far into the weeds. We don't have enough time, and furthermore, you can read all about the index by picking up this document, which you'll find outside. But I am curious about methodology, because AI is not like any emerging technology. It's anything but static. Is the methodology something that you're constantly having to refine, or have you been able to stick more or less to what you started with?
Yeah, maybe I'll jump in first. Yeah. We're trying to keep it as consistent as possible because you want to be able to see trends and see how it's changing year on year. But the constant tension is that we're also trying to evolve the index to where best practice is emerging. So we're constantly thinking about what is the optimum talent stack? Like, does there become a point in time where data engineering, for example, the more data engineers doesn't necessarily mean better capabilities, for example. So we're constantly trying to think, how do we adjust the methodology? How do we refine it to be up to date? And one of the areas that maybe we want to talk about at some point is the new metrics that we added in this year around use case reporting. So as banks talk more about the activities that they're doing, what use cases are they talking about? What ROI are they seeing? And there's quite a lot of there we're trying to make evolve it as well, year on year.
I do want to talk about use cases because they still seem, for many people, to be a little ephemeral, perhaps. But before we get there, I think it's worth spending some time talking about the results themselves. I love rankings because they pick winners and losers. And you can't actually see the losers here because you're ranking 50 banks. And there are some, I presume, that didn't make it, right? So those are, I suppose, the losers. It's obviously not as good to come in 50th as it is to come in first. And I suppose it's a source of debate, perhaps, a conversation starter at the very least. What have you noticed now that you've been producing this index for a few years? What are the before we drill into the winners, the actual winners and losers, the biggest takeaways?
In this year's, and over the last couple of years, what
Yes.
we've measured, it is, well, there were areas in the index that were very difficult to get to 2 years ago because there was, as Annabelle said, there was very little reporting on transparency of responsible AI or talking about the impact of the investment in sort of clear, announcements on spend and use cases and sort of the impact it was having. So basically, a year and a half ago, there was just none of that information out there. We had it in the index, we had it in the methodology, but it was very sparsely populated. So what we've seen is, this year has been a sea change in activity. We'll get to the results in a minute. But so what we've really seen is that there's just a lot more activity and a lot more interest and focus on reporting on that activity, because there is now an assumption that all banks are, in the business of figuring out how to adopt classical AI and
They
Gen
had
AI.
better be.
And if they're not, I think they might be in trouble. And so, therefore, that with that comes also much more visibility. So we've seen a sea change in that.
Now, one of the takeaways for me is the consistency of some of the rankings. The top 4 positions remain the same. JP Morgan at the top, Capital One number 2, RBC number 3, and Wells Fargo number 4. And there's a little bit of jockeying elsewhere in the top 10, but not a ton. What does that tell us?
No, it's interesting to see that, on the surface it looks like there's stability, as you say, the top 4 still, JP Morgan in the lead, Capital One number 2, and then RBC and Wells Fargo. But underneath that, right, there is an enormous amount of activity. So actually, the 10 leading banks in the index, the top 10, are growing at a 2x pace compared to all the other banks in the index. So the leading banks are leading more, right? There's an advantage that's been had already, made by decisions early on in 2017, 18 to make those big decisions that Teresa was talking about before, getting that research team in, getting the talent in, doing the hard work of restructuring and reorganization, and thinking about a tech-first or an AI-first business. And so you see that the common denominator in the leading banks are, they're not sitting still. They are able, and they are growing faster than all of the other banks. But also what you see is that they are strong on all of the 4 pillars. They sit in the top 3, in talent, innovation, leadership, and transparency. It's a group-wide, it's an organizational-wide effort. And so that's what we see as some of the common themes.
Another of the inescapable conclusions from this index is that the US banks continue to be stronger, shall we say, than banks from, on the whole, certainly banks from Europe and banks from Asia. The Canadian banks perhaps rank disproportionately well, given the size of the economy and the size of their balance sheets. What can you tell us about regional dispersion, and what should we be paying specific attention to underneath it?
Yeah, maybe I'll take that one. So yeah, just to Eric's point, the Canadians ranked really strongly. On average, we look at 5 of them, and on average, they scored the highest points in the index. Then it was the US banks, although there's some very, very strongly performing US banks, and then quite a lot of bifurcation. There are some quite low-ranking US banks as well. And then the UK was in 3rd place. But you're right, the kind of North Americans tend to be performing slightly stronger than the Europeans have. And I think that what we found over the last year and a half is that when we spoke to European banks initially, they were very much focused on individual point use cases, generating value in specific areas of the organization, which would be, I mean, a good approach, I guess, if you're just thinking about the ROI of those individual use cases. But when we spoke to the North American banks, they'd taken this kind of more top-down sort of leadership-led strategy to organize themselves and to build capability. And I think so I think that's where the US banks, they've done that over the last 3, 4, 5 years, and they've built that capability over time, and that's why I think they're still ahead. Whereas the Europeans, they're not just doing that point sort of individual use cases anymore. They're thinking about this group-wide. That's where you've seen the likes of HSBC really ramp up, for example, in the ranking. But that's just that mindset shift that's gone from sort of individual use cases to sort of what capabilities do we need to build, what should our long-term strategy be, and which use cases do we want to focus on across the group.
Europe is an enormous economy, and Europe has some awfully large banks. If you haven't noticed already, there are only, if I'm not mistaken, 6 European banks in the top 25. Should the European banks be worried about how far they're falling behind?
Should I jump into that? I think that, look, it's the bifurcation that Annabelle was mentioning before is seen both in the US and in the European. But the difference between the US and North American banks and European banks are, it's concerning because globally you'll see this bifurcation of the leading banks leading more, getting more market share, and strengthening their competitive position. So for any banks that are, in a period where they're sort of still waiting and seeing whether they should jump in and create a AI strategy, refine an AI strategy, and put some money towards that, and that time is running out a bit because one thing is.
Might it have run out already?
I think that would not. I think there's still time. There's still time to catch up. But one shouldn't underestimate the enormous amount of effort that it takes to move into a position to adopt AI and Gen AI at a sort of a more nimble pace. Because one thing is to decide what large language model or provider you're going to do and pick the use cases and identify the problems. But all of the underlying work of the data infrastructure and the governance that is set up to be, being able to address AI-specific risk, it takes a lot of time. So 90% of the work lies there, 10 in identifying use cases, looking at impact, and picking the vendors. So the longer the banks that are considering to sort of jump in and make a big push in this, the longer that takes, the more that gap grows and the more those banks are going to be at risk. So it's not next year or the following, but it's not 10 years away either. So it's somewhere in between.
You both have to live and breathe this stuff all year long. And it's not just the depth that you acquire by virtue of that, but the fact that you have an overview of the entire industry that puts you in a relatively unique position. So I'm curious to know, thinking about these results, what did you find most surprising?
Yeah, maybe I'll jump in. So I think we've talked about it a bit so far that there's been a kind of groundswell of momentum across the sector. I don't think that's surprising.
No.
And I don't think it's surprising that we've seen people talk more than ever before. Like we've seen a 59% increase in press releases talking about AI, an 84% increase in LinkedIn posts. There isn't a bank in the index now that doesn't talk about AI somewhere in their investor materials. So there's more talk, and I don't think that's surprising given the amount of activity that's going on and given the kind of demand from analysts and demand from, from executive leaders to communicate what they're doing. But I think the surprising thing to us has been, the talk's gone up, but we haven't seen so much specificity about business outcomes. So out of the 50 banks we track, only 26 of them, like everyone's talked about use cases, everyone's talked about what they're doing, but only 26 of the 50 gave any kind of like business impact in their investor materials about their use cases. So that's not dollar value, that's we've saved time, we've had net promoter score improvements or products or service improvements. And out of those 26, only 6 put any kind of dollar value on the business outcome of a use case. And JP Morgan and DBS were the only two to give an overall total dollar figure, Singaporean dollars for DBS, of the return of their AI investment this year.
Should the cynic inside me be saying to himself, well, the reason we're not seeing a lot of specificity on business cases is because there isn't very much of it?
It's a good question. I think there's definitely some of that potentially that's true. I think a lot of it is getting use cases into production for the first time. Maybe the ROI isn't quite there yet. Maybe the ROI might not be there. They also might not have maturity of their return or ROI reporting. There's quite a lot of investment that needs to go on internally to think about what those metrics should be, how to aggregate that up across all these different use cases, all these lines of business, and then communicate it at a group level. And I also think once you then communicate it, you've got analysts who are going to hold you to that. They're going to ask more and more questions about it, and you've also got regulators that then come asking. So I think the cynic may be true, but I think there's also some other factors going on.
If you look at those 4 principal areas you measure, talent, innovation, leadership, and transparency, it sounds to me as though transparency is still the area that shows the greatest room for and perhaps also need for improvement. Is that fair?
You go for it?
Go for it.
Yeah, I mean, it's a tricky one because by transparency, I guess we're looking at, banks are a highly regulated sector. We know that there is so much going on under the surface that we can't see from the outside. So I think there's undoubtedly been an incredible amount of work going on internally to obviously engage with the regulators, work out how to adjust risk management frameworks to accommodate AI and then Gen AI specific risks. So there's a lot going on under the hood, and I think there's a lot more work to be done. But I also think there's then this secondary factor, which is how do you then communicate that? And is there a difference between sort of responsible governance and also trust, which is building that narrative and explaining how you're using AI to your customers and to the public. And I think that, it's somewhere we've seen a massive ramp up versus last year. The data last year was very, very thin. There was very, very little in the public domain. But I think there's probably a lot more work for the banks to do in terms of communicating what they're doing to the public and their customers.
12 months from now, we are going to be talking once again about the things that you find most surprising. But if you had to crystal ball gaze, what do you think we're going to see happen over the next year? And what's going to be reflected in the way that you measure things?
Yeah, I mean, back down to sort of the, where are the use cases at, right?
Mm-hmm.
So as Teresa was saying earlier this morning, it's a year of experimentation, right? And some use cases have been put into production. They are internally facing. They're low risk. So there's still a lot of sandboxing going on in terms of how do the leading banks, particularly because they're well set up to do this, think about moving more use cases into production and into higher risk areas. And how do you make sure that you get your cycle time or your time to production down as much as possible? Everyone's aiming for sort of a below 90-day cycle production, time to production time. So are we able to achieve that when we move into higher risk use cases? So that's going to be top of mind for most of the banks going into next year. So as we see use cases moving into production of low risk and high risk mix, then it's also going to start to hit the bottom line. We're going to see cost income ratios improve. We're going to see it start hitting the bottom line of the banks, maybe not completely fully in 2025, but certainly through in 2026. So that's sort of the leading banks will be definitely on that road. And then you've got the banks that are moving quickly, and the ones that entered the top 10 list, for example, this year, really doubling down, trying to catch up to the capabilities of the leading banks, JP Morgan and Capital One, for example. And so going to be putting that, the same emphasis on getting these use cases with that mix of low and high risk into production. And then I think there's going to be an enormous amount of pressure from the banks lower down in the index, from shareholders, from boards saying, what's your AI program? What have you got in place? What is the strategy? Are you spending more money? Are you, what's the talent strategy? It takes, as we were talking about before, if you don't start to think about that, it's going to be harder and harder to attract the talent. It's going to be harder and harder to train and to reorganize yourself internally.
I think quite amazingly, we haven't really talked much about Trump yet. One of the things that many people expect to see happen under Trump 2.0 is a change in capital requirements for banks, and perhaps a lighter regulatory touch that allows banks, smaller banks, and perhaps even larger banks as well, to consolidate. Will either of those things result in perhaps a change in the way that some of these institutions approach artificial intelligence, the investment in AI, and in the case of lower capital requirements, maybe free up resources to allow them to invest and become more competitive with the leaders?
Yeah, I mean, I think we're watching this. I mean, that consolidation and the freeing up of resources, again, comes down to the leadership of the banks. If they recognize that this is a big and important thing to resource up, and there is more resources, because it's often the question of a resource constraint, right, which is partially true. It's also a decision you make that this is important for the bank. But absolutely, it helps when you've got more resources freed up that can invest into, to the talent and to pulling all of the innovation levers that a bank can pull, and sort of getting, looking at your data infrastructure and your governance, that needs resources. So of course, with more resources, that could become a really positive thing for some banks here in the States.
I'm super mindful about sticking to time, and we're running out of it, but I do have to ask before we finish, what is next for Evident? What will we be talking about next year that we haven't talked about this year?
So firstly, on banking, we will be we'll obviously be refining the index. So refining the methodology, trying to keep up with where the best practice is emerging. We're launching a new benchmark called the Outcomes Benchmark that's really getting under the hood of where are banks deploying use cases, how are they measuring ROI, what are the critical enablers that are enabling them to get those use cases into production and delivering value. So we're launching that in January, so that's very exciting. And then we're also expanding, so we're going to be covering insurance for the first time and payment providers for the first time. So in a year, hopefully we'll have some really good, juicy data on that.
What about asset management? Is that in the future?
Yeah,
definitely.
I mean, we want to cover as many as we can. We're just trying to do it one by one.
All right, ladies and gentlemen, Annabelle and Alexandra.
Please welcome to the stage MasterCard's Chief Data Officer, Andrew Reiskind, Writer AI's Chief Strategy Officer, Kevin Chung, Capital One's Chief Scientist and Head of Enterprise AI, Prem Natarajan, U.S. Bank's Chief Product Officer for the Business Banking Segment, Shruti Patel, with moderator Caroline Daniel, partner of the Brunswick Group.
Good morning, everyone. I think this is a great panel. I'm a former journalist, and I think the word hype is something that is a common theme in the media around AI. And in fact, if you just look at the media every single day, CNN headline last week saying AI is hitting a wall just as the hype around it hits the stratosphere. MIT Tech Review has just launched its own AI hype monitor, an index summarizing everything you need to know and not know about the hype around AI. And Gartner has just done a report looking at its own hype cycle index for AI. So hype is everywhere in the sector, so I think it's great that we're going to be rooted in this panel in what's actually happening in reality. So I'm going to start with Prem. I think one thing you were just saying backstage is actually the hype is in not so much the necessarily the use cases, but actually the underhyped thing is which isn't focused on enough is how you get there. How do you actually get to the use cases? So let's kick off with that.
Yeah, Caroline and I were talking about how this is going to kick off, and I said the unhyped part is actually not the use cases, because the use cases are the ones that get the most hype. The unhyped part is what gets you ready to deploy any use case that you want. And that journey in my mind starts like a few years earlier. Where are you in terms of your tech stack? Where are you in terms of the readiness of your data, both in terms of the volumes of data and the quality of the data, the completeness of the data? Where are you in terms of your willingness to both pay for the talent and the culture that you have organizationally that allows that talent to want to come in and flourish and make the things that you want to make happen. And so just speaking to Capital One's history, I think one of the decisions, and this is way before I joined, to go all in on the cloud. Capital One is all in on a single public cloud, which is not as risky as it might sound, because every single public cloud is geographically resilient worldwide, and so you get all the geo-resilience that you want and all kinds of other things. But that also made us cloud natives in terms of our development stack. And once you're cloud native and all of your data, we have no data centers. All of our data is on the cloud. It's right next to the most massive repository of compute there is in the world. And so you're able to exercise that compute more efficiently. So then that leaves you with the talent thing. And Capital One's history of like having invested in AI ML over time, and then we kind of bolstered it with bringing in deep learning expertise and Gen AI expertise, et cetera, to build it in. On the use cases side, if I may, a lot of the hype comes around what can't be done. And most of us would agree those things are probably too early to be done, whether it's the credit use cases, where there's so much regulatory compliance and also laws to be complied with, et cetera. But there are just so many other use cases in people's everyday lives, the kinds of reports people have to generate, or the kinds of even fraud detection, et cetera, where it's not necessarily Gen AI, but the same underlying deep learning technology, transformers, et cetera, that can leverage massive amounts of data that you have to deliver value to the customers. So I think the unhyped part is where a lot of the leverage and the payoffs is right now, both in terms of the investments you've made and in terms of what you're doing, focused on.
Shruti, the same question for you. I mean, do you want to start with the use cases in terms of what's unhyped or the tech stack behind them?
We can talk about the use cases because I think Prem touched upon a lot of what really needs to happen from a tech stack perspective before you're even ready. So I lead business banking at US Bank, and I will say most of my unhyped use cases are very non-glamorous. We operate at millions of customers, billions of money movement on a regular basis. And so we have to look at some of the complexity, the regulations, the inherent risk, and make sure that we have the right framework and usage control. And so, some of the very simple things we're looking at, because banks constantly get judged on their efficiency ratios. And we need to be very capital efficient. And so there are some really capital intensive operations. Think about customer support, think about fraud, real-time AML, fraud detection. Think about credit underwriting. We want to do it at a faster scale, at a higher frequency, higher accuracy, and these are also very human-centric, human-heavy businesses. And so we are very much focused on a bunch of just looking at solving very core process pain points. And these are not necessarily pain points as much as this is how do you do it better, improve the customer experience at a much larger or greater speed, but with more accuracy, and then in turn continue to drive bottom line efficiency. We have a merchant acquiring solution, and a lot of our small businesses actually use our point of sale. And we realize that for small businesses, point of sale solutions sometimes can be very daunting because they're looking at these softwares and they're trying to figure out how do they actually think about inventory management, email marketing. And so even releasing as simple as a smart assistant to help them with, hey, think about invoicing, or go here and click on this button and we can generate a CRM report for you. So those are some of the very unhyped use cases we're looking at from a bank perspective.
Andrew, when we spoke last week, I think the question you most wanted to be asked was what are some of the coolest and most innovative AI use cases in banking that you're seeing at the moment? So I'm going to kick that over to you.
Sure. So I would say a lot of the use cases are being hyped, right? We hear a lot about customer service. I mean, we launched one of those 2 weeks ago or so. We have a tool in retail. Those are the things that are getting the press releases. But I would say it is very much worthwhile to talk about the things that aren't getting the press releases, because actually Teresa, in her conversation, started talking about that. So if anybody's had the experience of walking halfway through a meeting and being able to ask the chatbot, because the chatbot actually offers it during our meetings, hey, do you want a summary of what's gone on in this meeting up till now? OMG, it is the greatest experience. I would actually suggest all of you experience it. It may actually get us into really bad behaviors of walking halfway into meetings, because now you can just rely on the chatbot to give you the summary. So I would just say that is an easy example of where those unhyped use cases are that we are experiencing as we are using it. Because as Teresa had pointed out earlier, it is all about our using it, getting comfortable with it, that we're getting to see it. Because we're seeing it today that our employees have access to the tools now, and they're going forth and experimenting to see how it makes their lives easier. Yes, is it all unstructured? Yes. Is it production ready? No. But it's making their lives easier, it's making them happier, it's making them more effective. As Shruti just said, it's all about employee efficiency. Give them the tools, they will figure it out. They are smart people. Yes, they do need education, but they're all well motivated because they want to get rid of the boring stuff in their jobs. They want to do the exciting stuff. So that's the stuff I'd like to hype, is the stuff that makes our employees excited, that gets them energized to come to work, that they can focus on the important and exciting things, and not just worry about mundane tasks like, oh, I have to summarize the latest PowerPoint.
There's basically unhyped use cases, some of the boring use cases.
Yes.
Over to you, Kevin.
So I would say, like, I have a different lens on the whole ecosystem because we're a technology provider, and so we work with hundreds of enterprises and many in the financial institution industry. And so one thing that's been, everything that we see is unhyped and actually in production. So we run tens of thousands of in-production use cases, and some of the things that have been really astounding. So Teresa mentioned it, Andrew mentioned it, like things like summarization, right? Being able to write an email. Those are things that everybody's able to have access to and use. But there's so many innovative use cases that the customers are bringing to us, which is why I love partnering with the customers. Because for one, they might say, okay, great, I want to do this thing, it's going to make my life easier. But I had a bank that I was talking to in Southeast Asia that was like, look, I need to do supply chain financing. Right? I need to figure out how to do this for the hundreds of thousands of small businesses that reach out about understanding the vendors. How do I pay them? What happens if a vendor goes down and I need to figure out a replacement? How does that impact my business? They're all using AI to do that now, right? And so those are just some really interesting things that are happening now. And then there's other things where, a lot of this is just around actually getting the information out, right? So we've all talked about, like, news moves pretty fast. But sometimes it takes us a long time to write the content, to make sure it's approved. It goes through brand review, legal review. It's got to go through 10 different reviews. How can we augment that? And what's great about what AI is doing today is it actually can ingest all the knowledge of your organization and be able to allow you to process it. So something that takes 3 days can now be done in seconds. So a lot of these use cases are being driven by organizations. And what I love seeing is actually the customers are bringing to us what they want to see. And then we leverage the platform to do it. And so in my case, 100% of the use cases are all unhyped and they're all in production. So I like being on that side of the house, or less so on the experimental side.
Coming back to some of the practicalities we heard this morning about how far a lot of the value-adding AI use cases are actually from what I hate to call traditional AI. I think we need to come up with better framing for traditional AI than traditional AI, because it's not just traditional AI. Compare with the sort of generative AI applications. Perhaps you can both talk to that about where you're seeing the most value-adding examples.
Look, maybe the one unhyped part here, Caroline, is that AI, or statistical machine learning, we now call everything. It's interesting. I've gone through life in the AI world, where in the late 90s and early 2000s, we went out of our way to say we don't do AI, we do machine learning, because AI was considered like the kind of thing you did to fall into disrepute. And then, since then, there's been a whole revolution where everything is now AI. So I think if you look at there's a progression of techniques, right? Statistical machine learning, and then more complex versions of it, and then neural networks, and then deep learning, and things like that. And so on that continuum, AI and machine learning, most of the forward tech-leaning enterprises, whether it's in finance or elsewhere, have been leveraging all of this. It's present in our lives far more than we realize. The unhyped part is actually the last 10 years, perhaps, of how much AI and ML are actually part of our lives every single day. You can pick at random any experience that you have, and almost certainly there's some amount of machine learning or AI in today's parlance. For now, though, I think the unhyped parts are where you're working back from the end customer's needs. And in order to serve the customer well, whether they're your internal users or your external customers, your AI solutions have to be grounded in the data that represents their experiences. So what you're trying to improve are their experiences. And so unless your AI enterprise is able to leverage your proprietary data to create proprietary solutions that deliver value, this is the other part. You know, Kevin and Andrew were talking about the horizontal aspects of it, the software thing or the report writing stuff that might be horizontal things. But most of the business leverage will come from where you have your proprietary data that allows you to create AI, deliver solutions, make a difference to customers in their everyday lives now.
And Shruti, if you look at sort of use cases being deployed at the bank at the moment, which is adding the most value at the moment, what would they be?
I think real-time detection of fraud and AML continues to be very top of mind for us. You know, the second one I think is around product recommendation. So I think Andrew maybe touched on this. You know, all banks, all financial institutions have both physical distribution and they're omni-channel, but people still love going to the branches. That's why the top 10 banks continue to invest in more branches. And one of the things we are looking at is how do we drive banker efficiencies? Our bankers are in the branches. When small businesses come into one, when customers come into one, how do we make them really enabled to give them wealth advice, running their businesses, product recommendations, ensuring the quality of service is really good, right? And so you could do it through, obviously, the very non-traditional methods like enablement, education, awareness, but that only drives a certain level of efficiency till you reach or cap that human potential. But think about they're in front of a system and you have a product recommender tool, something like an assistant or a help desk, which is essentially telling them to ask 5 or 6 very relevant questions based on what you can then predict a good product recommendation for the customer. So we're looking both internally and externally. Anti-money laundering is very top of mind for all banks. You know, I was just reading something this morning by one of my favorite authors, and he said there are 2 things the banks are actually most worried about going into next year. It's AML, and second is the quality of credit risk. It's going to suffer as we go into this very volatile economy and environment. And so I'm sure those will surface as the top 2, but also thinking about just employee satisfaction, getting them to be more efficient, more productive, like banker tools, is very top of mind for us.
And Andrew, building on sort of that idea of different kind of tools, and one thing you've been looking at is conversational commerce, and actually having a good use case around generative AI in deployment.
Yeah, so we had launched a tool called Shopping Muse that leverages Gen AI, and it's actually a very nice contained use case because it is very much based upon a retailer's inventory. And so the outputs of the chatbot are going to either be text about a retailer's inventory or images of a retailer's inventory. And so that got us to the recommendation engines for products, Shruti, right? We're not the retailer, but we support the retailers enabling to do that. So that side of the equation, we are already trying to move forward pretty quickly. I would say, as many would acknowledge, though, there are going to be limitations right now relative to the safety and soundness of the chatbots to how broadly can you push it. But I think we're all in the stage of pushing the envelope there and seeing how we can get. So I've seen examples where, in beta phases, where you get your phone to scan your invoice or you scan your bill as a consumer, and the chatbot automatically figures out, okay, this is the bill, this is who I'm paying, and therefore now take it out of my demand deposit account, my checking account, and pay them on the date that the bill is due, right? All within the context of a chatbot window and enabling that. So I've seen that as a beta, and so personally, I think that, again, as a consumer, I think that is totally fantastic. I can't wait till that's really production ready. But a lot of this stuff is still early stages, right? This is where, how comfortable are we with them? Is it going to get it right? Like we've seen in many cases, right, these ACH payment tools, I'll just label it that way instead of naming names, have been called on the hill for the fraud that has been enabled through them. And so safety and security still has to come first as we're doing this. But we also want to make that really exciting consumer experience. So we are looking at trying to enable those kinds of exciting consumer experiences.
What are banks not paying enough attention to, Andrew, in terms of the unhyped use cases?
I would say, listening to Teresa, they are being much more mindful, right? Because as financial institutions, all of us, our trade currency really is trust, right? As opposed to, if you look at a lot of other industries, those industries are pushing the envelope a lot faster because they're less worried about trust, right? If the chatbot goes sideways for one of them, it's not as a big of an issue as, if it starts pulling money out of my checking account, yeah, there might be a regulatory complaint coming as a result of that. But that's not going to be the case, well, if it gives me wrong directions of how to get to a store. So I would just say, I don't know that the banks aren't thinking enough. It's just they're coming across as more cautious. But that caution is well-deserved, right, in our industry because of that trust issue.
Kevin, again, you're sort of slightly outside the sector. What are you thinking that the banks aren't paying enough attention to?
I mean, I would honestly say that the banks are some of the most innovative industry companies that I've talked to around AI, which I was actually surprised to me because when I came in, looked at regulated industries, I was like, I don't think the financial institutions want to do this, and it was the exact opposite. So there's a lot that's being done. What I would say is it's probably, and as being the provider, they need to do more. They need to do more faster. I think we need to do hundreds to thousands of augmented AI workflows, right? And so, having seen a number of different industry technology trends, I was, there when we were doing digital payments before people were actually paying with their phones. I was working on cloud storage before people were putting things in the cloud, and I was working on, digital whiteboards before people were actually doing anything. Everything was manual. So one of the things that I've noticed is that there was a lot of hesitation about 18 months ago, 2 years ago around adoption, and so now it's completely flipped. Everybody's like, we got to do this. My only advice to the banks are do it faster, do more of it, because right now, all the conversation is less about, am I going to be behind? You're at a competitive advantage if you're not doing this, because almost every customer I talk to is like, we want to do this thing. Well, there's already about 4 or 5 of your competitors that are doing the same thing. So from my lens of it is always like, do more, but that's obviously in my self-serving interest. But certainly, there are certainly things that are going to be huge game changers for productivity, for consumers, for the bankers, for everybody involved. So I think that's where we're at today, is just really how do we drive that ecosystem and do more of it.
When you say huge game changers for productivity, that's pretty compelling to this room.
Yeah.
What's a good example of that?
So there's some things that can be measurable and there's some things that aren't. So I'll tell you the ones that are highly measurable. I mean, Andrew and the team have been talking about this, which is there's all the productivity, right? So I always call it superpowers, right? Like we're trying to give our employees superpowers, right? So how do we give them superpowers to do more in their day? I'm using AI to do, 10 times more things than I used to. All the BS work that I don't want to do, I'm giving that to the AI, right? And so that's what we should be doing and building, sort of applications for that. But there are also things, I would say, there's clearly cost savings and other things you can find, but I think there are actually things that are, you can't even measurably put value on this. And one thing in particular that AI is great about doing is, particularly like companies who have large employee bases, imagine trying to manage people's communication, right? It's like, they don't speak like organizations, they're using the wrong terminology, they're getting us in trouble, legal trouble, because they're saying, I'm going to guarantee this, I'm going to commit this. So AI now can actually really help provide guardrails around that, right? So being able to provide, these are the things you can say, these are approved comms, and that now you don't actually have to go through 10 people to get things approved. The AI can actually help you do that. And we had one client who did this actually that was, I think they were saying this was sort of an immeasurable value to them, which is, a crisis happened, they needed to communicate with their customers right away. And every second that they weren't communicating, the customers were calling in, they were freaking out, and they were just like, we need to get approved comms out right away. Usually that process would take them like 3 days, they have to write it, they have to get it approved. They were able to do it in 15 minutes and then send it out, right? So the ability to do that is like, you can't even put a value on just the brand consistency, but on top of that, just being able to extract your message and to have like hundreds of thousands of people in your organization speaking the way you want them to speak around this is just invaluable.
I want to come to reality about how you think about what's happening now in the world in terms of analyzing use cases in the banks versus 18 months ago, and some of the changes in terms of what you're able to look at now, which is sort of deployed at scale in terms of regular use cases.
Caroline, before moving to that, I do want to address this thing about the purpose of AI and the productivity gain, because I think a focus on productivity misses the real transformation that's happening. It's not really just productivity or even its measurability like you were talking about. First, I think one of the noble aims of AI is to transfer the cognitive burden from the human to the system. And think about what it means to be in a regulated industry. it means that there are lots of processes which require a lot of attention to detail, which means a lot of cognitive burden on a large workforce, right? So if you can't harness the power of AI to transfer the cognitive burden from your workforce and from your customers to your system, you've kind of failed at your mission of harnessing the real power of AI. So that's the first thing. Second thing is the quality. Productivity is one thing, but it's not, humans are not just productivity limited. It's also quality limited. There are certain tasks, especially in terms of aggregating massive amounts of information, paying attention to all of the salient details in all of that massive amounts of information, producing reports that are complete. These are all inherently demanding tasks, right? AI can help improve all of that. So the quality of yours. Third, you can meet your customers where they are, when they are, in the way they want to be met, right? That's a customer service transformation, which is not just about saving the cost with which you can serve a customer, but massively improving the quality of the service that you're giving to the customer. So I'd say if you take a look at all of these and say, this is my framework. Now I want to go find where are the use cases that unlock maximum value for you. Then your focus shifts away from like the specific use cases to creating a platform strategy that allows your entire company to go find the use cases they all want to develop and deploy. So to me, the unhyped part of it is also the platformization investment that you have to make. Because if there is the notion that you're going to develop all of these use cases in a central way and deploy them out there, you've kind of missed the boat too, because you really have to create platforms. Second, if you've created platforms and people can create these applications, how do they test and benchmark these applications? If they can't test and benchmark these applications, there's no way for them to make sure that they're delivering value or that it's increasing value. Third, I think deployment is really the first step on the AI stairway to heaven, right? And so that's the first step. Most of the improvement comes post-deployment. How do you monitor? What are your observability practices? How can you instrument it so that you're measuring quality on an ongoing basis? How are you bringing back all of that data? It's okay to make mistakes. It's not okay to make the same mistake again and again. So are you learning from the mistakes that the AI makes? Because it will make mistakes. So to me, I think those are the things. On the use cases, customer servicing, of course, is a huge use case. Most of us are investing in it. Fraud is a huge use case. Software development, et cetera. And any analogs you have of software development, which is knowledge assistance for your workforce, for your developer workforce, for your big knowledge workforce, et cetera. All of these are use cases. But I really think the hype is the focus on the use cases and not on what's required to enable them to be practiced at scale.
But isn't it hard to actually assess that platform? You know, if you're trying to create a whole platform versus a use case, how do you actually get the right structural thinking in your organization to work out what's good? You know, it's quite easy to look at a use case and say, what's the outcome, what's the ROI? So where your thing is much more sophisticated about the multiple ways you should be thinking about.
If you look at a single use case, the long arc, and I know Shruti would want to jump in, so I'll just make a very quick point. I think the long arc of AI, unlocking the value of AI, bends towards centralization. If you keep taking the view of siloed development of use cases, you're also missing the point, right? Because all of these things are about a collective learning that keeps improving a lot of these processes at the same time. This is a multi-year journey. If you're trying to unlock value in 6 months, then you'll unlock a certain amount of value in 6 months, and then you'll find yourself capped, right? So I give it to you, Shruti, because we're running out of time, but there's much more to be said on this, yeah.
No, I think Prem hit on all of the right points. I don't think anything was missed. I would just say a couple of things, you know, to your earlier question, Caroline, which is around platform. I mean, you know, I agree you don't want to do the siloed use cases, and not everyone is at a journey on their data, their cloud, where suddenly they're going to build a platform, right? The sophisticated financial institutions are doing it. But I think there's something about customer journeys, and you know, you have to map out your customer journeys across your different segments, and particularly in banks, you have such diversified asset sets and such diversified segments that they all have very different needs. But I bet when you start looking at end-to-end customer journeys, there are certain use cases which just pop, which are actually segment-wide, and that's where the horizontal platformization comes in, right? You build a platform which is going to spit out product recommendation. And it doesn't matter who the customer is, it's agnostic because you have a limited set of products and you're trying to make sure that you're capping on that human potential, essentially. So I think customer journey mapping is really important, specifically for large-scale institutions, because otherwise it's very easy to get lost in siloed use cases, and the tech stack just doesn't support that, right? Like you have these huge monoliths, finally you're moving to cloud and you're working on a data strategy, and so that's why that horizontal platforms work. And I just want to touch upon one other thing, about deployment and scale, because I think Kevin brought it up. We need to do it faster. Yes, we definitely, need to do it faster. But there are also, outside of regulation, banks also have this other burden about social inclusion, social benefit, causing no harm, being fair, being transparent, explainability. These are some really high criteria to take into account, and that's where the constant iteration of your models come in, the constant iteration of your technology comes in. Because the last thing you want is a credit underwriting machine learning model breaking down and saying no to an entire segment of population because of how you built it based on proprietary data. And so I think a lot of that needs to be taken into consideration when you're deploying at scale. And that's, I think, one of the inherent risks in what the banks are battling with.
Last questions on your side. So Andrew, quick one for you is what's next in terms of the unhyped use cases of the future? And then I will have a final question, which I want to end on for Kevin.
I think what's next, I'm hopeful I will be surprised. I will put it that way, right? In the sense of the employees on a regular basis are creating new tools and new capabilities, right? So one of the areas of focus is using generative AI to actually support democratizing analytics and democratizing access to data. And I don't know what that's going to look like, right? In my worldview, I want to kill every dashboard that pre-exists, right? And instead just have a chatbot available to a business person to answer business questions, because that's really the point of it. But what does that look like, Carolyn? I don't know. I hope to be pleasantly surprised.
Just to put something completely different on the agenda,
Yeah.
Kevin, in terms of what's coming next from you guys, it's something I've never read about, which is self-evolved LLMs.
Yeah.
So just in the last 20 seconds
Yeah. We're always about pushing the envelope on innovation, right? Like the LLMs are not the end all be all, right? Like we prescribe to a full stack, which means like you have to have all the components working together. LLMs are just part of it. But the key thing about a self-evolving LLM is you think about all this money that's being poured into LLM and model training, right? But those only get updated over a certain period of time. It's only like the information and knowledge it has is up to a certain date and time. But now that we've developed a way for the model to actually continue to self-evolve and self-train. So what you can imagine is, as it's learning from what you're doing in an organization, the model itself can become more efficient, right? The efficiency then passes back to the end user and the customer, who's able to then produce use cases at faster scale, right? Lower cost. And so an example of that would be, as you're using it in like a financial institution, like understanding the trends of the market, right? Like understanding the real-time data of what's happening in the market, and the model itself is updating itself in real time. So you don't have to update the models every 3 months, every 6 months. It's actually in real time happening. So that's some of the fun stuff that we, in our playground, are messing around with. But ultimately, that's what's going to happen. Like at the end of the day, we're all here to build a business. We can't, build and work on models that are going to cost us more money than we're actually generating returns. And so our whole thing is around generating ROI, and we think the self-evolving models is going to be the future of models.
Great. Well, I'm not quite sure how to summarize that panel. I think we've jumped from crisis comms in 15 minutes rather than 3 days. The fact that use cases aren't the thing to be focusing on, it should be focusing on platforms. The death of dashboards, which I'm completely in tune with. And you've heard it here first, self-evolved LLMs, which will overtake the next generation of LLMs. So perhaps we'll have a panel on that next year. Yep. Those are the new use cases. So thank you very much to the panel. There is going to be coffee now in the 10-minute, 15-minute break. So feel free to go and grab some coffee. But in the meantime, please thank the panel.
Thank you all.
Great to hang out.
giving away their bikes and then changing the flow of things. Yep. There's our back of the house. Right beyond that bar complex. There's everything bagels, plain bagels, and there's cream cheese sites. Thank you.
Please take your seats. Our program will begin in 5 minutes. Please take your seats. Our program is about to begin.
Working now? Yes. Okay. All right, good. Hopefully that's a good place for it. Good to go, Daryl? Yeah, we're linked to it now. Is a place making for it? Center than it was. Right. Want to just go to stage and so you can see the clock?
Please take your seats. Our program is about to begin. Please take your seats. Our program is about to begin.
Please welcome to the stage PIMCO's CEO and Managing Director Manny Roman and Bloomberg New Economy's Editorial Director Eric Schatzker.
Just needed to wait till the walk-on music subsided there. Hi again, everybody. This is Manny Roman. Most of the places I find myself in with Manny, he needs no introduction. But given that this is largely an AI crowd, even though some of you come from banks and his firm might be one of your clients, I wanted to tell you a little bit about Manny. We are indeed fortunate for a number of reasons to have him here. He runs one of the most sophisticated and most successful asset management companies in the world, PIMCO, a giant in fixed income. He also happens to be just back from Hong Kong, and so he's fighting through his jet lag on our behalf. And lastly, Manny doesn't do a lot of these things, so we truly are fortunate to have you here, Manny. Thank you very much.
Especially about this one. So when Anastasia asked me to come, my first answer is there's about 100 people at PIMCO, 100 times more competent than me to talk about AI. And I always say, you have many CEOs who talk about ESG and AI in a very confident manner. And in my view, they always embarrass themselves because they barely understand the topic. So hopefully this will be confirmation bias, and I will be one of them. So bear with me.
We will eventually in this conversation talk about AI, but we'll start with something a little closer to your wheelhouse, which is a macro overview. And folks, I just wanted to say one other thing before Manny and I begin this conversation. Last year, at this very same event, the Evident AI Symposium, You people really impressed me with your questions, and so I'd like to carve out some room at the end of this session for some questions from the audience, so please keep them in mind. There is at least one runner with a microphone here, and what we'll do is I will point to you, the runner will come, and we'll wait until the microphone is in your hand before you start asking the question, so that everybody has the benefit of hearing not just the answer, but the question. Manny, we have to start with Trump 2.0. The United States, and perhaps the rest of the world, is entering a new economic era with the second Trump administration, but below that top line is what we might describe as a confusing mix of policy promises and potential initiatives. More tariffs and protectionism in general, all manner of tax cuts, an immigration clampdown and maybe deportations, deregulation, and a unilateralist and perhaps isolationist foreign policy. How do you make economic sense of all that?
All right. Let me just take a step back. So 2020, COVID, and we make the decision that in a financial crisis, the government was too slow to give a lot of money very quickly. So what do? We have not one, but two very big package,
yes,
which after the fact turned out to be too big. And what does it do? Well, it helps people, that's good. It creates debt, that's not so good. And then it creates unexpected inflation at a speed we hadn't seen in quite a while. It's literally that simple. And when you look at the US, you sort of ask yourself constantly, do we have a scenario of American exceptionalism? The US economy is just so much better than anyone else, or we just spend much more money than any other country, hence why the economy is doing better, and it's a lag effect, and that's what's happening. Comes the election. So the Fed has started to lower rates, and what you have is you have the near certainty of tariff coming pretty soon. And we have looked at every possible paper on tariff, and tariff do two things. One, they create inflation, and then they lower labor productivity. And so what you do with the revenue is an interesting question. If you get $400 billion in revenue and you cut the debt, that's probably good. If you get the $400 billion and in addition you have a tax cut, you know exactly what's going to happen. It's going to create a significant amount of inflation. And remember, you have two things. You have realized inflation that we can touch every single day, and then you have inflation expectation, and when they get out of whack, then they're very hard to bring back down to earth. So that's sort of the framework that and the tension that exists. There's only so much you can do without starting inflation again. It is easy to stimulate the economy. To stimulate the economy without inflation is much harder.
Where would you say is the most potential upside economically in what you've heard so far from the president-elect and maybe some of the people around him?
So, deregulation, and the fact that there is a tension between public goods and the ability to innovate. I think some would say that the role of the FCC and the role of the anti-merger view that has prevailed has not been conducive to shareholder value. You can agree or disagree about this view. You could say that it hasn't been great for oil and gas, and that the Trump administration will help. And then I think there's the uncontrollable truth that energy transition is a reality and that climate is a real problem. And irrespective of what you think of oil and gas, there's many other sources of energy that will need significant capex over time that needs to happen, whether it's solar, whether it's nuclear, whether it's wind, and so on and so forth. So all of these things are happening at the same time, but there needs to be an industrial policy. Building chips in America will take 10 years. It's a great idea, But the reality is to replace Taiwan is incredibly complicated, and you'll never get there in a short run. So there's that. I think the other constraint you have is you have a tight labor market. And you have a tight labor market because labor participation is at an all-time low, and immigration has helped, both of us being immigrants, if I may say, one way or the other. We've come to this labor market. You need people to come to this country because the age pyramid is, of course, not helping. And for that, you need to have a pro-immigration policy. And that's the tension. I think we have underappreciated the role of labor economics in understanding what's happening in the world. And the reality is you could make a perfectly valid argument that immigration is good for growth. People come and consume, and they pay taxes by consuming, and they actually fill part of the demand curve for labor.
Labor economics having an underappreciated role. I echo that point you just made because it's clear to me, based on what you say here and knowing what I know about you from the past and opportunities we've had to speak in the past, that you believe in academic research.
Very much
You
so.
believe
As
in
a
economic
failed,
theory.
As a failed academic, yeah. One of the many things I failed at.
This administration, incoming administration, seems to want to prove that the establishment is wrong, right? It's establishment versus heterodoxy. They want to prove that economic orthodoxy is wrong. Is that dangerous?
Well, I think the market are here to correct any belief you have, right? So I'd say two things. They're basically three potential choices for Secretary of the Treasury. They all come from the establishment. And I don't know who's going to get it, but the reality is they will do the right thing by the economy. The markets are very quick to react to policy changes. And I take this example of another emerging market, the UK, where I just couldn't resist, where you had the Liz Truss situation. And they try something, and the reaction to the market was so big, savage, that they had to change their mind within 2 days.
And she was promptly out as prime minister.
And she was promptly out, but the market can react very, very quickly. And in this regard, I do think, and that's the Stan Druckenmiller view of bond vigilante, that people will look at economic policy and judge it for what it is and believe it or not believe it. So the margin of maneuver that one has are actually smaller. I also think that, one of the cost efficiency or dodge or however you want to call it, that's great. It's much harder to do. So the majority in Congress, maybe a couple of seats for the Democrats. The margin you have to kind of make any significant cuts is much harder than we think it is.
I asked you about where the potential upside is. I think you answered my question already, the one I was about to ask about where the potential downside is. The potential downside would seem to be inflation.
Yes, the potential downside is you have a quick series of tariffs where the markets say that there's too much debt in the system, and that all of a sudden you see the back end of the curve rising, and then you reset inflation expectation. The Fed looks at this and say, our job is to fight inflation. The Fed needs to do a 180 and raise rates. It's not the central scenario, but it is possible. Now, what I'm saying is understood, I think, hopefully by most members of the new administration. And as they set their policy, I think they clearly understand the binding constraints of what they have to face.
Did we just lose Manny's mic? We did. Do we have a stick mic that I can give him? Talk again.
Hello? I didn't.
It's good? Fine.
All right.
So we might not have hardcore bond market watchers in the audience, but I'm sure that you pay passing attention to the where the 10-year yield is. Since the Fed started cutting rates, we have seen the 10-year yield, let's just say, has not followed rate cuts.
You're seeing a steepening.
Yes, a steepening. Now, the Fed may not have lost control yet of the long end of the curve, but
I don't think the Fed controlled the long end of the curve. I think the Fed has. I think that's one of the things that people sort of, the Fed controlled the first 18 months of the curve, and after that, the market.
It's the market.
It's the market.
So if you're the incoming Treasury Secretary, and we'll get to whom that person might be in a moment, and you're looking at the 10-year yield today at, roughly speaking, 440, at what point does that person need to start worrying? Is there an inflection point where that individual, he's going to be a guy, where that guy should think to himself, wow, we're crossing a Rubicon here, the market is beginning to freak out, and we need to start being really careful?
Well, I think the equation is reasonably simple, is how much tariff do I want to do? And I do think they're very serious about doing tariff. Tariff brings inflation, it brings revenue. What do I do with the revenue? Then there are all sorts of promises. I can't tell the one that the new administration will follow. Giving tax cuts to wealthy people is probably not the most conducive thing that one could do. And so you need to put all of the elements into the package, kind of look at where it brings you. And the fact that the deficit is unsustainable over the long run, and that at some point in time, the bill comes and you have to pay the debt. And it's interesting that we're already at a situation where the interest rate paid on the debt is the same than the defense budget.
Yes, greater, in fact.
Greater. If rates go up,
it just keeps climbing.
Keeps on climbing. So the margins of error are actually not that wide, and you can make a perfectly reasonable argument that the Trump administration will have less leeway than they wish they had because of the constraint and the initial condition.
Is there a yield at which you would say the bond vigilantes are back?
I think they're back. I think you have a series of people. I mean, look, you interview some of them on TV, and they have a view that the back end of the curve should go higher.
Manny, in the weeks leading up to November the 5th, a number of so-called Trump trades started to rip, right? The dollar soared, so did Bitcoin, Tesla, US stocks more broadly, treasuries weakened, credit spreads tightened, and of course on Polymarket, Trump's odds of winning went from about dead even, right, at the beginning of October to 60+% on election day. How did
the market... It's actually a very good series of tweets from Jason Furman about how good the prediction market is. And I would encourage everyone to kind of look at this. It is amazing how good Polymarket is.
Jason Furman, of course, former economic advisor
Harvard,
to President Obama.
It's interesting. Like, all of us were surprised by how widely President Trump won, but the prediction market has been quite good. And, it's sort of interesting. It's not what I would have expected.
How do you think it was that the markets saw so clearly the Trump victory that was eluding the pollsters and arguably so invisible to everybody else?
Anchoring biases of one way or the other. The fact that the way you build your sample, the way you conduct the experiment, the way you try to reach a decision has to be biased, because otherwise it doesn't make any sense. It's also possible that the way we sample voting intention is hopelessly flawed. I had a long discussion with my friend Niall Ferguson about the UK and Brexit, where we came to the conclusion that actually in sampling and voting intention, people will tell you what they thought you wanted to hear instead of their true intention of voting. But it's very hard, and clearly something is going very wrong. And I'm not exactly sure why, so I can only venture guesses. It's quite an interesting topic, and I have to say, it's a lot of humble pie for all of us in terms of the predictability of the win.
You have brought up who might become Treasury Secretary, at least the question. A friend of mine has been saying, and only half jokingly, that the amount of angst around the appointment of this Treasury Secretary is reminiscent of a banana republic. His point being that only in a desperately debt-ridden emerging market country is the finance minister this important. How important is this Treasury pick?
It's important, but you have actually pretty rational candidates. I mean, if you look at Polymarket and you look at the three most likely candidate, number one, Kevin Walsh, definitely part of the establishment. Number two, Mark Rowan, definitely part of the establishment. Scott Besson, slightly different, but also like all quite well versed in one side or the other of policy, and they're all reasonable. I mean, for the markets, they will all be reasonable choices.
So you don't have a preference, or you do?
I don't. I really don't. I really don't. I tend to think that policy matters more than human being, and that each and every single one of them within the constraint will have to put policy together which makes sense. And I think it's reasonable to judge them based on the policy and what they can manage to get done within the context.
Which other cabinet appointments matter most to you and to PIMCO?
Look, at the end of the day, I'll be quite honest, we don't make money on politics. And there's an enormous amount going on. I think the opportunity set is quite good. Providing that you have liquid capital markets, it's probably the most important thing. And there's a lot of uncertainty. Uncertainty, broadly speaking, is good for alpha. And so when you're a big active manager, you want that.
You like dispersion.
We like dispersion. But the political cycle is A, very hard to predict, and B, even harder to make money out of. It's not entirely true. Sometimes in emerging markets, you have this situation. But for the most part, it's not how we generate alpha. So although it's quite interesting, although we incredibly focus on, as long as the Fed is independent and the Fed does the right thing, you have very well-functioning markets. We think nothing's going to change with the Fed, and that in most scenario, politics matter less than they might. Now,
Scott,
of course, we'll react to if there's decision on tariff and all of these things. Of course, we'll react very much so.
Scott Bessent, one of the, as you've noted, one of the candidates to become Treasury Secretary, or perhaps chairman of the Council of Economic Advisors, has suggested that President Trump, President-elect Trump, of course, but he will be president on January the 20th, appoint a shadow Fed chairman to undermine Jay Powell. What do you think of that?
I think the economic research shows you that the whole reason for the independence of the central bank was to have an independent monetary policy, independent from political decision. And so trying to replace this on the face of 50 years of research doesn't look like such a great idea. And I think having different people giving different set of prediction and different message would become incredibly difficult.
And confusing.
I don't think this is the most realistic option, to be honest.
Manny, one of the greatest unknowns in economic forecasting, and something that could feasibly throw a wrench into President Trump's plans, is how transformative and disruptive an impact AI ends up having on everything from employment to national security. What is PIMCO's view on the timing, the extent, and the magnitude of that AI impact?
So it's very much transforming the way we do business, and it will significantly improve productivity and hopefully generate additional source of alpha for what we do. And I think it will transform a lot of what we do in terms of how we drive the business and how we interact with customer. And we sort of stumbled into OpenAI 3 or 4 years ago, and we just couldn't believe how good it was, and it was ChatGPT 2.0. And then we were pretty early adopter, and we have many different projects going on, both on the investment side and then on the sort of federation side in terms of optimizing what we do. And it's incredibly transformative. And you know, I was just talking to a CTO yesterday. Between the beginning of the year and now, in terms of efficiency of coding, so how much faster our IT department write code, it has been significantly better in 9 months. And I don't know whether people have this experience in the audience, but the reality is it's really transforming the way we do things, and there's many more things we can do with the same number of people. That in itself should, everything else being equal, be good for the labor market and loosen up the labor market, and over time, significantly increase productivity. The problem with my argument is the Robert Gordon argument. And Robert Gordon wrote a very big book and basically said this time it's different. And it's looking at various innovation cycles and say the market always overestimates the impact of radio, electricity, AI, and then you go back to a GDP of 2.0 or something like this in real terms. And that would be the counter argument. But the way it's transforming our business is fantastic.
Is it yet part of your investment process? Is AI generating investment ideas, trading opportunities?
It is a tool which helps us in terms of refining some investment decision we make. So maybe I can give you an example. So we're by far the biggest participant in securitized market, mortgages, all of these things. And we actually have every single mortgage in the US, and then everything about the borrower. So
you have that data.
We have that data. But that we also have is if we, for some of them where we own part of the originator, we have the conversation between the borrower and the service provider. And so you can do semantic analysis in addition of having an enormous data set in terms of what's really happening in the mortgage market and where is the credit crunch, whether people pay first their mortgage or then their auto loan or then their credit card, and kind of have incredible granular detail about the labor market, the region. Are people more likely to prepay in Florida than they are in Texas, and so on and so forth? And we have that for 20 years. Now, to kind of match together data, text, potentially picture, you need a deep learning tree, and that's what we do.
That's where AI plays a role.
That's right. So that's one example of something we do, which hopefully will make us better in terms of buying the right pool of mortgages and understanding the risk behind it. It's basically crunching data. If you wanted to be critical, you could say, listen, machine learning could get you a not so different result, and I would say yes, of course. But it is really exciting. And as all manager, data is key. So the more data we have, the more data that other people don't have, the more money we make. And the one thing which we have, for example, a very complicated sentiment analysis. Sentiment analysis is great. The problem is you need to orthogonalize the sentiment analysis to trend, right? Market is super, super fast in terms of reacting to information. Any trend following is going to catch this. So having a sentiment analysis which reproduces trend is absolutely useless. So you need to basically decompose what you already have versus what something new brings, and figure out whether it's adding anything or it's just noise, and so on and so forth. We use it in terms of credit research. I think Eric is Canadian, so I'm going to pick on Canada. we have 10,000 issuer in the US. We have 70 people who works in credit research. They read prospectus. Reading prospectus is not that much fun. So we can have the computer read it for them and actually sort of highlight the fact that Canadian company tend to not be very transparent about goodwill amortization, for example. And all of a sudden, instead of having an enormous amount of people getting very bored about reading prospectus, it sort of highlight company XYZ or company having potentially a problem and kicking that back out to the person covering the Canadian company.
I'm not going to spring to the defense of my obfuscatory compatriots, but I do want to take some questions from the audience. We don't have a ton of time. Who's got a question? Throw up your hand. We'll get you a mic. There's one in the back.
Hey, Manny.
Hi. Of course.
Your view on crypto next 20 years as an impact on or undermining fiat currencies, like how do you see crypto playing out in the next 10 to 20 years?
I'll just reiterate the question so that everybody can hear. Manny's view on crypto over the next 20 years, does it have the potential to undermine the fiat currency regime?
Well, you should invite Mike Novogratz here. You'll have a very different view from me. So we became partner together at Goldman, so we're friends. Look, I'm a Chicago guy. I don't understand crypto. And I'm sorry to hurt everyone in this audience who believe in crypto. I totally missed it. I totally missed it because it's not backed by anything. So I may as well think of crypto as stamps or as wine or as art, and that's fine. That's an asset class. But the idea of a pseudocurrency not backed by asset is beyond my understanding. Can I tell you a funny story? So I asked Gene Fama, who's the pope of efficient market, what makes him more pissed off? GameStop or crypto? And he said crypto because GameStop, it's a small penny stock. You have 2 shares of class. It makes no sense. Fine. It's a small anomaly in the large scale of things. Crypto, none of us really understand. And so, yes, in a world where you don't believe in any currency, can I see a world where, to some extent, it replaces gold? Absolutely. I can see that, and maybe that's the solution. But it's not the only one. And as a wine lover, I would say from an asset allocation, I may just like wine better, because at least if it goes south, I could drink it.
I'd love to squeeze maybe 2 more questions in before we have to wrap up. I see a raised hand at the back there.
Hey, testing. Sorry to have a similar question, but putting aside cryptocurrencies, what do you think of tokenization of financial assets, where there is a real world asset and you have a token or a representation on the blockchain that can be traded? What is your view on that?
So the tokenization is going to totally change how we settle trade and how it goes to the chain, and how, let's say we trade with Morgan Stanley and then it goes to middle office and then it goes to a back office and so on. That part is absolutely great. So we waste an enormous amount of time and money on an antiquated settlement system, the way we confirm loans, the way we, there's all this kind of, things that we do historically in the financial markets. I think tokenization will totally transform that. That's the part I understand, and that, without a doubt, I think you have many startups doing this, and the interesting opportunity, and will be big user of it. And so it will change the relationship between big asset manager and custodian. And no one talks about it because, talking about custodian is not that sexy. It doesn't draw conferences and so on, but it's a huge deal for us. And for people like us who trade a lot of different securities in more arcane side of the market, it really, really matters. And being more efficient gets us to be more competitive on price, lower price for customer, all good.
Manny meant no offense to any of the custodian banks represented here.
And
one more question, and let's take it from that side of the room because we've been focusing on this side of the room.
Considering all the geopolitical changes, natural catastrophes, and obviously the new
a trifecta inside inside DC. What dislocations in the markets do you see right now, at least in the short term, before the new administration comes in?
So banks need to create capital. So regional banks, the big opportunity for us is to buy cheap assets from banks. And the US has 5,000 banks. I think you can name maybe 50. And then there's 4,950 that you never heard of. And these banks have to face a commercial real estate cycle where there's $300 to $500 billion of losses coming, which tells you two things. One, people who are in real estate will need to borrow money and refinance the real estate purchase. And then banks will face losses, will need to do one or two things, either raise equity or sell assets. And so if I can get cheap portfolio of assets from bank and be able to essentially replace the banking system in one way or the other by buying asset, that's exactly what we're trying to do. That's a micro dislocation trade, which doesn't have anything to do with politics or anything like this. It's just a normal cycle. And we saw that, I'm old enough to remember, we saw that in 1991 with the S&L crisis. It wasn't mortgages, it was junk bond and things like this. But you know, banks go through crisis, and when banks need to shed assets, they do. And the reality is, it could solve itself in many different ways. I mean, you could also have merger of smaller banks and all of these things. We're not talking about the big banks. You know, JP Morgan is in great shape. They don't need us. But smaller banks do need us, and they sell all sorts of things. And it could be very liquid asset, it could be real estate, it could be first lien, it could be. So that's the opportunity for us, and you know, I'm incredibly focused on this.
Ladies and gentlemen, please join me in thanking Manny Roman.
Please welcome to the stage Wells Fargo CIO and Head of Digital Technology and Innovation, Chintan Mehta, Morgan Stanley's Head of Firm-Wide AI Product and Architecture Strategy, David Wu, Rogo CEO, Gabriel Stengel, EY's America's Banking and Capital Markets Leader, Sid Kozla, and our moderator, BMO Financial Group's Chief AI and Data Officer, Kristen Milchanowski.
Thank you all for joining us. Thank you, Evident, for having all of us. And it's really nice to be on the stage with friends and colleagues over the years. And so we are here to talk about the insights and the knowledge generation of where we are. And I thought before I kicked it off to talk about how we're doing that in banking at each of our respective institutions, that there's something just to level set on. One is that we are in wave one of generative AI, and that is where we are just doing insight generation. So we're pulling data together from various places, we're adding an LLM to it, and it's spitting out a net new piece of information. Not a net new piece of information, it's spitting out information that's been collected from what exists. Wave two, we believe, is going to be the knowledge content and the knowledge generation, which in and of itself has to still be defined, but it's more than just bringing in the collective existing bits of data. It's going to be really adding that extra bit of knowledge. And we're not quite there yet from a technological perspective, so we're still just dealing with that wave one insight generation. So when we just wanted to level set that for this conversation and for the audience, because that means a couple different things. Really, where's the value, right? So when we're thinking of generative AI and our use cases that we're all doing, currently those use cases, and if any of you are actually driving revenue for your firms, that's hitting the bottom line, please come talk to me. I'd love to know what that use case actually is in production. But as far as I can tell, none of us are there yet because we're not driving that extra part because wave 2 is not here yet, right, guys? So we are doing the efficiency plays that many of us have talked about today, and that helps, right? It helps with our teams. But I just wanted to kind of, let's start there. That way we can have like the real, honest dialogue about what we're doing and how it's driving results for our firms. So, what are those applications that are driving insights? And David, we talked about some of them last night, so maybe I can kick that over to you.
Yeah, in Morgan Stanley, what we wanted to do when we were thinking about AI is how do we deploy it to the folks that are really adjacent to the clients? And so we specifically started in wealth, going after our financial advisors because they own the relationship. They're focused on deepening trust. And we also most recently rolled out this capability to our investment banking analysts, to our sales and trading analysts, who are also adjacent to their corporate clients, with the belief that if you can just help your client-facing individuals just be more intelligent, get them access to outlooks on investment research, get them access to self-serve information, that not only speeds up their time for sure, the efficiency, but just from a client experience, it's better, right? So now what we've done in wealth is advisors have access to tools that uncover insights from 100,000 documents across research, across products, across procedures. Investment bankers have access to a very detailed level of research content as well, that they're now able to just self-serve, quickly get answers to their clients' questions. And kind of the favorite example I get that comes up all the time is advisors telling me in the past when I get a question around, hey, NVIDIA's earnings calls are happening tonight. What's our sentiment on that? In the past, it takes some work. It takes some work of finding, understanding, synthesizing, producing it back. And now people are able to your point, have that level 1 insight. They're able to actually literally give responses on the phone call, right? And the last thing I would just say around this is it's just learning, right? It's what we learned is that how our advisors and how our bankers engage with AI requires you to almost like retrain how you interact with information, right? So the last 30 years of search have gotten us into this keyword kind of experience. And so you have to almost, with AI, retrain them on moving away from keywords to questions.
Right. So David, before I run to Chintan to see where some of his first use cases are, David, one of the things that I really thought is powerful about where you started with your program and your use cases is that you basically took your highest valued assets, your wealth advisors, and said, let's make them better at what they do or make their life easier at what they do so they can keep adding value to the firm.
That's right, and deepening relationships. Because at the end of the day, I don't think what changes is the value of trust and the value of human connection.
That's great. That's really great.
Yep.
Chintan, talk to us about Wells Fargo. Where are you guys with your journey?
Yeah, so I think there are overlaps with everybody's story, some version of it, some way, form, or shape. So like we've had a customer-facing AI-based product out there in the market for about 1.5 years now called Fargo. It uses natural language processing. It uses LLMs to do agentic interactions. It is transactional. It allows you to do certain transactions. And then obviously there's this whole long tail of internal operational efficiency use cases built up on a common platform we call Tachyon that we have built over the last couple of years. The piece I was going to add to the original point that both David and you made was, I think there's almost like a Hawthorne effect at play, which is the fact that you're putting some experiences out there is generating new interactions which we didn't know about.
That's great.
So there is a version of knowledge creation happening there. It's more around how people are using it, how people get comfortable with this thing. Do they like it? Do they not like it? What parts of it do they like? And I think that is going to be very helpful and indicative for general adoption curves, because I think there's a component of obviously the technical capabilities, but then there's also the and what I mean by that is like, what can an LLM do? Does it do it effectively? Does it do reasoning well? Whatever those variations and those boundary conditions are, there is still a component of will people adopt it? And will they adopt it without sort of is it incremental or is it just exponential? And so I would say, yeah, so I think a lot of internal tools deployed. We have internal assistants being developed which cuts across every different function instead of building like different point solutions. And we'll see how all of these interactions actually make it easier for people and then also for consumers. So we shall see. But I think knowledge is getting created, but more as an interaction and the insight out of it.
Yeah, that's great. So, Sid, we talk about how this raw data can become actionable knowledge insights for our banks. What are some of those things that you've been seeing as you kind of work in and out of multiple financial institutions?
Sure. And look, maybe I'll take a step back and talk about, I know you've talked about the current use cases and how they're unlocking insights and the synthesis element of that, and then the predictive element of what knowledge could be created around, right, use cases around that. I actually think it's a maturation per use case as well, right? So if you think about raw data related to customer service, for example, right? Today it's much more focused on harvesting the conversations that are happening, going through scripts, trying to understand, product pricing improvement or client service improvement opportunities. The next layer of that predictive piece around that could, and we're seeing some of our clients starting to talk about that, is to actively be, obviously with the right disclosures, actively be listening on those calls with your agents, suggesting preemptive conversations around a certain product, tying it back to behavioral elements they're seeing through the conversation, and then linking it back to a revenue generation opportunity.
That's good. Yeah.
So I think it's both new use cases, but also the graduation of a use case into a much more predictive conversation around.
So it's the ensemble modeling of the results of these different use cases, and I see Chintan nodding his head too. And David, we were talking about that with Gabe at dinner last night, that the ensemble modeling is you get results from one model, and then suddenly you can bring these different models together to produce something that this is your.
Yeah, and I think it's almost like a graph of interactions, like in a visualization, which is like nobody lives their life in silos of different groups. Data doesn't have to live that way, but it's expensive to bring everything together, and there are data transformation exercises every company has where they're building oceans and lakes and stuff like that. But I think there is a graph component to it where if you actually do it very surgically and intelligently, you can build a much bigger, or a better, bigger is the wrong word, but a better understanding of how people use these things. And I think I agree with that. I think that's a very logical next step.
I would just add real quick, I think that goes to kind of your layer 2 point. And I think and I know Gabe's got a lot of views on this too, but how we bring in disparate data, I think is going to be ultimately one of the most powerful capabilities from AI. For example, in the wealth world, knowing your clients may have a particular desire, maybe they had a kid, maybe they want to understand what resources we have around 529s, maybe they have an investment and they want to understand what that means from a risk perspective, bring in the risk data, bring in the investment research data, the live market data, or even if they're a business owner, maybe they want to access the capital markets, they want to know who the investment banker is that could take them to an IPO eventually, right? Or provide a workplace solution. It's all these pieces that I think are inherent in an organization in silos, and certainly there's entitlements and walls, but I think if you take AI, you abstract it out of these silos and you abstract it out of these apps, you start to really do things that are just inherently hard for someone to do.
And so yeah, Gabe, but if you talk to us a little bit about how you've seen these use cases do just that with bringing in that disparate data, because everyone in this audience that works in a financial institution, we are all nothing but a bunch of different conglomerate, data centers and data warehouses and cloud environments and everything coming together into.
And I think it's to your point that knowledge drives productivity, but insights drive revenue. And so if you think about who are your highest leverage, highest earning employees, for Morgan Stanley, maybe it's advisors. For an independent bank, maybe it's their M&A advisors. How do you make them higher leverage to produce the insights that are actually actionable and drive revenue? And so for us, we see that for an M&A banker to be very smart, there's actually a huge amount of just raw knowledge creation that's not that insightful that has to take place first, right? Maybe you have to run a screen to see what financial sponsors are even interested in the asset you're taking to market before you can take that to the MD, and the MD can actually get smart and produce an insight for their client. And it's almost becoming hackneyed to talk about, but it's never been easier to take unstructured data and turn it into structured data. And the more classical ML techniques of, prediction, of signal processing, some of these insight generation techniques hinge on structured data. And so what we're seeing with Gen AI is the ability to first start to create that structured data out of unstructured, and then go back to these more anachronistic ML techniques to help drive revenue across the business.
I like that. That's a really important first step. And it's a good lesson learned, too, with the LLM world, is that you do have to take that data step in your infrastructure. And if you haven't done that yet, work with your architects and your engineers to take that step. It's a really important one.
Yeah. I'll make one point on that, though. I think do start in parallel. Like, don't wait for data cleanup to happen before you do AI.
Yes.
I think that is a movie that never ends. So
it's never going to be perfect.
You have to do both of those things at the same time, which is like sometimes you find a very high value use case, you work backwards. Like you go solve the problem and then build the solution. So.
Yeah, look, I can't agree more. I mean, progress is going to be more important than perfection in that topic. I'll take the other use case you talked about, David, around, let's say, capital markets research, right? That is the current use case, which is being exponentially used. But we're seeing early signs of taking, almost in a multi-agent way, what we're learning as synthesis from that use case into what the investment thesis longer term around certain portfolios may need to be. And that's much more predictive. That's much more on the revenue side than let's say, a capital market research type topic.
And I think the group is talking about agents. So, Sid, do you want to quickly define like how you view multi-agent frameworks?
Yeah. So the way I think, and very simply, right? I'm not a technologist, but for me, it's a very simple topic. If you're adding insight and synthesis to a certain topic through an agent, and you're having 6 of these disparate use cases, how do you connect all of that to bring that insight, that synthesis, into something that is incremental information beyond those silos? So for me, that's the simple business view to what that looks like.
And I do think that that's that wave too that is sort of ushering in, which will be fascinating. So the definitions in our space are so important, and we as a collective don't have standard definitions, so we don't all agree on what AGI is, for example, artificial general intelligence. We were even talking and laughing out in the green room about, what's the definition of knowledge in and of itself? So how are we going to define when an agent is smarter or not than a human? And an agent, you have call center agents, which are actually humans, and then you've got bot agents, which are bots, and then you've got these generative AI models that we're also trying to call agents as well. But as soon as we work through all the definitions as a community, we can write another book, I think. Are either of you exploring agents in the generative AI agents?
Yeah, well, we have some in production that we use today, again, in a very controlled environment. And I think it's important that since we started with the definition, agent is anything which is an agency, which means it has a very clearly bounded task. It can execute that task. There is oversight to it. So just that very loose definition, instead of getting into whether a swarm is an agent or whether a magnetic one is an agent or LangChain, doesn't matter. Any component which has a very clear agency, meaning it knows what to start and when to finish, and what the conditions for start and finish are, and there's some oversight to it, is agentic. And so we have some specific cases where we have done agentic deployments for doing data extraction, pre-processing, things like that, which are more cumbersome, require a lot of traditional heuristics, and those we have made agentic, and just so as a progression path. We'll learn a whole bunch, some of it is not going to work, but that's the whole point.
By the end of 2025, we have heard that there's going to be more artificial intelligence agents than there are humans in the world.
I buy that.
Yeah, we can take that.
I think it's one of those really exciting, high potential areas, but I think it's still a bit early if you wanted to do really complex things, right?
Fair.
I think if you look at kind of the natural trajectory, is first people want to find knowledge, and they probably want to connect that content to data. And the natural next steps, for example, you want to know the outlook in NVIDIA, then you want to know maybe the price target in NVIDIA, you want to know what their EPS was, right? The natural next step is, how do I invoke the tools? And that's not simple. It's not just like you can say, take an agent and learn how to use every tool. Every organization has some inherent, natively built local tools that the AI may never have seen before. Mm-hmm. And if you have, the analogy I'll give you is where kind of I see the state of it, and the fact we're close to Thanksgiving, is that these AI agents seem like they can do maybe one dish at a time, where you teach them to use one tool at a time. I think the promise is, can you get the agent to create the whole Thanksgiving feast, where it has to learn how to baste a turkey, has to learn how to cut, has to learn how to use the oven, right? And that requires a lot of coordination, collaboration, which is, it's not quite there yet, but this is moving so fast, I wouldn't be surprised by 2025, where you not only have many, maybe you don't even need that many agents. Maybe you get a few agents that can more intelligent, that can do these complex tasks. I think the other thing to just think about is data entitlements. Like security is going to be really important around agents. You're effectively giving credentials away to an agent to go and perform tasks for you. I think we just have to be thoughtful around what that means.
We definitely have to bring in ethics and responsibility into everything that we do, and it's sort of ingrained in, I know, all of our ethos. It's a foundational component. So look, the real value to this conversation is that connectivity of the applications to one another to be able to drive new engagement, to drive the new customer, to drive or the existing ones, and how do you take things off their plate so they can focus on the relationships they already have on their desk. But Gabe, you have some really interesting views from what you're doing, and Sid as well, on bringing all those into the context of one model. Do you want to?
Yeah, and I think what's really exciting about agents is that we are still figuring out the tasks they're actually good at, the tools they know how to use, the tools we have to teach them how to use, whether it's querying internal data with the right permissioning or creating outputs like PowerPoints or PDFs or even emails. And what's going to be really exciting is when they are actually proactive. And they can be proactive because they have enormous context windows. And they can say, hey, I know that Sid works here and he's interested in this client, and this is where they spoke before, and this is what they spoke about, and this is what I should probably prompt him to talk about next time, to remind him that he's meeting with David and David just had his first kid and he should congratulate him first. The hard part about all of that and getting the context is not deciding what to put in there, right? We have all the context of our prior relationships in our head, and we know when to surface it. And if you just dump all the context into one of these models, they're smart enough to know that. The hard part, to David's point, is the permissioning around what context to actually put in there. And if you're a banker at Morgan Stanley and you're meeting with Bob Iger at Disney, maybe you want to see all the context for Morgan Stanley, all the times they've spent with the board members, with the different folks on their BD team. You might not have access to all of that. You might not have access to all of that in the CRM or all these different relationships. And so how do you solve these plumbing problems to actually get the models the right context?
Yeah. I'll make one more point, an additional, we were talking about whether agents will take over everything in 2025 or will be proportionally bigger. I would say customers have their own proxies as agents. I think that is definitely going to happen. So instead of every human consuming an output of an AI, there will be a proxy, which is an AI, which will actually interact with those AIs. And I think it is needed for this to scale safely, because we won't be able to handle the cognitive load of the slop which comes at us, as well as value. Like the noise to actual value ratio is going to keep skewing bad. And so we'll need something to filter that.
And this is where the important conversation around big data comes to play, because big data doesn't necessarily mean better anymore. Yep. So, back when I was at Morgan building the big data environment in Hadoop Cloudera, that was a big deal, and that was a big deal for Wall Street. But now we're backing away from that. We're finding more is not better. So, Chintan, you were talking about backing into what you're trying to achieve, and then making sure you have the right data flows. And look, the precision, I think that's one thing that is often missed, is when you're trying for an outcome, what level of precision do you really actually need from these LLMs? Because you probably don't need 99% or even 100% for a lot of what you're doing. So you could save a lot of tokenization, you can save a lot of power and energy, and then you can save on perfection, because you don't need to have perfect data quality around that. Do anyone of you want to
Kristen,
opine
I think
on
the
that?
big data point is so interesting because formerly you had to create all these dashboards, all these analyses to actually deliver the insight based on all that raw data. And obviously we're talking more about structured data now. But I think to the point of how precise do you have to be on delivering context to these models, there's a reason that Chintan formerly was saying that they prefer Gemini and these longer context windows models, is because you don't need to be so precise on creating some of these different types of data sources. You don't need to be as precise on creating these sort of actionable BI dashboards. You can deliver raw data to models and have it synthesize more for you.
And I think it's so interesting also, just given where this
That's
topic
great.
is going. We haven't really talked about the need for more intelligence. Because I think what we're all experiencing is the current state of intelligence is so high that you can drive so many workflows out of that. Instead, I think what we've been talking about is piping, right? How do you find the right data set? How do you pipe them in with enough context that the AI can work around that? I think it's a particularly interesting topic because there's been a lot of buzz in the media lately. Have the AI scaling laws started to slow down, right? Not every 6 months it doubles in terms of intelligence. I think for all of us, I think the conversations we have, we feel like maybe that's not as big a concern for us now, right? Maybe the next 3 years are just getting the right context into the model.
I almost think there's going to be like a Darwinian theory around agents now, right?
Yeah.
Because the first sprint here is to be expanding really quickly into various use cases, almost like a controlled chaos way, right? And your point around not just multi-agents within an ecosystem, but multi-agents across ecosystem with your customer, that's going to get important. And then longer term, there's going to be that Darwinian view of how do we get the most insightful use cases and agents foundationally to make impact. So I think that's
going to be entertaining.
So I'm really proud of our BMO insurance team, where they're putting out into production soon this intelligent retrieval for insurance products, and it's just being able to do just that, so that the human doesn't have to go out and do this 2-hour task anymore. So it's, it is saving time, and that retrieval is interesting because then it is the basis and the foundation to usher in some of that intelligence. But you're right, it's an interesting dynamic between how you solve that challenge of permissioning even for all the different components.
And I think it unlocks huge opportunities. I mean, we all work at banks, and I think most banks have a one bank, one firm strategy, whereby the wealth, capital markets business can connect. And there's certainly walls around that, but does AI allow us to revisit some of these things and say, hey, we can actually really meaningfully, to Gabe's point, proactively suggest this is the banker you should talk to because your client just indicated that they're ready to, move to the next phase of their business's maturity, maybe IPO, right? So I think that's the entitlements, the security, how much of this do you want the AI to even be able to see versus where do you need to start to fine tune some very specific smaller models. I think the toolkit is so deep right now. It's going to be interesting how we all deploy which tool for these purposes, along with which data sets.
I think it goes back to the good old product management, like what is the product market fit? What is the value fit? Like you can get all carried away, but
you definitely can get carried away. So it's really, really important to make sure that we are like, what's the mission? What's the vision? What's the value? All of us in this room know that game, but I really have challenged the team recently on, we want to drive revenue. And right now, where we are, a lot of these use cases have been in the efficiency and expense reduction, which is important. But what we're finding is that we, as a culture of financial services, not one specific bank, we're not good at carrying through those efficiency plays all the way to the balance sheet yet. And until that maturity comes, what we're doing isn't going to be impacting one for one the EPS. I think the challenge that I'm putting out there is let's drive revenue. Let's figure out how we can use all these bright minds in the room and really get after the revenue targets, because it's a tough time out there right now, right? Yeah. We have 3 minutes left, and I'd love to open it up to the audience for questions, and we've got an eager one right here, so let's go.
Mm-hmm. Heard a lot about productivity.
I'll repeat the question. Go ahead.
Okay. Bottom line is, what sort of banker productivity do you expect in the bank in 5 years? So if by 1%, 5%, 10%, a lot of missing data for ROIs.
So do we expect Do we expect the productivity of a banker to increase by X percent? over 5 years? I'm going to let Gabe or Sid answer that question so the three of us bankers don't get in trouble.
No, for the average bank, so it's not about your bank.
For the average bank.
I was briefly an M&A analyst at Lazard, and I think that for an analyst at an independent bank like that, you're going to be at least twice as productive 5 years from now, at least it's not a higher multiple of that. It's harder to say for senior bankers where so much of it is relationship driven, so much of it is, the time and energy they put into their client relationships. But for junior bankers, I mean, you'll be a strong multiple of productivity of what they are now.
I also want to remind everyone, but I think this room would probably know, so this is usually the reminder I have to do for the non-tech audiences, but we've been doing AI for over 40 years, especially in capital markets. So 85% of all trade is leveraging AI today. So this isn't a net new era. So that productivity measure, it's going to be really interesting how we hit it.
Yeah, I also think, a bank isn't a bank is a bank. And I know your question was an average, but if you look at, let's say, an investment banking franchise, it'll probably be closer to what you said. We were talking about the fancy custodians in the last session. I mean, I think there you're going to get a lot more efficiency around that. I think 30, 40% is not out of the realm.
One more.
And then you'll see like a capital markets view to that.
Yeah. And to the point, Mike, I think you were asking, if you take a proxy of other industries where this has played out a little bit ahead of banking, so for example, material science, or if you compare it to some of the work which is happening in like video editing and things like that, they do see 30, 40% year-on-year improvement in the productivity. So not saying that it's exactly the same, but if that's any guide, then it would go like that.
Well, look, it is a great Thursday, any Thursday that I get to spend with Chintan, David, Gabe, and Sid, good friends and colleagues from the industry. Thank you all for your participation. Thanks for leaning into today's conversation. You are the leaders of where we're headed, and I really, really value you participating in driving where we're going next. Making sure we do it ethically, responsibly, with adding in a sprinkle of diversity, please, is going to be really, really important as we move forward into this next wave that's coming. And it's exponential growth that we're facing. So let's all get really, really good at innovating. We are asking you to stay here. We're not going to take a very long break, but if you should need to use the facilities, you can get up and do that. But we're going to roll straight into our next session. Thank you for your time and attention. Thank you, speakers.
Thank you.
Good job.
Please welcome to the stage Eurasia Group and G0 Media founder and president Ian Bremmer and Bloomberg's Eric Schatzker.
I know what you're thinking. Wow, do I have to suffer through this guy again? You do have to suffer through me again, but in exchange for suffering through me, you get Ian Bremmer. That is a good intro to you. Okay. Suffer through me in order to get you? I think it's fair trade. Ian, to those of you who know him by reputation or otherwise, recognize how much he has to contribute on so much of what we're talking about here today, specifically artificial intelligence, and even more specifically on what I would call the geopolitics of artificial intelligence. I would say, Ian, you're here to educate us on the geopolitics of AI, but before we get there, I think I need you at the very least to explain how Trump's victory is going to reshape geopolitics at a higher level. And I'm going to quote from a piece that Ian published just a few days ago in Project Syndicate. 2 quick quotes. The stakes are higher and the implications of an unpredictable America First foreign policy are much more far-reaching than they were in 2016. Extreme outcomes are much more likely. Second, Trump's return will usher in a period of heightened geopolitical volatility and uncertainty marked by a greater likelihood of both catastrophic breakdowns and improbable breakthroughs. Extreme outcomes, catastrophic breakdowns, improbable breakthroughs. What exactly, Ian, do you have in mind?
Well, last time when he was president, the geopolitical environment was much more stable. There were very few countries that really supported him ideologically. Now there are far more, and there will be more on stage, on global summit stages over the course of the coming year or two with new elections coming on. And also, Trump had a lot of people around him that were adults that were very independent from him from a policy perspective, and who leaders felt they could work with if they couldn't work directly with Trump. Those three things are different now, right? So there's much more incentive for countries to get Trump right fast in a meaningful way, to give him what he wants, to give him deals, but also there are far more things that he can break. Things that he can break, U.S.-China relationship in a much more dangerous environment today than it was back in 2016. Things he can fix, Russia-Ukraine, the war is going to be over in short order. There'll be a ceasefire. The question will be whether the Europeans stay together around that ceasefire or whether they fragment. And that matters not just geopolitically, but it matters for to what extent do we believe the EU will continue to be a regulatory superpower? Will the EU be aligned in being able to drive common policies on things like technology in 5 years the way they are right now? The response to Trump is a very big question. And the biggest point here, and the place where I personally disagree most with Trump geopolitically, by the way, which I don't think I've talked about before, is that almost any American leader that you would find today would argue that a strong EU is in the United States' interests because they have aligned policies and values, and they're a voice of stability in a global order that is increasingly fragmenting, with a lot of rogue actors like Russia and Iran, and with a major adversary like China. Like, you want a strong Europe. Trump fundamentally rejects that. Trump believes that a strong Europe is a competitor to the United States. He's not interested in aligned values. He doesn't accept those values himself anyway. He wants bilateral relationships with individual countries that are transactional, where he can get a better deal for the United States and where the U.S. is more powerful. So that is a very different worldview. And it puts massive pressure on the Europeans to either stay together or for individual European leaders to say, I'm going to cut my own deal with Trump. And I'd watch the Italians carefully on this. I'd watch the Germans carefully on this in the coming months.
So an end to the war in Ukraine might not be improbable, but it certainly would be a breakthrough.
It's a breakthrough, yeah.
And by the way, I heard someone whose name I can't mention because it was an off-the-record statement, but who has credibility in this world, let's say, that we're discussing right now, say that secretly the Europeans are dying for an end to the war in Ukraine.
Not all Europeans. The Poles aren't, the Balts aren't, the Nordics aren't, the French aren't, but the Romanians aren't. But there are lots of other Europeans that aren't on the front lines, and Macron, who sees himself as now the promoter of those on the front lines in opposition to Trump, very different from where he was at the beginning of the war when he was the one reaching out to Putin. Now it's the Germans reaching out to Putin and Macron saying you shouldn't have done that. So different place for Macron, and different place domestically for him too. But the non-frontline Europeans would like to see an end to this war. I think the more controversial thing to say, which I think is also true and which will be on the record for the purposes of this conversation, is that Zelensky needs to be pushed by Trump because he understands that he can't continue militarily the war that they are presently fighting. And yet for him to publicly say, oh, I'm prepared to accept this deal, is not politically credible internally. But if the Americans are saying, I will cut you off if you don't accept it, then what choice? Now, but that is not to say that Zelensky is going to be comfortable with or prepared to accept the actual terms that are being prescribed by Trump. And what Trump needs to do, even if he ends up giving Putin 60% of what he wants and only 40% or less to Zelensky, what Trump needs to do is ensure that the Europeans have been coordinated with and aligned with. And again, Trump's orientation is not to do that. So that's where you got to hope that people like Rubio and Waltz are willing and capable. And I have not yet seen that, but it's early days.
Ian, I don't want to cast you in the role of the doomsayer, but I did make reference to extreme outcomes and catastrophic breakdowns.
I started with the breakthrough.
Yeah, so we're
you
moving to the second part
moving
of
to the doom
question.
part. Okay,
Yes.
fine. Okay, fine.
Give it to us.
Doom part.
Yeah.
Yeah. Oh, you want the doom part now?
I think they do. I do, yes.
I don't know if they do. This seems like this is an AI group. They don't want doom. This is all utopianism, and AI is going to fix everything. Even climate change. Don't worry. AI will take care of it. Give us more energy now so that AI can fix. Right? That's it. No regulations. We're going to beat the Chinese. Techno supremacy. Right? AI will resolve all problems. Trust us. We're here to help. So okay, that's not what you want. Doom. I think that even though the Chinese are under a lot of economic pressure, the likelihood that they will offer a deal that will be accepted by the Trump administration is low. And I could easily see between the economic pressure tariff front, the technology front, chips, export controls, that constellation, biosecurity, and then Taiwan, that Trump doesn't care about. And if there were something bad to happen under Taiwan, over Taiwan, Trump individually is more likely to say, not my problem, than any other leader. That is not the view of anyone around him, except perhaps Tulsi Gabbard, who's not super relevant in those decisions. So, incoming Secretary of State Marco Rubio will be the first Secretary of State that's ever been sanctioned by the Chinese government, which, by the way, should have been resolved the day after he was appointed Secretary of State. And if you're Xi Jinping, you have the capacity to do that, which means Xi is not getting good information right now, because they haven't yet done it, and they don't have a plan to do it. Obama took care of this with Modi in a system that's much harder to move. So, that needs to happen. But I worry that U.S.-China relations, which are clearly, stability is very important from the global perspective, are set to get significantly worse in a Trump administration. And then more broadly, Trump has an even more strongly pro-Israel policy than Biden does, which is an outlier globally, has significantly undermined U.S. influence in the global south, especially in Southeast Asia. That will get much worse under Trump. So credibility of the United States to promote values that countries align with. Indonesia in the last year has completely flipped from strongly pro-U.S. to tilting pro-China because of Gaza. That will grow. Malaysia, Brunei, nobody cares, but same sort of thing. Lots of countries, and I won't mention it again. But global south, generally speaking, U.S. is losing a lot of global south because of that kind of thing. Trump's revealed, I know that, again, climate change, not something we're talking a lot about in this conversation, but you just had the COP29 in Baku. The Europeans were relevant, the Chinese were relevant, Americans not relevant. The U.S. is not going to be seen as part of the solution for the global south. That's a problem if you want to have influence over all those countries, right? So that's a place where the Americans will increasingly lose a lot of stake.
You've talked and written about the possibility of a Cold War with China.
Yeah.
Are we not, in some sense, already in a Cold War with China?
No, we're not. So it was interesting. Tony Blinken wrote that piece in Foreign Affairs about a month and a half ago, saying, defining North Korea, Iran, Russia, and China as this axis against the U.S., which I thought was irresponsible. It does not reflect the Biden administration policy, by the way, but he wrote it. Russia, Iran, and North Korea are chaos actors on the global stage that want to undermine the international order and would like the U.S. system to be destroyed. China is an adversary of the United States that needs the global order to function for their own economic and political stability. They're the largest creditor to the global south. So when countries in the global south fall apart, the Americans and the Chinese are fundamentally aligned in making sure that doesn't become a knock-on disaster, right, from a market perspective. Those things are pretty obvious. Now, it is true that there is no trust between the U.S. and China. It is true that the relationship is one of decline, but managed decline, at least for now, so incremental as opposed to falling off a cliff. That has been more well-managed in the last year since the Americans focused on it after the APEC summit in San Francisco, and since the Chinese have faced lots of economic damage, which means that they don't want any other crises. And you've seen them reach out to the Indians, the Japanese, the Europeans over the past few months as well in that regard. But even if the wheels fall off of that process between Trump and Xi Jinping, whose incoming administration does not have a set of meaningful relations with the Chinese as of now, and we'll see where that goes in the next couple of months, it is very hard to have a Cold War between two countries if nobody else wants to fight it. And nobody else wants to fight it. No one else wants to fight it. Not the Europeans, not the Japanese, not the South Koreans, not the Indians. They all want relations with both. And that is not only true in terms of broad trade. It's also true, for this crowd, in terms of technology. The Americans leading right now on AI, most countries want to work with the Americans. Kenya, the UAE, the Saudis, the Indonesians, the Indians, lots of countries, right? Post-carbon energy, the Chinese are the dominant technology holders. They're driving it at scale. So who do you want to work with if you're trying to build electric vehicles? Not the US, right? We don't have good electric vehicles. They're expensive, they're inefficient. And we're making them more so by putting 100% tariffs on the Chinese. But if you're in Mexico, you get out of Mexico City airport, first thing you see, big BYD billboards, right? So, I mean, we're living in a world where the two most important transformative economies for every sector, for every country, one controlled mostly by the Americans, one controlled mostly by the Chinese. That's not a Cold War. That's the exact opposite of Cold War, which might be the most positive thing I have to say to this audience today, because it's a structural constraint, right, on breaking globalization, which I think the U.S. and China should welcome. They don't. They actually think of it as a vulnerability, just in the way they think of like Taiwan interdependence as a vulnerability, and so they're trying to decouple. I think decoupling is bad when you have kids. Like if you're married and you hate each other, no kids, decoupling is fine, right? If you're married, have kids that you both love, hate each other, and the kids are like in development, decoupling is problematic, right? Then you want more interdependence. The US and the Chinese, we got kids everywhere, right? We got kids we don't even know about, kids we don't even recognize, right? I'm not sure how much sudden decoupling we want. We're gonna damage the children, is what I'm saying. And ultimately that does damage us. By the way, I've never used that metaphor before. I'm not sure I'll use it again. But we're testing this all out on you because we have Eric here. Yeah.
I am definitely not going with that metaphor.
Okay, good.
It might not be a Cold War, but there is definitely a battle for technological supremacy between the United States and China. This began with the Trump administration sanctioning Huawei and ZTE, and those restrictions were dramatically expanded under Biden. And now, as you may have seen, they're starting to bite. You know, Huawei and SMIC are hitting brick walls on technological development because they're stuck at 7-nanometer technology and TSMC is 2 or 3 generations ahead. What do you anticipate from Trump 2.0 on Chinese access to Western tech?
I assume it's continuity to tougher because ultimately this is an area that is core to U.S. economic growth. Industrial policy is something Trump is very comfortable with. And he has gotten a fair amount of money from technology players that are aligned with that. Now, of course, the question mark there is Elon, right? Elon was on the first phone call that Trump had with Zelensky. He was also on the first phone call Trump had with the CEO of Google, which, I mean, I know that we all think this is normal. I tell you, if the Indian Prime Minister coming in had his first phone call with Trump and had Adani on the line, we'd think it was a banana republic. So we should recognize, like, think everything that is unprecedented we normalize, but for a while, look at the U.S. from the perspective of how other countries look at it. I think this is the kleptocratic signals that we're giving are problematic. But in the case of China, it is very interesting to note if the first phone call between Trump and Xi will include Elon. Because if it does, I mean, he individually, Kissinger's dead, he is the one person that could be an interlocutor between Trump and Xi. And I know that he's interested, because when I was last in China, I had high-level officials saying, you know, Elon's been spending a lot of time here and is telling us if Trump wins, he's the guy that can help smooth those relations. Do you think that's true? I'm like, completely untested proposition. Have no idea, right? But it's an interesting proposition. Elon's perspective on China right? I mean, he's far more supportive of them than he is, let's say, the SEC, right? Low bar, but still, he's doing a lot of business there. Revealed preference is Elon would love to be the guy that says, I'm trying to make sure that we avoid World War III with the Chinese, not just with the Russians. That is not where anyone around Trump stands. So for him to do that, he's going to have to break a lot of eggs. Now, we don't know how much power Elon has, but he doesn't have enough power to make Howard Lutnick Treasury Secretary, right? Despite weighing in on that privately and publicly. And in fact, a whole bunch of Trump people ended up leaking about that. So if I was going to bet, I would say Elon doesn't get it done on China, even if he tries. And again, direction of play will be towards significantly tougher technology policy towards China under Trump administration.
What about domestic technology policy? What's that going to look like? And is Elon going to effectively be the captain of the ship there?
I mean, FCC appointment, right? I mean, implies certainly not agreement with everything that Elon does, but well disposed towards him, not well disposed towards big tech platforms. I mean, most of the money from the big tech platforms went to Harris and didn't go to Trump. I mean, if there's one thing that you should be able to guarantee under Trump is that if you're willing to pay for access, you will get transactional benefits from his administration. I don't think that's the way a democracy should run, but the U.S. has been running that way for a very long time, which is part of the reason why Trump won to begin with, was the reaction to that, right? I don't know. I tend to think that the most competent people around Trump in his new administration you will find on the economic and business side. I mean, I look at the appointees he's likely to make for Treasury. I look at Lighthizer on trade, who hasn't been given the post yet, but he'll do something there. I look at Lutnick. These are all people that are thought of as perfectly competent, could serve in any Republican administration, are pro-market, are pro-business. They're fine. They're fine. So do I think that they're going to blow up the goose that lays the golden eggs in the United States? I don't, actually, at the end of the day. I'd be really surprised.
What about big tech? I ask this question because the U.S. government can, by its very nature, be kind of schizophrenic, right? On the one hand, it wants to encourage the development of AI by the private sector, especially AI that adheres to safety and transparency standards to maintain American leadership in technology. At the same time, of course, it's investigating, prosecuting, and in the case of Google, trying to break up the very same companies it needs to achieve objective number one. Will that change under Trump? Might he and the people around him have a slightly more, call it, holistic view on the role that big tech plays in AI and maybe prioritize perhaps national security over consumer protection?
I wouldn't define the Trump administration's incoming policies as holistic. I think that's probably an overstatement.
It was a question, not an assertion.
But yeah, I know, and I'm saying no. But Lena Khan is also not, in my view, even though J.D. Vance has said occasional nice things about her, J.D. is not a shadow president, and if he ever tried to be, he'd be defenestrated, faster than he would be in Russia. So that's a very specific and technical joke there. But when I think overall, I would be surprised to see Google Chrome type actions originate under a Trump administration. I mean, their initial orientation is less regulation. It's ripping up the executive order on AI. It is for every 10 regs that we rip up, we can maybe create one new one. It's we want to reduce the power of independent bureaucrats to be able to enforce. We want corporates to act in a more unfettered way. We want reduced taxation. We want more productivity in the United States. So that I think will be the ideological orientation, with the occasional exception for individual CEOs and corporates that antagonize Trump in some way, or people that are close to Trump in some way. I think that the question will not be around policy. Because for Lena, it's not like she has an issue with Google.
No.
She has an issue with the orientation of some of these very powerful corporations in a way that Elizabeth Warren would, for example, on the banking side. I think it will be very personalized for Trump. And I think the bigger question, therefore, will be, to what extent are they weaponizing the DOJ, the IRS, the FBI? Will there be individual audits against people that either Trump or folks that have been empowered by Trump find to be enemies politically. And might that become a McCarthyism in the United States at its worst? I think they are not strategic enough and not competent enough to accomplish that. And there are also, I think that's the biggest, and when people ask me what are the guardrails against an unfettered Trump, the biggest guardrail is their own incapacity, right? Just like they were yelling the other day. I was in Washington. They were yelling at Republican senators, why can't you stop this Biden judge from being approved? And the reason was because there were 3 MAGA senators in Mar-a-Lago with Trump. It's like, well, if you don't have the competence to get your people to vote, then we can't help you, right? So, I mean, ultimately, the fact that Trump is not interested in governing, right, fundamentally not interested in governing, is not only a problem for U.S. governance, but it's also a constraint on breaking things. So I was having this discussion with someone here in the green room, and I think vandalism is a better term, right, than actually destruction. I think there's going to be a lot of vandalism. And it's going to make things, look unpleasant. And when you have a lot of vandalism, other people go and then break stuff, and there's more criminality. But you're not actually destroying as much structure as people expect.
Could you expand on that for a moment? What do you mean by vandalism?
What I mean by vandalism is that you're going to have, when you go after a couple of high-powered people because you don't like them, and because they've said something mean to you, you create behaviors of a larger group of powerful people to not criticize, to be more cautious, to be more careful. Like Jeff Bezos in the Washington Post. Like, he doesn't, I mean, look, I know he's not doing as well these days, and I mean, he needs every dollar he can get, but still, even still, I think that Bezos could have afforded allowing his paper to go ahead with an endorsement. But he decided that that was a risk he didn't want to take because, if Harris wins, which he preferred, pissing off Harris wasn't likely to cause any danger to him, but pissing off Trump could actually have a 10% impact on the trajectory of business. And since he spends every waking hour just focusing on how much money he's going to make, that's his value. That's what he wants to vote for. That's what he's going to promote. And the problem we have in the United States, we have a lot of people whose revealed preferences are that money and power are all they care about. All they care about. And if that's true, Trump will do very well with those people, right? And so a little bit of vandalism, when you have a whole bunch of people that don't really care about the vandalism, but really care about making sure that they squeeze every dollar, right? Even at the expense of structural capitalism working. Because they don't care about structural capital. They don't want free and fair competition. They want access to create monopolies. That's not capitalism. They don't want to be capitalists when they experience losses. They want those losses to be borne by taxpayers or children of taxpayers. That's not capitalism. We don't have a lot of capitalists in the US. We do in the startup community, right? We do among small entrepreneurs. We do in mom and pop shops. Best country in the world for that. But entrenched, large corporations with access to political power, that's not capitalism. That's broken down. And Trump understands that, and he is very well aligned to taking advantage of that. I think that will play in the tech space as well.
Let's go from vandalism back to AI for a moment. Ian, you sat on the UN high-level panel on artificial intelligence. You were the co-rapporteur, and as such, one of the principal shapers or authors of the report it produced on global governance of AI. With Trump coming into power and the United States in a leadership position on artificial intelligence, is an agreement on global governance of AI even possible?
No, of course not. But the idea that the United States will do all of the shaping of global governance, it's like saying, can you move on climate under Trump? The answer, of course, is no, and yet there's already so much that's happening that Trump can't stop it. And the AI space may be dominated by the Americans technologically for now, but there are going to be an awful lot of actors that will have a say in how they want to deploy it in their individual countries, for example, and what opportunities they want to create and what they're scared of. So in that regard, you need to at least be having one global conversation. It is good for us that even if we don't want to do anything to respond to climate change effectively for billions of people, that we all accept that climate change is happening at 1.4 degrees globally and 400 plus, bits of carbon per million in the world. It's good to know that. So if you want to govern AI, the first thing you need to do is have a global conversations equivalent of that. What is the state of play of opportunities and risks that come from AI as it is right now? Who will benefit the most? Who will not? Where do we think there are challenges? Where are there incredible opportunities? The first thing that you want to do with global governance is create a common global conversation around that. Because you can't fix anything if you're all rowing in different directions. Have the same conversation. Beyond that, I would say there are 3 different areas of global governance that we need. And they're very different. We don't have any of them right now. Not surprising, we're just starting. The first is that to the extent that people like Eric Schmidt are correct, that there are only 2 countries in the world that will matter in AI in the next 10 years, the US and China, then we need to have a series of AI arms control agreements between the Americans and the Chinese before things get dangerous, before we start worrying about really incorporating that into the national security firmament. We waited to have our first arms control agreements with the Soviets until after 1962, until after the Cuban Missile Crisis, when it became very obvious we needed it. It would be good if we started those conversations with the Chinese before an AI Cuban Missile Crisis. So that's the first thing. That needs to happen in the next administration. Is Trump capable of doing that? People around him would be. Sure, we'll see. And I think the Chinese, again, are oriented to have a conversation like that if there is a meaningful offer that's put on the table. Second, what if we're wrong about that? What if the future of AI is not a small number of state-oriented military, industrial, technological companies, but actually it's access to everybody? It's not just open source, but it's everyone is developing these incredibly powerful tools that can be structurally disruptive. Well, what if, in other words, it's not like the nuclear race? What if instead AI is actually much more like the marketplace? Well, then what we need is something like the Financial Stability Council. Then we need an AI Stability Council that is private and public sectors that can identify nascent structural threats to the operation of AI in every sector. For the markets or for biosecurity or for, sort of a breakout weapon, whatever it is, can identify it, can communicate it, and can actually respond to that threat. That's a very different kind of governance. And we need both, at least in nascent sense, because we don't yet know which direction it's heading. And then third is that almost all of the AI agreements that have been signed so far have been signed by all the G7 countries, but the majority of the Global South countries have been signatories of none of them. You don't want AI to be only something that the wealthy countries take advantage of. So we need to have the ability to deploy AI for the global sustainability goals, right? The targets. We need, we know that we have too much hunger. We don't have enough clean water. We know that we don't provide enough access to education. Why wouldn't we want to deploy AI to end the digital divide? Well, the way you do that is you create resources, you create funds to make that happen. And that is unlike climate funds, which are really about, paying for the damage that you already did. And let's face it, there are very few people that want to pay for damage done by their ancestors. This is about putting money in to create markets and opportunities for everyone in the future. And that's a win-win, if only you can make the companies and the governments that are doing it more strategic and far-sighted. So I would argue those are the 3 kinds of governance that you need on AI. We don't have any of them yet, but within 5 years, we should make meaningful progress towards all 3. And if we don't, we're going to break things that are unacceptable to be broken. So,
Ian, I think that's a terrific place on which to end our conversation. Ladies and gentlemen, please join me in thanking Ian Bremmer.
Please welcome to the stage Snorkel AI's co-founder and CEO, Alex Ratner, Commonwealth Bank of Australia's Chief Decision Scientist, Dan German, CIBC's Vice President of Advanced Analytics and AI, Özge Yeloglu, and our moderator, Brunswick Group's Caroline Daniel.
Hello again. So I've just been finding out in the green room that 2 of the panelists abandoned their PhDs to set up a startup, and one of them completed their PhDs. I don't know who wants to guess which is which. Do you want to put your hand up who actually completed their PhD?
I can promise that was a big disappointment to all of our venture backers. It's not the not the preferred pathway.
At least it shows you've all been experimental in your own careers in terms of what you've been doing. I thought what we'd love to start with is basically what needs to be in place to enable really great experimentation.
What needs to be in place? Good people. I'll say the right people in the right places with the right mindset, right? And definitely the infrastructure as well, right? The right infrastructure, right tooling, and especially in large enterprises like banks, also I will say a good executive sponsorship, right? Because you don't want to only experiment for the sake of experimentation, but you really want to make sure that whatever you're experimenting with sees the light of the day eventually.
I'm going to take the same question to you, Dan. Is this working?
Doesn't sound like it.
Same question to you, Dan.
Let's experiment. Does this work? Yes, it does. There we go. The power of experimentation live. I think there are so many things, but perhaps the most important and one of the most kind of difficult to really kind of measure or plan for is cultural. So I think about the sort of Commonwealth Bank, and thank you very much for having me, by the way, all the way from Australia. Short hop, not even 10,000 miles, mere 9,929, I think. But you know, at Combank, we've been deploying AI at scale for a very long time, and I think the most important factor in all of that has been understanding that in order to deliver results for your customers, you need to be able to experiment. You need to understand the impact that you're having. So being able to culturally have this idea at all levels within the organization that new technology that you're implementing can be very powerful, but it's important to understand what's the impact that you're having. Really, this is the most important thing about any organization that's trying to transform itself through AI. So I think the cultural aspect of the organization is probably the most important factor we've found.
So given how important, can anyone still hear me? Hopefully I'll get a new mic, Luke. Given how important culture is, can you just actually give some specifics on what you've done to actually enable that culture?
Sure. And so there are many different things, but one really great example. So we've got more than 2,000 machine learning models in production across many use cases. And you know, historically, that's been the preserve of experts in AI, machine learning engineers, data scientists, and so forth. And you know, it's quite a complicated thing to do, has been historically. We invested heavily in making sure that we could democratize AI using automated machine learning and empowering our people who are somewhat data literate, but not necessarily, you know, I don't have a PhD, as we've already established, but certainly people who don't have PhDs in advanced AI, but are data literate and want to learn. And we've invested in tooling that allows them to be able to develop machine learning models in areas where they are experts in the subject matter. And so a great example of this is, you know, we created at Commonwealth Bank something called Benefits Finder. In Australia, large numbers of government, state and federal rebates are available, but people don't always know how to access them and you know, what they're entitled to. So we created tooling that just allowed them to understand the things that they might be entitled to. And using this experimentation framework to know what was the impact, we generated $1.2 billion worth of value back to customers' pockets. And the team who were devising that capability used machine learning through the tooling that we've created in an experimentation framework to drive a 124% uplift in the number of customers engaging with the tool. And that's something that was only possible because we thought about having access to AI for everybody in the organization, not just the preserve of, you know, technical specialists.
And Alex, what's your some sort of key takeaways about what actually is the best thing to have in place to drive experimentation?
Well, I think it's working now. Okay, I don't know if I'll just talk louder. I don't think the. Sorry? I handed off.
Try this one.
There you go.
For the good of the group.
Is this working? There we go. Okay. Well, now I just got an awesome fashion accessory with this headset. It's great. So I think, I obviously want to plus one the comments about the importance of, culture. And I think one thing I want to pick out there is the cross-functional culture. I think one, this is kind of like a marriage counselor-esque statement, but one way to kind of tell that a project's going to fail. We work with 7 of the top 10 US banks who work across many different verticals. If we parachute into a new team, if there's not a good connect between the data science AI team and the subject matter experts, the SMEs, that project is very unlikely to succeed, either in terms of accuracy at kind of the AI level or in terms of business value, obviously, in terms of deployment. So I think that cultural, all the cultural aspects you mentioned, but I just wanted to double click on that. And then from a kind of technical perspective, I already got typecast here as the nerd since I was, a sucker enough to finish my PhD. I would say it's all about evaluation and kind of, making AI more, making AI development more driven, like, by tests. Test-driven development needs to come to AI. And the key to that is, well, it's bringing SMEs in the loop and it's getting, good data to evaluate against so you can know if you're moving in the right direction and if that direction is connected to something that's not just a higher number on an accuracy score, but also some business value. So start with the ROI, the business case, back that into one or more metrics, the finer grain the better, that you can actually measure against, and then actually measure your efforts against that. That sounds kind of basic, but especially in the Gen AI world, a lot of stuff is done via, bless you, what are I think technically called vibe checks, and kind of deploy an app and see if some people think it looks like a cool demo, versus actual quantitative metrics that are connected to those business kind of ROI indicators. So I think that set up good evals. Shameless plug for what we do there, which is help label, curate the data to power those evals, and then actually be rigorous about evaluating against those. When you have that set up, then you can go wild, especially with today's technology foundations in terms of experimentation.
And how do you think about the structure in place to actually get really great experimentation? Are you very ROI driven? Is there a matrix in terms of how you assess all the multiple projects? And how is it getting more hard when actually you've got so many people across the organization now wanting to do experiments? And how do you prioritize the sort of different politics within an organization of who wants to have a sort of cool experiment happening in their division?
That's a great question. So it's the hype definitely increased, right? So there's definitely more demand. But even before the demand at CIBC, it was never AI for the sake of AI, but it was always about the value and what's the value that we're generating through this technology. And a few years back, we actually put together a couple of tools, and one of them is our business opportunity assessment tool, and another one is an AI value calculator. And through these processes, we first look at the opportunity. What is the business opportunity that we will create while solving this problem, right? And then our business partners bring us the problem to the AI teams, and then we assess the opportunity with them. We ask multiple questions during this assessment. And some of these questions are like, what's the potential value? And value doesn't always have to be revenue generation, but is it cost reduction, loss avoidance, loss reduction, any kind of value that we would generate for our bank? Is there an executive sponsorship for the project? Because we know when there's an executive sponsorship, there's always a better path to deployment and production and getting these tools in the hands of our end users. And many other questions that way, right? And then first we assess the opportunity, and if the opportunity is good enough, then we start working on it. And then we thoroughly assess the value as well, right? We built a calculator to figure out how are we going to create or assess the value.
What does the AI value calculator actually look like? Is it fiendishly complicated?
It is an Excel sheet, I'll tell you that. It is very much of an Excel sheet with multiple components that we take a look at it inside in it. But eventually, and frankly, the challenge with the value, yes, we can always say we're going to generate this much value upfront or during the process, but measuring and tracking that value is I would say, one of the current challenges that we all have.
Dan, do you have some kind of very clever AI calculator to assess what you're doing and deploying at the bank for experimentation? How do you sort of start?
I think one of the temptations in this field is to try to be intellectual about every single challenge that is presented to you. We're here talking about experimentation, and the scientific method is predicated on that and has been for at least since the 16th, 17th century, and empiricism goes back way beyond that. And so we think about measuring things carefully because it's important to do that. But actually, I think one of the things that is dramatically undervalued in industry is this idea that really everything boils down to people. So the people that are developing the capability and for what purpose, and more crucially than anything, the customers you are serving. And so in the example I gave previously about our benefits finder tool, the $1.2 billion of benefits and rebates that we reconnected customers with, it wasn't CBA's money, and there was no obvious direct imperative to do that. But if you think about the journey of AI maturity of our bank, which has been happening for a long time, you look at the performance of the bank over that time, by doing better and better things for customers, turns out to be incredibly powerful for us as an organization. And so when we think about experimentation, we're thinking very clearly about trying to improve customer experience and measuring the impact of that and knowing that we are having the types of positive customer experiences that we want. And thinking about human-centered AI is probably one of the key things for us, I think, in this regard.
So, Alex, what do you think people are getting wrong about experimentation? You obviously work with a lot of the banks, and you see it from the outside in. What do you think are teams which are not set up well for success? What are some of the lessons?
I guess I covered, I want to, Ozzy, what you said about, actually having a value case and having, some exec sponsorship. I mean, we think about that maybe from the other side of, where we land with accounts and how we actually vet, is this a real opportunity where we're going to lean in and do a POV, or is it just window shopping and experimentation? I think, some of our best partnerships have happened when both sides are thinking from that lens, right? It's very tempting to run lots of demos and science experiments, and even when you get that piece right of doing good empirical evaluations of the model performance, let's say, great, 99% accuracy, and then you go off a cliff of realizing that 99%, even if it was 99.9, won't actually connect to any value. So, kind of starting there and working backwards. I also definitely the point about not just not forgetting the people and not reducing everything to numbers, but obviously part of our job is to provide some of the tools for yielding those numbers. So starting with that value case, we don't, we're not driving that, but we're often assisting, and then connecting it to some kind of performance metrics. And if I double click on that, I think one area that people are getting wrong these days is just trying to find kind of push button shortcuts for getting those numbers, right? I've seen a lot of projects where a team is going to great lengths to kind of build a specialized AI application using their data and their expertise, but then they're just trying to use kind of an off-the-shelf model to kind of judge the accuracy. A little in the technical weeds, but it's kind of like saying we're going to go through great lengths to onboard some new grad, but then we're going to pull another random new grad off the street and have them grade their exam or their performance. So thinking about evaluation as also something that needs to be specialized to and with your SMEs in the loop. Number two, being fine-grained. Actually, we published a paper back in 2017 when we were back at Stanford with the Siri team. Siri's, I don't think, cool these days, but they were at the time the largest global, or really Gen AI application back then, chatbot. And most of their work was about, not improving towards some global metric of, accuracy, like everyone's competing about in the space these days, but rather kind of breaking down the specific types of queries, the slices of the data, we called it, where performance really mattered. So being specialized with the evaluation, being fine-grained with the evaluation, kind of with a product manager mindset of what are the actual capabilities that this Gen AI app has to do, and not just what's the one vanity metric score that obviously is, or that often is not even that important. I think those are kind of the mistakes. So it's number one is not you got to be connected to business value. you have to be, you have to have some kind of metric to develop against. But that metric can't just be a vanity number. It's got to actually be fine-grained and specialized relative to the actual outcomes you care about, which takes a lot of thought upfront. It's not just the data or the tooling, it's the product management and business thinking all coming together.
So let's look at sort of the macro world. Obviously, it's changing all the time, every single day. There are more and more LLMs who have different capabilities. Open source can do everything that LLMs could do a few years ago. How on earth do you keep up with the kind of capabilities out there when you're baking in early experimentation, and then also when you're moving it to deployment? Obviously, we heard this morning about the need to be sort of model agnostic in many ways, but that's often pretty hard. A lot of people have signed very large enterprise deals with the large LLMs, and they don't want to look stupid. So can you just unpack how you're starting to have to think differently about the kind of relationships, long-term agreements, contracts you're having with startups, because you don't want to get stuck with the fact that it's all going to be redundant very quickly?
Yeah. Look, it's a tough one, right? And it can get very expensive if you want to be truly model agnostic. But this whole experimentation and the pace of change, I always say, like, what we've been doing in the AI space and the builders of AI have been called data scientists, right? And I always say that there's the word science in it, right? And that's what we do, science. So we are very used to experimenting and trying out different models. It's just that pace has accelerated a little bit with the Gen AI these days. And yes, we all have to keep up with that. And yes, our data scientists are constantly looking at every new model that is being published every 6 weeks or so these days. But being model agnostic, in my opinion, is very much going back to monitoring piece, right? If you actually have a solid model monitoring environment that you can have, then the next thing is, like, when you know a model is not performing or you have something better, how easy it is to be able to take that one model out and bring in the new model in. And in my opinion, it is very much of an infrastructure and the right tooling in place to be able to do that. It's not easy, but it's very important.
Sorry about the rather weird ghost in the room. Dan, what about from your assessment of model agnostic, how do you deal with the pace of change as you're thinking about how to prioritize experiments?
Well, I mean, you absolutely need to, and we have very consciously at Commonwealth Bank for a long time been able to pick and choose what's the right tool for the right job. And I think that's incredibly important, more so now than ever. And so obviously we have our own proprietary Gen AI studio. We can bring the best of what's out there in the market. We can very rapidly experiment with those. We can build our own.
Can you tell us a bit about how that studio is working?
Sure, incredibly well. And so we have many use cases already in production, and I think this is an important marker of maturity. So I think as a bank, GPT-2 came out in 2019. We were using that. Turned out it was a bit rubbish for what we used it for, but we learned a lot. I got it to replicate one of my presentations, and it got it broadly acceptable 1 time in 100, but we knew this was coming. And so when ChatGPT was launched and people started to become more aware about this more broadly, I think our first use case of the published model was a couple of months later, customer facing. And so our ability to execute quickly through experimentation is sort of proven through the amount of different applications we've been able to deliver. But I think that, to expand a little bit on my point earlier about what I mean about this idea of measurement and science and experimentation, I think critically important. The question is, what are you measuring, right? And so I think this is what I mean by the sort of fixation, and it's understandable. We have lots of smart people in the bank, all the banks do, and doing very important work in academia with the partners, looking at the performance of the model and, how big is the context window and, what's the speed of response and what does it score on this benchmark versus this benchmark. All of those things are important, but the most important thing is what's the output that you're trying to drive. And this is what I mean about the importance of human-centered experimentation, because that's what delivers the outputs that you're trying to drive if you're very smart about the way that you're measuring impact, the impact that you're trying to have. And so Combank, there are a couple of use cases for Combank that are taught at Harvard Business School. There's one on behavioral science around the unbank-like experiences for transparency on credit cards. And there's another about more advanced AI through customer experience. And when you combine the two of those, this is what our human-centered AI team are doing, and it's fascinating. So we have this concept of a wind tunnel, much like in industry. If you're building a plane or a car, you want to test it in real life, but it's expensive, and you want to test it safely first. And we do this, and we see some fascinating things in the field of AI. So we created an experiment, and it's just to 1,000 Australian people. Brought into the survey, and we just create a kind of scenario, and it was around trust in a dispute process. So a lot of banks will have this kind of process where you dispute transactions. And what we discovered was that if the customer got a negative dispute reaction, so say we're not going to recognize that as a disputed transaction, you paid for something, you would see 10% reduction in trust if you said this was driven by AI. And if you said it was driven by AI with a human in the loop, there's about a 17% bump the other way back to trusting. But if the customer got a positive outcome, it made no difference at all whether the decision was made by AI or by human or human in the loop or anything, and was actually 117% more trusted. And the system, was abstract. There was actually no system. All we were testing was what would you feel if you got accepted or not accepted. And so that kind of experimentation allows us to think about the application of generative AI in particular, and how customers are going to respond to the way we frame messaging, what's the impact it's going to have on them, and that's what really drives value for us as an organization.
And Alex, sitting sort of in a different part of the tech stack, particularly on the data side, which you started as an afternoon project when it was very unsexy to be thinking about data and data labeling. I wonder if you can sort of go back to that moment in time in terms of understanding that actually what really mattered was something which was very unsexy and people aren't focusing on enough. Perhaps people don't think about data labeling as very experimental. Can you sort of just give a perspective of looking at the banks from a different perspective?
Yeah, I mean, I think it's less of a controversial point when it comes to folks that are actually in the field, especially in an industry like banking and FSI more broadly, where you have these stockpiles of very proprietary data and very proprietary knowledge and expertise about how to go about using that data and carrying out your business. The idea that would be valuable, that would be some of the most important non-commoditized delta in the space of AI, less controversial here than it is in some of the big labs and in academia, both now and a decade ago when we started. But from the that perspective, a lot of the shift over the last 10 years, I'd say, is, from our perspective, has been AI going from kind of being model and algorithm-centric to data-centric. It used to be that data was something that you didn't think about. We didn't teach anything about it. We started to change that at Stanford, UW, and some of the places that our folks have been at. But data was upstream janitorial work. I literally remember I think I just told you the story, but briefly, I'll repeat it quickly. One of my buddies who's now on the OpenAI 01 team, and OpenAI is one of the largest spenders on data labeling and human data collection, I think right after talent and GPUs, like most of the LLM labs. But back then was saying, are you sure you want to do work on data in an AI lab? You're never going to publish. Your career is going to kind of be in jeopardy. And well-meaning, he's still a very good friend, but that was kind of the prevailing attitude, was that AI and data science was all about tweaking the models and the algorithms, and the data was from you get the line of business team to send over a spreadsheet or download it from the internet on some data set. And we've kind of seen a complete 180 in terms of how models are actually developed, both at the labs, doing the pre-training, post-training for the kind of big generalist base models, open or closed source, and then in the enterprise of actually then specializing and evaluating those models. Very few teams actually go and try to pick up the toolkit that we used to teach of tweaking an algorithm or coming up with a new model architecture. Almost no one. This includes, we work with a lot of the big LLM developers, providing them with data. They have very few people proportionally working on coming up with new model architectures. I have colleagues on the academic side who do work there. It's a very exciting area of post-transformer model architectures. But by and large, whether it's an enterprise like a bank or an LLM developer, like a Meta, Google, et cetera, they're reaching for data as the toolkit. Data to evaluate, and then data to tune and potentially pre-train, but for enterprise purposes, mostly prompt, tune, develop. to fill the gaps. So this flip from data is janitorial and models and algorithms are what AI people do, to basically the opposite. Models and algorithms are black box. They are effectively commoditized as we get to steady state with the right modularity in place. And the data that you put in, the data that you evaluate, the data that you put in for tuning, for prompting, for in-context learning, et cetera, is the toolkit for developing AI. That's something that has kind of pretty unambiguously become the reality, but it's still not quite sunk in. Like, we still don't teach it in an AI course. We talk about, how to build a new model architecture that no one is ever going to do in practice. So it's still a shift, I'd say, we're undergoing in terms of the practice of AI and data science in the wild.
I'm just going to pick up on that. I'd be really interested from both of you about the perspective between how far your data scientist team want to work on kind of the latest stuff, and that's what helps them kind of get their next career job, versus actually working on maybe some of the traditional techniques which are actually you need to experiment in order to work out how to deploy them at scale. So how do you get that balance right between the kind of the new thing and actually experimentation around traditional models of which actually are more relevant now, may be cheaper to deploy because of the new capabilities?
It's an interesting one, right? Because I've seen kind of the both sides with our team members. Like, some are much more eager to just try the new things and then and test and experiment and get their hands dirty, whereas I've seen some just saying, well, it is what it is. Anyone can do the LLMs these days. It is just an intelligent app design in a way. You can make a call, API call. Is it really, data science? And then some are almost like sticking with the more traditional AI approaches, what they want to do. Look, in the end, and I can't say one way or another, because both sides have the right perspectives on their own. With the Gen AI, I absolutely think that there is the component of the intelligent app design, and the AI becomes less of a thing in the background. But it is important. It is important to the person who's doing it, who's leveraging it from the data scientist perspective, where they want to take their career to, and how they want to engage with the tools that they're working on every day. But as the leader or as the business owners, it is very much use case dependent, right? There is no one solution that fits them all. There are actually complex enough use cases that we have to leverage both techniques, right? You do your traditional AI up front, and now you're going to leverage Gen AI because it gives you so much power and efficiency in the end of the solution. So it is the combination, it is the right and good balance that we have to find.
Yeah, I love this question, and I'll tell you why. So I've been working at the Commonwealth Bank for about 8 years, and around about 5 years ago, we decided to consolidate our data science capability and rethink the way that we propagated that out throughout the organization. And at that point in time, the capability that we had within the teams, incredibly well credentialed, real experts, globally recognized. But the engagement in the level in the team, we measure it, and it was something like 40%. And for example, the female ratio in the teams was at 13%. And there was simply no impact from that team. It was just not culturally aligned to what we wanted to do, and therefore finding it very difficult to have an impact. Fast forward now, the engagement within our team still equally, in fact, I would argue now much, much stronger credentialed than we've ever had before. Incredibly capable experts, globally recognized experts. The engagement is somewhere around 90%. Female ratio in the team is about 40%. And the impact that we're having is phenomenal, and it's because of culture. My point again, is the most important thing in terms of driving, and the most undervalued thing in large organizations, is how much of the business is just all businesses are people businesses. And so you think about the work that we're doing right now in generative AI, a great example. We've got a fantastic use case in using generative AI to create response letters to customer complaints. So when you complain, it can be quite complex. So we like to get back to customers very quickly with that. We've understood your complaint. We understand it to be this. Is it sorry? Right, we'll get back to you. And we use generative AI, and it made it 100 times faster to do that. And so we're very excited about this because we think, well, this is going to provide a better customer outcome. And then we were using NVIDIA capability to fine-tune some models once we had this live to understand even more about how it was operating. And what we found was it was actually, in some times, the capability that was going live to customers, some of the evaluation metrics about readability and other things about the impact were lower than they had been in the previous iteration. And when we investigated, we discovered that the members of staff who are the humans in the loop, and they still, we're not automating the sending of the emails, we're just shortcutting a lot of the work for our staff to check the emails, write it, and send it. They were making, in some small instances, certain pockets of them were making big changes to the template, and actually, by the evaluation metrics, making the emails kind of less readable as per the sort of standardized tests. But what's really important is, what is the customer receiving on the end of it? Why are they making these changes? Are they like language differences that they know will resonate better for a customer because they deal with customers all the time? And our team are fascinated by this. So while they get to work with the latest state-of-the-art equipment, hardware, models, and they're very motivated to be at a place where we're driving these things into production, what really gives them fulfillment is the impact it has with customers. And I think that's key to having kind of, top experts in the field feeling as though they really are excited about working within an organization like a bank.
I'm sorry to stop your flow, because obviously you're in peak enthusiasm about what you can be doing with banking and AI, which is a great way to end. We've run out of time, but we haven't run out of sandwiches, so we're going to go and stop for lunch now, and please join me in thanking our panel.
you on.
Please take your seats. Our program is about to begin. Please take your seats. Our program will begin in 5 minutes. Please take your seats. Our program will begin in 5 minutes. Please take your seats. Our program is about to begin. Please take your seats. Our program is about to begin.
Please welcome to the stage Skybridge founder and managing partner Anthony Scaramucci and Bloomberg's Eric Schatzker.
That was like the voice of God. That was very impressive. Matt Gaetz has left the building. Paging Matt Gaetz. Is he here? Matt? No, I'm sorry. I'm sorry.
Anthony, good to see you.
Good to see you too, by the way. You know, I miss you, Eric.
Anthony, as many of you know, is extremely generous with his time, and so you may have seen him perhaps on television, perhaps on his own podcast in the days since the election. And Anthony, I've noticed that people tend to start the conversation with you in more or less the same place. They cast you in the role of, forgive me because I know it's going to come out sounding the wrong way, but as the loser or on the losing end of the election.
Losing end of the election, yes.
Because of your objections to and criticism of President-elect Trump.
Yes, yes.
But I want to start this off by looking at things through a different lens. The way I see it, in many respects, and I'm not talking about politically, I'm not talking about culturally, I'm not talking about emotionally, but you and your firm have made out pretty damn well in this election, haven't you?
Oh, you mean because of Bitcoin, you mean?
Well, yes.
For now, I mean, listen, you know, a lot of things have to go right, and the market is pricing a near perfect regulatory situation and a perfect Secretary of the Treasury and a perfect SEC commissioner, et cetera. So a lot of things have to go right. But yes, I mean, it's been a big move. But since we're just talking specifically right now about Bitcoin, I would maintain to the people in this room that Bitcoin is at the price that it should have been at in January of 2022. And just hear me out for a second. The cash ETF should have been approved January, February of 2022. It was blocked by Gary Gensler. Lawsuits ensued. The court ruled in favor of the industry. If you go to law school and take administrative law, there's a clause in administrative law that you can't be arbitrary or capricious with the administration of the law, and he clearly was doing that. So he did something to the industry that held back pricing and held back where we are today. So I think where we are today is just a reflection of where we should have been. Now, before we go to the next question, I will say this about Gary. He didn't do this on purpose, but he actually saved the industry because by blocking the Bitcoin cash or spot ETF, it exposed the weaknesses in the industry. It exposed FTX and Celsius and 3 Arrow, and we had this capitulation and collapse and deleveraging, which, you know, I mean, I was getting killed back then, as you know. Okay, you have very friendly journalists, I mean, that write about me when I'm getting my ass kicked, but anyway. And I stayed in those positions and obviously being rewarded now. But if Gary didn't do that, I think we would be living in a world of Sam Bankman-Fried. I don't think that fraud could have necessarily been exposed. So, you know, we do need regulation, and we do need propitious and mindful regulation. This could be my last public presentation until I'm deported, so I'm expecting people to be friendly on the way out of here. Okay? All right, we'll go ahead.
Matt Gaetz is not the only individual to have left the building. We also, to your point about Gary Gensler, learned today that he is stepping down as SEC chairman, and so we will have someone else as the Attorney General. We will have someone else as the chairman of the SEC. And we'll have many new people in many positions. How is, and Anthony made a crack about this outside, so I'm going to use, I had a different way of phrasing it, but I like yours, Anthony. How is The Apprentice White House Part 2 going to be different from The Apprentice White House Part 1?
Well, obviously the cliche is that the definition of insanity is you do the same thing over again and expect a different outcome, but there will be a different outcome, because you have to understand how Washington works. Okay, I got my 11-day PhD in Washington scumbaggery. Okay, so let me tell you how it's going to work, okay? They are ready for Trump, and they have shape-shifted and gotten into position. They were not ready for Trump season 1. They got caught off guard.
Who's they?
The establishment. This is garden variety Republicans that hate Trump, that when they get to a microphone like this, they say they love Trump. These are garden variety Democrats. These are the people of the establishment. They're shape-shifting right now to get ready for Trump and to get ready for any of the potential insanity that ensues. And so the walk around yesterday is a brilliant example of this, okay? And by the way, whatever you think of
this is the walk around
of Gates and Vance,
right?
Okay, and by the way, whatever you think of J.D. Vance, okay, I've got him up 25 IQ points from the election, and let me just explain to you why. Where has J.D. Vance been? This guy, the election was over, and this guy said, I'm getting out of Dodge. J.D., do you want to do CBS Morning News? I don't. Do you want to go on Meet the Press? I don't. He disappeared. We can't find him anywhere because he's gotten the memo. This is Donald Trump's show. There's one light on the stage. It's on Donald Trump. Get out of the way. Okay, he was in a near-death spiral because he went on Joe Rogan. Does everybody know that? You don't Bigfoot the master. The master went on Joe Rogan. 2 weeks later, you go on Joe Rogan. Very bad move. And here is J.D. Vance doing nothing other than what he's told. He's parading around the Senate with Matt Gaetz, and behind closed doors, they say, you're not getting confirmed. So if you want to embarrass the president and you want to go through the rigmarole and the show trial and you want to try to get a recess appointment, you can do that, but you're going to embarrass, you're going to damage the president on the way in, or you can withdraw. Those are your choices. And this morning or this afternoon, whatever time it was, he withdrew. And so Washington is ready for Donald Trump. And so I do predict a better outcome this time, more stability, because they're ready for him. And they're working in concert with each other now. Before, it was like, I'm going to team up with Trump because he's a Republican, and I'm going to do this, I'm going to do that. They're not doing that now.
I find this a fascinating point because in some ways, Anthony, it's contrarian. We know that Donald Trump wants to take down the establishment, the political establishment, the judicial establishment. And what you're saying to us is they won't be so vulnerable?
I'm saying to you that the immunological system of Washington and the behemoth known as the federal government is ready for Donald Trump this time. I'm saying to you that when outsiders go to Washington, so some people call Washington a swamp. It is not a swamp. It is a gold-plated hot tub, okay? And they sit in that hot tub, and they pass cigars, and they pass Dom Perignon champagne to each other, and they look at you and say, are you with us or you're not with us? If you're with us, here are the champagne flutes, get in the hot tub, let's go. And if you're not with us, we're going to hit you with a ray gun and knock you out of the town. Okay, there's 4 ways to get blasted out of Washington. You want to hear the 4 ways? Okay, way number 1 is they drop an Oppo bomb on you. Okay, so they get a USB, and there's 20 things that have happened to Eric Schatzker. He doesn't want you to know about them. There's 200 million things that have happened to me. You already know about them, but you don't know about Eric. But they drop them on him, and then they put him on the front page, and they embarrass him out of Washington. That's number 1. The second way is they slow down the security clearance. Okay, Eric is not one of us. He's not going to smoke the cigar in the hot tub. Don't give him the security clearance. Make something up. He stubbed his toe in the 2nd grade and upset somebody at the FBI, right? 3, let's find an asset that Eric's got to sell to come to Washington. and maybe it's his prize asset, and he doesn't want to sell it, but we're going to force him to sell it. Eric, you got to sell your thoroughbred horse to come to Washington. You know what? The horse is more important to me than Washington. And number 4 is a full-on frontal front stabbing. Eric, you're a horrific human being. You don't fit in Washington. You got to go. Number 4 never happens. Does everybody know that? They won't do that to you. They do the Washington 2-step, and they always hit you from the back while they're praising you from the front. So they'll literally talk to you. They'll pick your eyeball out with an ice pick. They'll drop it in a martini glass. You're bleeding at the table, and they're still talking to you. Like nothing happened. And by the way, that was actually a pretty good joke. You can laugh at that. I know you're like all AI people and shit, but you should laugh at something like that, okay? And that's how it works in Washington, okay? And so they're now ready for Trump. And so Trump wants to hit the establishment and all this other stuff. But you know what he really wants to do? He wants to get attention. He wants to hang out with Putin and his buddies, and he wants to play golf. And I think it's going to go better this time. I'm the contrarian on that for that reason. Now, why did he pick Gates? Somebody told me he's going with Dan Bongino. Does anybody in this room know who Dan Bongino is? You got to Google the guy. I mean, this guy's like a full-on podcast lunatic. Former Secret Service guy, kicked out of the Secret Service. Trump is saying he wants to put him in charge of the Secret Service. So he's going with loyalty and lunacy over competence if it's an area of the government that he thinks he needs to control. So he got hurt by the Department of Justice in the first year of his presidency. Jeff Sessions, special prosecutor. Let's go with Matt Gaetz, lunacy and loyalty. I'll be able to control him. DNI. These guys gave me a hard time. CIA, FBI, Russian collusion. They lied about the Hunter Biden laptop. Tulsi Gabbard. You see what he's doing? Pete Hegseth. I wanted Esper and Milley to bring the National Guard into Lafayette Park and shoot at American citizens. You know, not kill them, but let's shoot at their kneecaps. And Esper said, I can't do that. I will resign today if you want me to. He said, no. He said, what about you, General Milley? Will you do that? He said, no, I can't do that either. And so he said, it's in the middle of an election. I can't have both these guys leave. But he wants to put Milley on trial for treason, right? Which will never happen, by the way. Okay, but loyalty and lunacy to the areas that he feels he needs to control. The Treasury Department is not loyalty and lunacy because he actually needs the Treasury Department. If he wants to impose sanctions, implement tax policy, if he wants to do things, related to state and local income tax deduction, which I believe he will eliminate, he's got to get somebody bright and somebody competent in that role. And so that's why it's taking a while, because he's fishing Wall Street, he's fishing the community. He's dropping names. What do you think of Bill Hagerty? What do you think of this guy? What do you think of that guy? Howard Lutnick pissed him off, so now he's at Commerce. But the other guys are still in the running. I think it goes to Scott Bessent. That's my guess.
Not Mark Rowan.
I love Mark. I think he would be an incredibly talented person. I got to be careful who I say I like and don't like, because if I say I like somebody, it could get him in trouble. I got to be careful. So I love Mark. He's an incredibly talented guy. He would be a brilliant Secretary of the Treasury. He's got a very safe pair of hands. But when you look at Mark's career, it's an establishment career. And so he's not as conversant on tariffs as Bessent is. He's not as conversant on crypto as Bessent is. But he would be an incredibly gifted Secretary of the Treasury. And if he picks him, I will be surprised by that, because he doesn't meet the renegade criteria. You see what I mean? And he's not close enough to Trump. We had him in 2016, and he was being floated for a number of different cabinet positions. He wasn't ready to do it. And to be totally candid, Trump was ready to hire him in 2016. He wasn't ready to do it. I think he's ready to do it now. But the real question is does he fit the MAGA profile? And I don't think he does. That's my opinion. But Bessent is closer to Trump. He just wrote a op-ed in Fox Business on tariffs. And that's like right in the wheelhouse of Donald Trump.
Much of what we've been talking about thus far is and should be of interest to every American citizen or, like me, resident. And it is, frankly. But what about this room? You made reference to the fact that we're surrounded by a bunch of quote-unquote AI people. What do they need to know most about the incoming Trump administration? What should they expect this administration to do in terms of AI itself, governance, you know, tech policy, big tech, antitrust?
Well, I mean, I'll say three things, and then are we going to take questions from the audience or no? Because I'm curious of what they would
give
wanna
us an
know
indication.
about.
Are there people with questions?
But
Just
if
sort
you
of
have
wave your
questions,
hand.
because I don't know the audience, and so
I see a
I'm
couple
gonna-
of
I'm gonna-
nods.
I'm gonna
I need to
talk-
see
I'm gonna
hands.
talk
Do we have
generically
hands? We have
about
hands.
AI.
All right, we'll do some
I'll
questions.
talk generically about AI, but number one, I would say to this audience, I don't know what Elon Musk's full position is on AI. He sometimes talks apocalyptically about AI, and the other side of his mouth, he's building XAI at an incredibly fast rate. I guess 122 days he put together a human brain out of machines or something like that. So whatever he's doing, okay, you got to know what he's doing, and you got to know what he's thinking, because right now, until he's not in that position, and that day will come, he's going to influence Donald Trump, and he's going to influence policy and decision-making related to AI. That's number one. Number two, I don't know the group, but I can just tell you as an economic analyst, the sanctions sometimes don't work, and they sometimes do work. They have worked in terms of slowing down the progress of our potential adversaries in AI. If you talk to the CIA or the FBI or the NSA, they will give you empirical data that we are now back ahead of our adversaries. Again, you guys may know that better than me, but if you like the use of the government to apply power and sanctions to protect U.S. industries, this is your administration. They're definitely going to do that. And then the third thing I would say to people is that if you have an interest in this sort of stuff, that you should read Robert Lighthizer book. And the title of his book is No Trade is Free. It's 200 pages. If you don't want to read the book, I interviewed him on my podcast. You could just look up Scaramucci Lighthizer. It's a 45-minute interview. And it's his theory on U.S. trade. And why is that important for the people in this room is that he will cripple your competitors if they are state-sponsored. Okay, and so what Lighthizer can't stand is here is the Chinese steel industry, and they're getting fortified by the Chinese government, and now their price is at a 30% discount below the market to what U.S. private market pricing is, and now they're entering our market to eat market share at this subsidy. Okay, so he does not like that, nor should he like that. It's actually very unfair to the American worker, and so he'll put up a barrier or a tariff. So when you're looking at the tariffs are academically, people say, oh, Smoot-Hawley, the tariffs pushed us into recession and great protectionism, but the country needs tariffs. If they really understand the tariffs, they have to be surgical and they have to be protective when other countries are attempting to take advantage of us. And I think it's something that people really have to do some homework on. And let me just make one last point, because Wall Street gets a lot of things wrong, and I can tell you something that we got wrong in 1999. And people may or may not remember this, but you were just joining Bloomberg, and there was a gigantic protest in Seattle where a group of labor, Ralph Nader, went to protest the World Trade Organization meeting. Anybody remember that? And what happened in that meeting, okay? The labor people and Ralph Nader said, don't let China into the World Trade Organization at the emerging market level. What did that mean? They could put up protective tariffs, and then they could sell goods and services in the United States unfettered without tariffs, because they were treated as an emerging economy. As you do that, you're going to hollow out our manufacturing industry. Wall Street, myself included, and please forgive me, we poo-pooed that. So that's a disavowal of the David Ricardo principle of global trade and fair capital allocation, and we should certainly ignore these labor people. They were right. Wall Street was wrong. Robert Lighthizer, who's going to be running trade, is on the side of those people. Okay, and so you should understand that because it's going to have an impact on AI in your industry.
I would love to take questions from the audience, but I am very mindful of the clock because we have other sessions coming up after hours, and so please try to find a moment with Anthony, perhaps when we get off stage. Okay. Anthony, I'll take this last few moments to ask you this question. Joe Scarborough and Mika the other day made a trip to Mar-a-Lago to see the president-elect. And of course, those of you who watch NBC or know them by reputation know that for the past 8 years, they have been a thorn, or wanted to be a thorn in Trump's side.
You are such a nice person. You know, I got to tell you, the reason you've lasted 26 years at Bloomberg is what you just said, okay? Okay, so let me do the Schatzker translation, then I'll ask the question. Joe Scarborough and Mika have run over Trump with a Mack truck. They've called him every single name in the book. They roasted him. They grinded him in a meat grinder. Okay, go ahead. Now ask the question. I mean, it's unbelievable.
Was that a clever thing to do, and is it something you would consider doing?
Okay, so my thing with Trump is very personal. Okay, so very personal. So I gave him $1 million. I worked on the transition team, hundreds of hours of media advocacy, 71 campaign stops on the plane. When he was acting out of control, I was always in his grill to talk about the out-of-controlness. When he hired me, that was one of the biggest mistakes of my career. My wife hates Trump almost as much as Melania hates him, and that's like up here. I mean, you can't even imagine how much she hates him, okay? And my wife told me, do not take the job, okay? And I said, no, I got to take the job. I grew up in a blue-collar family, Tufts Harvard Law School, hedge fund business. I'm now going to go work for the American president. And my wife said, you're not suited for that job. You're going to get destroyed in that job. Do not take the job. And if you remember anything from this conversation, don't put your pride and your ego into your decision-making. Because I put my pride and my ego into that decision. And one of my mentors, will remain nameless, got a big job. He spent 6 hours with Trump. He called me. He said, I'm pulling myself out of the job. And I said, wow, yeah, why are you doing that? He said, you know, I don't feel that my personality is going to mesh well with the president's personality, and it's going to end in tears. And I didn't listen to him. I took the job. And of course, I got annihilated. 11 days later, I got ejected from the White House and blah, blah, blah. And there's a lot of subplots to the thing. But I stayed loyal to Mr. Trump, President Trump. I advocated for him in 18. I advocated for him in 19. If you don't believe me, go look at YouTube. I was on the Bill Maher show in August of 2019, and he was talking about the left-leaning squad, the members of the Congress. He said they should go back to the countries they originally came from. Okay, they're all non-white. 3 of them were actually born in this country. 1 was a naturalized citizen. Bill Maher turned to me on the show. He said, you know, okay, you're supporting Donald Trump, but what do you think of that? I said, well, I don't like that. I'm an Italian-American. They said that to my grandmother. That's American nativism. It's a form of racism. He's the president of the United States. He's president for all people. Look at this beautiful, colorful mosaic of people in this room. Okay, that's what America should be, and I don't like that. Show ended. Bill Maher comes over to me and says, oh, you're going to get your ass lit up by Trump tomorrow. He's going to light your ass up. I said, no, he's not. He said, I've been extremely loyal to him. He fired me 2 years ago. I'm extremely loyal to him. Nah, he goes, you got to go 13 for 10 for Donald Trump, which you don't have to be an AI genius to know that that's mathematically impossible, but you were 7 for 8 for him tonight. And he's going to light you up tomorrow. I said, I'm going to bet you dinner. Who do you think won the bet? Okay. By 3 o'clock, he was lighting me up. And okay, I'm a New Yorker, guys. I'm not Ted Cruz. So he was lighting me up. He was lighting me up. And so I think I called him like the fattest president since William Howard Taft. Because, you know, he like, hates being so fat, right? And so then he came back at me. And then I said, oh, my God, you're getting so old. These trolls. You've lost your fastball. Okay. And then he went crazy. And he started attacking my wife. Now, my wife and I were having marital problems, pretty well documented. Okay, she didn't want me to go work for him. We were having other problems. She filed for divorce on me. Thank God we fixed that. okay, and we're probably more strongly married today than ever before, knock on wood. But he knew that, and he went after her, and he said ridiculously vicious things on Twitter about my wife. Now, you guys may like the guy, or you may have voted for him, but that is a bro code violation, and that is 5 sigmas away from appropriate behavior, especially after everything I did for you. So that was it. That was disqualifying for me. So if that son of a bitch doesn't apologize for that, I would never go to Mar-a-Lago under any circumstances. Having said that, he's the American president. He's our president. I want him to succeed. I'm not one of those people. But I think Joe and Mika, to answer your question, made a bad decision. Because you can be observant of the situation. They made that decision because their knees were knocking. Does everybody understand that? They think they're getting kicked out of the country, or they think there'll be some kind of show trial, because Trump has said, and not me saying it, Trump has said he's going to use the American military to go after his political adversaries. And he said, I didn't say that. He said that. He said that he was going to seek retribution. I am your retribution. I didn't say that. He said that. And those two looked at each other and said, we're either moving to London or we're going down to Mar-a-Lago and have coffee with Donald Trump. Okay? Let him come after me. I'm okay with that. Okay? I've had a great life in this country. I've lived the American dream. I grew up in a blue-collar family. That's my First Amendment right to speak out. These people still work for us in this country. We don't work for them. Okay? And you have a right to say what you think. Okay? And that's what's made the country. And by the way, the free press is not just to keep check of the people in power. The free press is to teach our second graders to speak and think freely so that they can go on and innovate. They can create Facebook or NVIDIA or Google or Bitcoin. Because the other countries that curb free press and they put the people in re-education camps because they said something about dear leader, they can't replicate this stuff. It happens here for a reason. And so I will be there to protect that. I think they made a terrible mistake. And by the way, I think they know they did. Joe looks deflated to me, like he's got, 10 pounds of oxygen taken out of his step.
One of the things that I've learned in all the years that I've known Anthony is that no matter how many times you knock him down, he will dust himself off, get back up, and come back stronger.
I'm
now
too short to see the glass anything other than half full. All right, don't forget that.
Ladies
Guys,
and
thank
gentlemen,
you.
Anthony Scaramucci.
Thank you, guys. Very much. Thank you. Thank you for
Please welcome to the stage Evident's co-CEO and co-founder Alexandra Musavizadeh, Snowflake's head of financial services AI Jonathan Regenstein, PNC's head of data and automation Ned Carroll, EY's financial services AI leader Samir Gupta, and Bloomberg News' Jackie Davalos.
Hard to follow up something like that. Who's ready to settle in for AI architecture? No offense, guys. No, but this is good because now we can kind of get into the meat and potatoes of artificial intelligence. What goes in it, how you put it together, and where it lives. So thankfully, we have folks from every side of that equation, and I'd love to kind of start off with a rudimentary question about what the key inputs are for a successful initiative that leverages artificial intelligence. This can mean a lot of things, but in the financial context, I'd love to start with you, Ned, given you think about kind of the nitty-gritty granular level data that goes into models.
It's a great question. I would start with a value proposition, like actually what are the economics behind what you want to do. I spent the morning talking about customer to account linkages for 19 million customers. So,
Translate that for us.
Data.
Yeah.
I think financial services as a whole, all you have to do is read what regulators write about us. We've struggled a little bit with managing structured data, having high quality structured data, whether that's for liquidity reporting, capital reporting, credit risk, what have you. Now, push that onto what's the fidelity and quality of our unstructured data that we want to use. And it's a whole new game. And the types of techniques and tools and practices that we applied to thinking about high quality structured data, some might apply, some might not. And we need to, I think creatively around what those supply chains look like.
Does this new AI era kind of make your job harder or easier when it comes to thinking about how data is structured?
Well, I hate to break the news, but AI is not new. We've been doing modeling and whatnot for a long time. In fact, I think a bit of a good news, bad news story for financial services. On the one hand, we're experts in model risk management. On the other hand, some of our practices around model risk management don't scale and will be difficult to use in a higher velocity class of models. I think it does take a difference. I think a lot of the regulatory focus right now around data quality is a rules-based approach at individual attributes. I think we need to think more around a pattern-based approach and how do we look at data quality across a system of different applications, different models, some of which might be structured, some of which might be unstructured. So it's just a bigger problem set. I think there's a great opportunity to apply AI to how we manage our data a little bit better, and think about how we can be more scalable about that.
Well, then let's hop over to Jonathan. So you think a lot about where data lives. I mean, how are you pitching your customers right now about how they should be thinking about cloud solutions and in AI?
Sure. Yeah. So I mean, at Snowflake, as y'all may know, we're a cloud native company. We're a cloud first. So thinking about data in the cloud comes very naturally to us. I've been really pleasantly surprised, encouraged at the tone of this entire day. We've talked a lot about data, a lot about platforms, a lot about de-siloing and governance. We haven't really talked about bringing GPUs in a scalable way to your data, bringing models to your data, but that's all part of the AI story. And this is the exact cloud strategy that we work on with our customers. And to Ned's point, we've been thinking about this motion around structured data for a decade now at Snowflake, right? Now we're starting to append unstructured data to that, all to kind of feed this new world of AI, right? So we're a very cloud-forward company, to say the least, at Snowflake. But I think when we look at how to get value out of AI, you can do it on bare metal. You can kind of build all these systems yourselves. But for our customers who have spent the last 3 years modernizing their data strategy with a cloud strategy, they're ready now to kind of take that next leap with AI. So to us, this appending of structured and unstructured data, the cloud is just the most natural place to do that. So we're really seeing it as an accelerant around data strategy, around architecture, around getting to commercial value. As Ned said, that's always the North Star for everything we do. So kind of data strategy, cloud strategy, now AI strategy.
Yeah. Well, let's head over to Ernst & Young. Samir, give us a sense of how EY is thinking about this, now that we kind of laid the groundwork with what folks need to have in mind on the data and the cloud front.
Yeah. So agree with the points that Ned and Jonathan made. I think there's an overarching point around thinking of AI strategy more holistically. And we look at it from two dimensions. One is how we as EY approach our AI strategy, and then how we see our clients approaching AI strategy, right? And there is a lot to be said in terms of all the various layers of that AI strategy that the banks are thinking about. Some of them are not thinking with the same intensity or the same thoroughness about all the layers. So, the discussion about what should be our data strategy, that's an integral part of what goes into AI, right? Because without having a robust data strategy, you can't go beyond a proof of concept into something that goes into a production environment. There's the element of there's the element of governance. You guys can hear me okay? There's the element of governance. What we are seeing is that, and we've seen this, when this session happened last year, a lot of the banks said they were just still experimenting, not many use cases have gone into production. Now we hear some of the use cases are going into production, right? So as you think about the strategy in terms of what it takes to have a production environment, what it takes to have an environment in which sensitive data can be co-located with the foundational assets like large language models, if you haven't thought about the strategy for these types of elements in a cohesive way, then you're going to hit a brick wall, right? And I would say there's also the element of governance, which covers so many different aspects, right? Where the AI use cases are residing right now, there are so many layers of approvals needed, so many layers of controls within banks. They are related to things like applications, software. They're related to data and data security and all the additional controls that are needed because of the type of AI that's trying to consume that data. Then there is the traditional model governance. Then there is which is not really suited for a lot of the types of use cases we are looking at today, right? So I would say the single biggest or overarching thing to solve for is a cohesive strategy across all of these dimensions.
Let's talk about some of the challenges that are starting to crop up now that AI is kind of more in the adoption phase. People are starting to incorporate this into their strategies. Ned, I'd love for you to weigh in on this, given you think about this a lot, this idea that you're layering technology on top of each other. And one of the things we had talked about in preparation for this very session is the people, the human talent that goes into that as well. Could you kind of give us an overview of some of the challenges that maybe you've come across, and then where human talent kind of comes into that equation?
So I was visiting my daughter at college last week, and I asked her prospective boyfriend, who's a computer science major, what kind of code generation tools he uses.
That's harsh.
Which, by the way, is exactly not what a 21-year-old daughter wants you to talk to her prospective boyfriend about. But I was asking because I was trying not to be like my dad. Like, I learned this way, and therefore you must learn this way. I walked to school uphill, and therefore you must walk to school uphill. I did process mapping and control testing as an auditor, so you must do it. And I wonder, are we as in corporate America creating an environment where we can really enable the new generation of computer scientists and engineers coming in? On the one hand. On the other hand, we've anecdotally found that the best productivity we get around code generation, as an example, is with our most seasoned engineers. So you're sort of doing the balance of, you want to provide those tools, but you got to wonder what's the learning curriculum, whether it's in higher ed or when you come in to join a large company. What's that learning curriculum for that new talent? It opens up broader sort of reskilling, of the population in terms of AI. The country went through reskilling with manufacturing, and we thought the answer was everybody goes to college, and now we have $1.6 trillion in college debt. So whatever we did then probably isn't going to be the right solution now. It's a balance.
But there is a friction there between kind of the business and the tech teams that kind of both need to weigh in on these strategies.
That's a great point. So if you're familiar with like large corporate banking, you have a tech team and you have a business team. And the business team gives requirements to the tech team goes off and does them. We're finding instances where the businesses are hiring more technically competent people than technology. And there's a part of large companies that reject that and want to sort of build up those walls more and put process and controls, and ironically use manual controls to control automation. But I think we need to figure out a way around how you really enable code development between the business and tech. There are important roles for both to play. The business isn't going to care about these unsexy things like resiliency and cyber. Tech needs to. So how do you create that collaboration? It's a very different culture than a lot of large commercial and retail banks. I think banks that have been more focused in capital markets have had that sort of co-development collaboration, so there's probably some good lessons around how do you scale that across a broader footprint.
Yeah, I mean, just to follow up on that, like, I remember, I don't know, maybe a year ago, 18 months ago, there was this hypothesis that Gen AI was going to make data scientists and data engineers obsolete. We weren't going to need them. From our perspective, the most successful teams, and we've already heard it discussed today, have a robust talent pool of data scientists and machine learning engineers. So if anything, to me, you should be doubling down on your talent pool right now. If you're going to start putting these really powerful tools into your employees' hands, and you're going to build this robust data strategy, this robust cloud strategy, you're going to onboard all these amazing models, I would say invest at least as much in your talent pools, because you're putting all these tools into the hands of your employees. This is one area I kind of disagree, I think, with the popular narrative that it's the end of data science. I think data scientists are going to be even more valuable, and there's going to be data scientists embedded in every business function across banks. I mean, I don't think you can overinvest in data talent at this juncture. But
do you find that the clients and prospective clients that you're pitching in the financial services field are receptive to that? Or do they kind of just want something that's like plug and play and leave it alone? I have other areas to invest in.
I wouldn't say they're receptive until we start going through a POC to production motion, and we kind of find that optimal mix of a data engineer, a data scientist, a domain expert, a cloud engineer, and we can kind of see, well, when we bring all these things together and then we put large language models in their hands, the results are astounding. And I think this is something that again, Ned touched on. This idea of a structured data strategy and an unstructured data strategy, and how we can use LLMs to give structure to unstructured data, well, the next stop on that value chain is machine learning engineers and data scientists, right? So it would be a shame to go through all this work with AI of ingesting unstructured data, appending it to your structured data strategy, and then you've kind of underinvested on the machine learning side. So there is definitely resistance to what I'm saying. It's not the popular narrative right now, but the results that we see tend to come from that
optimal mix of talent. So yes, definitely.
Samir, I'm curious if you wanted to weigh in on that.
Yeah, I just wanted to add a couple of points to that because, and I think Teresa mentioned in their address this morning about, giving out these tools to 200,000 employees, right? I think what's important is to make a distinction between what is a personal productivity tool, right, which may be not specific to a use case, right, which is being given to an employee to be able to do their basic day-to-day tasks, right, and differentiate that from things that will tend to move towards enterprise applications that have more requirements for accuracy of the output and robustness of the output and repeatability and so forth. You don't want to have that situation where a couple of years from now the banks have the same problem as they have with EUC today, where there are 5,000 to 10,000 EUC assets sitting around, and critical work of the bank is being done in Excel sheets. Now it is the AI equivalent of that, right? And I think it's tied to the talent portion as well. One of the things that I have to do for our financial services business is to bring AI assets and capabilities and training to our entire consulting services, whether they are in business consulting and risk and technology. And while we could roll out licenses to everyone, right, for let's say MS365, but we are deliberately not doing that, right? And I think the reason we are not doing that is that we want to do it in a way that the adoption has a productivity element to it, and it has a stickiness to it, and it is a safe way, there's a safe way to do that without running amok with the data, right? So defining those personas, being able to say, what are the winning usage patterns, being able to celebrate the wins, being able to incorporate that into the training, doing that in a safe way, all of those things are part of some of the people element of using AI. And again, going back to what I was saying about strategy, having a clear strategy to be able to say, we don't get into an AI-enabled EUC problem, but we have a distinction in terms of what AI asset is being used and what are the, what type of design, what type of technology, what type of controls are being put into it based on the use case.
One of the things I'd love to get into is kind of this uncertainty looming over us when it comes to AI regulation. And in the context of data and infrastructure and cloud solutions, it may seem like a bit too high level of a topic to really, trickle down to these things. But there is something to be said about the financial industry and its familiarity with regulation. But in the data context, how does that perhaps pose as an advantage in the, with so much uncertainty about what AI regulation could look like if Biden's executive order is scrapped and, generative AI firms start to kind of shift around that for the technology that's already out there. Ned, I'd love for you to kind of weigh in on how the regulatory environment that's existed for years for the banking industry kind of prepares AI in that way.
Well, I think, and I've witnessed it for the past, probably 10, 15 years or so, a lot of focus on, can you trust your data, right? So you can now expand that to different data sets. I can't predict what's going to happen or not going to happen. I mean, NIST has come out with frameworks, and Treasury's doing some stuff, and a lot of really interesting work is going on with some industry bodies. I think our focus is really more on, are we doing right for the customer, right? And I think at the end of the day, if we stay focused on, can the customer trust the decisions that we're enabling with AI? Can they trust the data? Do we build transparency to how we're using that data? I think it's, as long as we stay customer and client focused, whatever regulatory construct gets put around us, we'll be fine. That's, our focus is around responsibility to our customer, and how we're using their data about them, to help them, succeed in their financial lives. And I think if we stay focused on that, the rest will fall into play with regulations.
How do you think about this over at Snowflake?
Yeah, and I mean, this has been a big focus for us for the last decade, right? Governance and security of your data. And we've been working on that in the structured data realm. Again, we're back to this kind of structured, unstructured data paradigm, which I think is a big mental model shift for us that the world of LLMs has really ushered in. But the best practices around security and governance tend to flow through this mental model shift. So I mean, at Snowflake, governance and security has always been a huge priority for us. It's a big reason we've built a kind of a data gravity within financial services. So we're just trying to append all those best practices onto unstructured data and onto your AI strategy. And kind of back to what Ned was saying, I mean, if you can trust your data, that is a big step one to trusting the output of an LLM. I mean, there's kind of non-deterministic elements of LLMs that are not going to go away, most likely. But if you can trust your data, that kind of solves a big part of your trust problem. I mean, to regulations specifically, that's definitely top of mind for a lot of our customers, and it's a rapidly changing world right now. But I think that North Star of security, governance, and doing the right thing for your customers tends to get us there.
I mean, one of the things that's been at least messaged by the president-elect's team is that deregulation is probably on the way in some capacity. There's a lot of thinking that, this is an America First strategy, that we need to stay at the forefront of AI versus our adversaries. And I'm just kind of curious if that portends some erosion of what's kind of been put in place over the last couple years, or if there just really isn't that much to go off of. So even if it is scrapped, it doesn't really mean too much of an impact. But on this issue of trust, do you think that with this new incoming administration, that might be more of a question for some of your customers?
Well, I think that the focus on trust for our customers and for banks and insurance companies in particular, that's something that kind of comes from within for them. And it's really, really important. They don't want to, for very good reasons, end up on the front page of the newspaper for all the wrong reasons. So I would say the ability to trust AI I don't want to say it's almost agnostic to the regulatory environment because regulations matter, but I think that business risk and business reputation is important enough that they're not going to take their eyes off the ball in terms of trust and in terms of implementing AI the right way. So we're always going to be partnered on that with our customers, and I think that the regulatory environment, it might have a big impact on smaller, more nimble companies like fintechs who are really out there pushing the barriers. But I think this was said in the morning session, we view that there's a big, almost advantage for the larger data estates in this world, and that's inherently an incumbent's advantage. And you don't want to give up that advantage by violating the trust of your customers. So we don't, at least this is my personal opinion, no matter where the regulatory environment goes, I expect trust, security, and governance to be, after commercial value, there's going to be the 4 things that are always discussed for any POC to production project in AI.
If I can.
Samir, did you want to weigh in?
Yeah, I just wanted to add a couple of points to that. So I think there's a few things that banks recognize, right? As Ned said, that there is a good starting point in terms of experience with, with enforcing the right level of controls and creating trust in the data. I personally think that whichever direction the Trump administration takes, the fact that many of the banks are operating across geographies, right? So the EU AI Act is not going to change based on what happens in the US, right? So there's some of that conformance to global regulations, right? And also expectations at the state level, right? What happened with CCPA in terms of the amount banks had to shift, right, in compliance with that. But the other part I think it's very important to recognize is that the alpha to be derived from the new AI technologies, right, and especially large language models, lies in the unstructured data, where a lot of the quality issues, a lot of the issues related to things like being able to do even something like anonymizing data, right, are much harder. And that's where I think a lot of the effort is going to go, right, in terms of being able to say, how do you create trust in the data in terms of quality of the data as well as in terms of the controls around that data to be able to propagate things like role-based access controls or just privacy and customer consent in things like this. I think that's where a lot of the effort is going to go in the next at least 1 to 2 years, if not longer, in being able to instill that trust, because if the alpha is going to get derived from the unstructured data, most of the extra effort also needs to be in tackling that part of the problem, which is much harder than the structured data problem.
Alexandra, before we wrap up, wondering if you wanted to chime in here now that we kind of have the lay of the land.
Yeah, lots of things. I mean, just want to get back to the enablers and some of the points that you mentioned on sort of doubling down on talent and actually how important that is, and just some of the observations that we have on the data of the leading banks in the index. But before I go there, just we actually put a piece out, I think it was last year, on the regulation and how actually the banking sector very much is the blueprint, or could be the blueprint for how other sectors, regulated or unregulated sectors, could organize how they adapt for AI-specific risks with the lines of defense and the governance and oversight that's built in already into the banking system. And the thinking of how to adapt those to AI-specific risks is very much something that everyone else is looking at how you're doing this. And so, and to your point, is that you're sort of, because of the trust factor being so important, you can't fuck it up, because then that's that's really detrimental for the business. So getting it right, no matter sort of how slow the regulation moves or how it changes depending on what Trump does and doesn't do on the regulation side, the banks have to keep moving and put use cases through production and sort of think about the oversight and the and sort of how to do that in the best possible way. So regardless of what's going on. But just to go back to the enabling factors, I mean, one of the things that we're seeing on the on the talent, but also to your point, Ned, on the training and development internally, that is something that we've seen really change, go from 0 to 100, but really rapidly increase. And I think Teresa mentioned it this morning. Having 200,000 employees on AI tools. Not only does that require a lot of training and development internally to get that uptake up to where you want it to be, to get those percentages of efficiency gains. But it's also what I think that many banks are starting to do with anyone coming into the bank is getting mandatory training. So that this is your AI tool, you've got to try and use it, try and melt it into the processes, in addition to all of the POCs that are being looked at and the sort of very specific, maybe more sophisticated AI use cases. So the training is essential. And in some respects, when we're looking at many of the banks making statements around what the return on, the number of use cases and the return on investment, a proxy for that for many is that looking at who's actually doing and doubling down and doing a really good job on the training and development of that talent, because that is essential. If you don't have that training and development done, it will not be used, and it will not become an absolutely sort of integral part in how everyone in the bank works, thinks, and functions, and that sort of innovative mindset. Just one last point, which is to you, Ned, on the question around getting that expertise down in the lines of business and having that expertise sit not just over in tech or IT, right, but it's part of the whole talent stack. The business and the experts sit alongside, because otherwise you can't figure out, what are the new use cases that are coming, up with Gen AI, but also with Agentic AI now. Already, a lot of people are starting to think about what new, things can we do now, and those are happening all the time. So if you don't have that expertise sit in your line of business alongside the business side, then that's going to be much harder to identify, and it's just going to be slower process to get those use cases identified and get into the pipeline.
It's a great discussion. Thank you all.
Thank you.
Please welcome to the stage Grok's Field CTO Chris Stevens, Quantinuum Senior Director of Strategic Initiatives Elvira Shishanina, Balderton Capital's partner James Wise, J.P. Morgan Chase's Head of Global Technology Applied Research Marco Pistoia, and Bloomberg Intelligence's Global Head of Technology Research Mandeep Singh.
Good afternoon, everyone. It's so good to see a packed room. I'm sure the conference has been great so far. So, look, we've got some wonderful panelists here, and I want to start off with a quote from Jensen last night during NVIDIA earnings, where he said, data center would be $1 trillion opportunity in terms of modernization without any digestion. And what it really made me think was, obviously, modernizing the data center is a pretty big area of focus. So maybe, Chris, I want to start with you, since you guys are trying to, compete on the inferencing side directly with NVIDIA. What is it that you are seeing out there in the market in terms of how companies are looking to deploy Gen AI and the foundational models?
Sure. I noticed you were looking right at me as you went to that Jensen quote. Yeah. I mean, first of all, I agree, and I hope he's right. I hope he's wrong, and that it's a bigger opportunity than that, frankly. And then what I'm seeing in terms of data center and compute and how we think about that in the industry is, it is still early. And so, the demand for training compute has been intense, and NVIDIA has certainly ridden that wave. As firms begin to deploy, generative AI use cases into production, that begins to get into this inference space. And what we're seeing, at least at Grok, and there's others that are in the same space we are, that true AI inference, the throughput and latency, quality, cost that you need, requires a different hardware paradigm. And that's kind of where Grok comes into play. And so we're seeing a lot of demand, crazy, insane demand, quite frankly, and a lot of interest in what we're doing. And we're really just getting started. It's just the very beginning of firms getting AI use cases into inference phase. If you go to the research here that Evident put together, I think it was like 2 of the 50 banks in their index have an estimate of ROI against generative AI use cases. So it's 1%. So they're just really getting going. 6 out of the 50, I think, have use cases into production or something along those lines. So it's just so early, and I can't underscore, it's just such an exciting time, honestly. It's like a blue ocean out there for all this work.
And since I'm looking to cover the emerging technologies broadly, so it's not just the GPU accelerators. Elvira, you guys are using quantum technology, which has been talked about quite a bit over the years in terms of solving some of the toughest problems, whether it's optimization or just breaking like on the cryptographic side. What is it that you had to do, given the success that you have seen, with ChatGPT and just the transformer models that everyone is talking about?
Yeah, thanks so much. I'm actually super happy to be on this panel with those amazing colleagues. The good news is that quantum technology is not a discovery anymore. There is a good amount of engineering work that was done. I represent the world's largest full-stack quantum computing company. Full-stack meaning that we don't not only produce the quantum computers, we also develop the software solutions together with partners that allows basically to them experiment already with the technology and develop the application towards future business value. Obviously, we know about some inherent not improvable of a classical HPC technology. It's hard to say about the AI limitations, but I wouldn't create the competition out of that, but rather say that we can actually envision this whole best of three worlds as one big supercomputer that can actually accelerate the scaling of
But is there an
future.
AI in quantum that you're looking to
definitely
implement now? Yeah.
I mean, you can imagine using AI to improve the usage and building of quantum computers, and in return, you can use quantum solutions and data to improve the classical AI. But there is also the third path that we consider, and we call it sort of compositional intelligence of quantum and AI, that basically provides you the high-level model agnostic framework for interpretability and enables basically the analysis of hybrid models. But yeah, again, I would just say, like, let's not create a competition, but rather consider the best of three worlds to scale up the applications
So
that we want to solve
you think
faster.
there are still enough problems to solve, even though the
definitely.
GPU accelerator can do it all, it seems like, if you hear some of the companies.
Definitely, and I mean, I could refer later to Marco, but just to say we're...
Feel free to chime in, Marco,
Yeah.
if you have a view on that, given Elvira believes that you clearly, you guys, it looks like are partnering on some quantum solutions. So if there is an example you want to cite.
Thank you again for inviting me, and I'm really honored to be here. But I wanted to say, yes, I agree with what Elvira said, because indeed, to achieve quantum advantage or quantum supremacy, it's very important that a lot of pieces come together at the same time. So the quantum hardware, of course, is like a foundational. Without a fully functional quantum computer with very low error rates, we wouldn't be able to get anything useful. But even when the quantum computer becomes available, we need algorithms that run on that quantum computer. We cannot do that at the last minute. So that's why we formed partnerships. So I think the entire ecosystem has to work together, and particularly Quantinuum and JP Morgan Chase were working together very closely. Initially, we were writing algorithms and executing them on the Quantinuum quantum computer without Quantinuum even knowing exactly what we were executing. Just like you would access a computer on the cloud. Now it's actually a joint partnership. You can see a lot of papers, scientific papers, written jointly by JP Morgan and Quantinuum. And in the area of AI, in particular, we see a dramatic potential here. The reason is that, as Elvira mentioned, AI, everybody thinks quantum will be a propeller for AI, which is totally true. But as Elvira mentioned, it's also, there is another angle that maybe a lot of people didn't notice before, but AI can help quantum computing, for example, in the area of error correction. So it's almost like a two-way street where both technologies help each other.
Okay. And James, you are in the area of investments, and wondering from your lens, do you look far out in terms of quantum as an area where you think there are companies, investable companies right now, or there's a lot of greenfield opportunity when it comes to making AI investments?
Yeah, I mean, we've been investing across over 25 years in different areas, and quantum was an area we invested in sort of 2018 to 2020. Mostly those businesses were dealing in more simulated quantum environments, and some of those have ended up going into areas like the therapeutic space. Venture capitalists, although we deploy a lot of capital, we're actually quite resource constrained compared to government actors or larger CapEx investors, which is where I think most of the money today is coming from to fund quantum projects, because they are so capital intensive. So actually what we've been looking at is where are the areas of, well, I say traditional architecture, transformer architecture, which is far from traditional, but compared to quantum, old news already, which are actually accreting benefits which we thought we would go to quantum. So we know quantum's going to be brilliant in the optimization problems. We know it'll be great at cryptography problems. But in traditional quantum systems like protein folding or material sciences or organic chemistry, actually we're starting to see transformer architecture-based models, LLMs and others, diffusion models, be pretty proficient. So we're in this interesting period where even people who've got quantum expertise can start seeing outcomes from transformer architecture that perhaps they assumed they'd need hundreds of qubits initially to get to an answer from. So we're looking at it, we're trying to monitor it. But I would say for software, traditional software investors, still quite a hard place to deploy capital.
And Marco, were you surprised to see how the transformer model really took off in this wave of AI, given you've been dealing with algorithms for such a long time and you've spent so much time and energy around developing quantum as well as applying other emerging technologies? Were you surprised by the success?
Yes, I was. Even though, as you said, this is like my daily job, to work on these technologies. I think I didn't expect such an explosion, which is a great thing. It's very disruptive. So this is also like a kind of a lesson for all of us that we need to be ready to embrace these new technologies. Now, definitely AI has become really important. I think this morning there was also a fireside chat with Teresa Hetzenbecker from JP Morgan, and we see the potential, the incredible potential. AI is used really in a very aggressive way inside banks today. It's in the financial industry, as well as in any other field, of course. And I'm also surprised in a good way to see that quantum is becoming so, at this point, stable and promising. It's no longer a hypothesis. It's becoming a reality. We're moving from science to business. We're moving from science to engineering. So a lot of problems that were only sketched on a whiteboard, the solution was only sketched on a whiteboard, are now becoming completely solvable, and it's only becoming an engineering effort. Mm-hmm. So we see, I don't think anybody has a doubt anymore that quantum computing is a reality. It was a little bit of a hypothesis like a few years ago. Some people were still skeptical. Mm-hmm. I don't think there is anybody still being skeptical anymore.
So, Chris, I mean, when you're scaling the compute for your customers, and I'm sure the problems that you're trying to solve for are growing in scale. At least that's the sense that we are getting listening to all the companies that scaling laws hold. And then in parallel, there is this problem around power efficiency or enough power not being available. How are you trying to solve those problems for the customers, and what is it that Grok is doing which is really resonating with customers right now?
Sure. The short answer to that is that the breakthrough technology that Jonathan Ross, our founder and CEO, the invention of this chip that really is the core of Grok. We serve up by way of a cloud API and so on and so forth. But at the core of Grok, the IP is a chip and software compiler that enables easy access and scalable inference on the chip. And the outcome of that, and I'm happy to demonstrate to anybody that wants to see it, the outcome of that is 5x faster, 5x cheaper.
Is there a limit to how big scale can get? Like everyone wants to know scaling laws, there has to be a limit, right? It cannot be infinite scale.
I'm sure there's a limit. What's interesting for Grok, and by the way, just the power consumption is significantly lower using Grok than, say, a H100, for example. In terms of scaling, what's really interesting specifically for Grok is that we are on a 14 nanometer architecture, and most of the rest of the chips in the space are on 4. And so we're achieving superior performance, day to day. There's a horse race going on, and some days it's superior, some days it's a tad behind, and it catches up again. But we're achieving superior performance on a last generation chip architecture. So we're excited as we roll out new architectures that we're going to see significant scaling in performance, significant scaling in a good way downward on energy consumption. But I mean, these are absolutely a very real concern in terms of...
So you think the software side can drive a lot of this power efficiency?
100%, yeah.
Okay.
Like I said, I wanted to make sure that when I talked about the thing that makes Grok special is certainly this chip, but the compiler software layer that is paired with that, we're able to drive more and more performance on the software layer, not just through the chip, which does then get back to that power consumption piece, but that is absolutely a valid concern.
Yeah. And Elvira, I mean, it seems like computers will get better and better with reasoning. I mean, that's the kind of direction we are going, with agents or anything you want to talk about in terms of what LLMs bring to the table.
Yeah,
How are you guys positioning your solutions in terms of better reasoning, or is there another value proposition when it comes to your particular solution?
Yeah, so when we usually speak about, let's say, quantum advantage or utility, where you can actually get that value compared to what you can do with a classical one, the first things that come in mind is usually like the speed up or better accuracy or maybe more complex and diverse models that you can treat. But actually energy consumption could be another good and valid point, because if you could maybe do the same solution but reduce the energy consumption drastically, because right now what we see, you literally need the entire nuclear plants to train some of the most advanced AI models. That probably could be considered as another point of value that we can bring with quantum computers. In terms where we are right now, is recently in September, particularly, Quantinuum announced their roadmap, a hardware roadmap, practically committing to deliver a universal, fully fault-tolerant quantum computer with thousands of physical qubits and with a quite meaningful error correction layer that allows you to extract hundreds of logical qubits and already perform the meaningful computations that will possibly bring value, for instance, for financial industry. And that we're going to do by the end of the decade. Right now, we recently released the machine H2 with 56 physical qubits, and which allows you to go up to 12 logical ones that our closest partners, such as GPMC, actively explore right now in order to build some of the fault-tolerant
So can I just piggyback on that? You said something very interesting. You don't need a nuclear power plant to run your solutions, or you don't, I'm implying here, you don't need the latest TSMC manufacturing facility to produce your chip that you're using for quantum computing. Is that the right framing of how your solution is built in terms of the quantum server and what you're using in your solution?
Well, it depends, of course, on architecture, because I just don't want to open this box of debates. Some of the architectures, they use like dilution-free fridges to cool the system. Some can work in the room temperature, etc. But in general, like the orders of magnitude is that energy-wise, the quantum computers are much less consuming compared to the classical. But it depends again on the scaling capacity and on the task. So for instance, it's hard to compare because whatever we can run on a quantum computer, we can easily, let's say, easily or not do on the classical one. But at least the computers themselves, like the one that we recently released with 56 qubits, they are fully connected. So the machine itself, you cannot already simulate on the largest possible HPC. And this is kind of the big milestone that shows that the technology progresses. Yes, probably we would love to see it here and right now, but we just need to give it a little bit of time to mature. And maybe the last point is that if tomorrow you give me to mimic a little bit what Marco said, if tomorrow you give me the perfect, super large, in terms of capacity quantum computer, I don't really know what to do with that because I don't know my applications and I don't know what would be the best algorithms to run that. So I just can congratulate GPMC and all the other companies who are the early comers, who spend a lot of resources and efforts to understand the technology, to understand their applications, to build this expertise and be at the forefront.
Is there anything you wanted to add?
Yeah, actually, with Quantinuum, we published a paper after running a lot of experiments. I think it was in July. I don't remember exactly, June, July.
Okay.
So we took an algorithm called the random circuit sampling. I don't know if you remember the result obtained by Google in 2019 when they claimed quantum supremacy. Then the result was contested by other companies, but it was actually a good result. Quantinuum and JP Morgan Chase and Argonne National Lab, we took it and we reran the whole thing with particular optimizations on the 56-qubit quantum computer produced by Quantinuum. And in terms of energy consumption, just to go back to what you were asking, Mandeep, we were able to demonstrate an execution that we believe it cannot be matched on any classical computer. And even if it were matched, even if a classical computer could actually execute the same experiments, the amount of energy would be on the classical computer 30,000 times larger.
Okay.
So it's a big number. You know?
Was there anything you wanted to
Yeah,
add?
I was just going to say, I think what this speaks to is that the reality is that we're coming out of an era where the CPU had essentially been commoditized down and all the value was accreted at the software layer and business applications. And we're at a period of time now where specialized hardware is going to be necessary. It's specialized compute.
For how long?
Based on your use case, right? And so I'm not going to make a prediction about the death of the CPU, but I'm sure by the time they begin to roll out fault-tolerant quantum, there will be perfectly appropriate use cases that should run on CPUs, GPUs, and architectures like the LPU from Grok. And then there'll be use cases that belong on quantum, and we'll find that we'll be in this time period where it's an right, for these different use cases.
And I think that's a real I mean, just to double down that change for people working in the financial services world, you know, as you say, for the last 25 years maybe, we've got used to this pretty homogeneous architecture. There's now a real strategic decision that people have to make as to how much do they want to take control again over the hardware that they rely on. Or, you know, some people continue to just push that decision off to the hyperscaler that you work with and say, look, you can optimize this for me. Or should we do what, you know, some of the best performing, say, high-frequency traders or market makers have done historically, which is try and take ownership of the hardware and the connection into their own hands and say, actually, we're going to make some strategic bets here, and we're going to have and take advantage of this greater diversity in the hardware, whether it's inference or training or it's quantum or classic. And I think the winners in the financial services industry over the next decade may be more determined by who gets that right than perhaps the software layer and the approach to ML.
So, Marco, I want to make a pivot and focus on the dark side of all this, you know, technological innovation we have seen, whether it's on the GPU accelerators or quantum. Can it be misused in a way where, you know, I feel all these LLMs are so capable now in terms of the kind of tasks they can do out of the box without anyone having to do anything. Can it be misused in a big way, both on the quantum side and the accelerator side?
Yeah, so obviously when it comes to machine learning and artificial intelligence and machine learning, there is always the potential of misusing. For example, a situation could be that an attacker, so we're all familiar with viruses, right? Like, so somebody injects malicious program into your computer. But there are also viruses that are not really executable. They come in the form of machine learning models that have been crafted to be malicious. So they actually, the results of these machine learning models, once they're integrated within the infrastructure of a company, completely produce misinformation, or wrong information. So the potential of this happening, so we need tools that understand when a machine learning model, say, that has been integrated within the infrastructure of a company is malicious. And of course, when we take AI/ML powered by quantum computing, it's a very powerful solution. But again, attackers can leverage this and make it very powerful even in the negative way.
Can it break the encryption keys
That's-
faster
yeah,
because
so that's,
it has got all this intelligence
so,
embedded in the software?
I don't, so not so much with AI ML, but the quantum computing has, so let's take quantum computing like without even worrying about its potential for machine learning. So quantum computing is a technology that is capable of solving, not right now because the number of qubits is not sufficiently large and we still have some errors in the qubits. However, in the future, there is no doubt, as I said before, that quantum computing will be such a disruptive technology such that it will be capable, a quantum computer will be capable of solving problems much faster and much more accurately than any classical supercomputer. So we like these capabilities. You know, in finance, we will be able to do so many things in real time. Our financial applications will be very precise. In chemistry, in the pharmaceutical field, we will be able to produce medicines and so on. But the problem is when it comes to cryptography. So cryptography, today, public key cryptography is based on mathematical complexity. In other words, if you have any entity, each one of us, each company, each one of us has two keys, a public and a private key. The private key is very difficult to compute starting from the public key. It takes trillions of years, even to the most powerful classical supercomputer today, to take, say, your public key and reverse engineer the corresponding private key. But with Shor's algorithm, called Shor's from its inventor, Peter Shor, Shor's algorithm executed on a quantum computer in the future, this will take only 8 hours. So in 8 hours, an attacker will be able to compute anybody's private key, decrypt the data, and impersonate other people, apply digital signatures while impersonating somebody else. So we have to accept the fact that today's public key cryptography is destined to be broken. So that's why we are following the directions of the National Institute of Standards and Technology, NIST, that is giving us new cryptographic algorithms.
Yeah.
But we're also embracing another technology called the quantum key distribution. We have an effort running at JP Chase. With quantum key distribution, two parties can agree on the same cryptographic key, no public and private key, just the same symmetric key, in a way that no attacker will ever be able to guess which key has been transmitted. The reason being that this key is transmitted using principles of quantum physics. So you cannot break quantum physics because it's physics, then you cannot break quantum key distribution.
Just maybe if I can very quickly follow up. So what Marcus said is the QKD is heavily relying on the possibility to generate the random numbers.
Yeah.
And for us to not compromise, let's say, this generation, we need to make sure that this randomness is truly random. And that's why like the huge and hot topic in quantum computing right now is like how to certify this randomness. And for example, in Quantinuum, we have developed this product which is called Quantum Origin, which basically allows you not only generate the random numbers, but also to certify them based on the Bell test, which was basically the physics experiment to show the entanglement phenomena.
I know we don't have a lot of time left, so I want to get to my final question, which is the biggest impact you see in terms of AI agents or anything that this new technology will bring, and I'll start with you, Chris.
Yeah, I think that you know, the sort of digitization of business, while many businesses haven't even fully achieved that, I think if we reimagine the work we're trying to do in business, outside of speeding up what were manual processes, putting digitization, sprinkling software in there, sprinkling machine learning in there, but it's still largely the same process.
You don't want to call out a use case.
If we reimagine, I mean, I'll come up with a use case, but if we reimagine that instead to a sort of intelligent interface in the business, right? I mean, the thing I'm most excited about, honestly, is the democratization across education.
Okay. Elvira?
I cannot be more agree.
Okay.
And again, just to go back to the point that we don't really need to choose, but
we just have 1 minute left, so you'll have to make it quick, yeah.
So we need to study better our applications, and I believe with a new disruptive technology, we could discover even many more. And yeah, so no need to solve everything with quantum, same as you couldn't solve everything with the CPUs, but fairly and smoothly combine them in one hybrid workflow could actually help to accelerate the progress. Yeah.
James?
Well, it's a hard one to answer, but I think the first way is optimization problems, right? There's a bunch of optimization problems in the organic chemistry world and biotechnology world, I think we're getting closer to solving. There's a bunch of workflow problems in software, so RPA, traditional RPA is completely dead. What we're seeing today in agentic workflows is just so much more advanced than that, replacing traditional workflows with really dynamic software and reasoned software, as it were, agentic reasoning software, is really powerful. But the obvious next step for me is embodied AI, it's robotics. And I think there's going to be a big shift over the next 5 years as software gets out of our laptops and into devices, whether they're vehicles or otherwise.
Okay, Marco, I'll give you the final word.
Thank you.
Yeah.
So I agree with what James said. In particular, the field of optimization is going to be really, it's going to benefit a lot from AI ML and from quantum computing. I would also say from a financial perspective, we see a lot of use cases. We have a list of use cases. That's why finance has been identified as the first industry sector to benefit from quantum computing, because we need results in real time, and we need them, and we have a lot of problems. So one problem that is actually really interesting is everything related to fraud detection for credit card transactions, and also anomaly detection in payments, automatic detection of sanctioned entities in payments, and so on. So all these problems require machine learning, but with classical computing, there are a lot of false positives and false negatives. So that's where we see the power of quantum computing making a big difference.
Great. Thank you all, and please join me in giving a round of applause for our panelists.
Please welcome to the stage Goldman Sachs Head of AI Research, Bing Jiang, UBS's Head of Electronic Trading Quant's Center of Excellence, Giuseppe Nutti, Daisy AI's Deborah Yang, and our moderator, Evidence Editor Luke Bedema.
Thanks so much. Marco very helpfully there teed up the purpose, I think, of our conversation, which is, in a sense, to go back to the source and to think about the fact that the field that we've all gathered here today to talk about, AI in financial services, is like arguably more driven by research of different kinds, pure and academic, applied market and commercial research, than certainly any other that I can easily think of. So I hope this will be a useful conversation about what is driving the realization of end-use value, all of the subject matter that we've heard throughout the day, starting with research. So it's a pleasure to have these speakers joining. And I think we bring a diversity of perspectives, obviously being Giuseppe within banks yourselves and engaged in the implied research side of things. And Deborah, delighted to have you joining as well to talk more, I think, about the commercial market research that supplements the identification of value-adding uses of AI. So I hope it'll be a useful conversation in that sense. Bing, it would be terrific to start with you. Sure. You have a purview for the research that Goldman does, and it would be really helpful context, I think, for this conversation to just say, like, what are the imperatives that shape that research? What are the most important things that you have to think about day in, day out?
Sure. So I would say responsible AI, I would say is one of the most critical topic, especially for AI adoption in financial industry. So while sitting here listening to the previous sessions, actually I noticed that almost every session more or less touched upon this responsible AI, even though they didn't say responsible, but actually the trust, there's transparency that all related to responsible AI. So, by the way, I spent 20 years in tech industry, so I just joined Goldman last year. So I got to take a fresh look of the financial industry. So I think for financial industry, this topic is even more important. I just to elaborate a little more about the responsible AI, right? So the AI need to be secure, need to be transparent, need to be safe, need to be fair, right? So, and also last but not least, need to be accurate. So I will just mention two of them quickly here. So transparent AI, so also people call XAI, so explainable AI. There's a lot of research going on in the field. So start from making machine learning itself more interpretable, then deep learning become like a black box to many people. People complain about that. So nowadays, everyone is working on large language model. It's yet another black box to people. So there's not a lot of research put into that. So people heard about like chain of thought reasoning, step-by-step reasoning, and so on. Right? So we are trying to open up the black box, make people understand how the model reach that conclusion and give them results. Right? So, and then at research stage, we need to make sure when we design a model, we design algorithms, we keep in mind that we want to have this responsible AI as one of the designing principle. And deployment stage, we need to make sure we have a well-established governance process in place. Something we call the Guardrails for large language models, like to detect prompt injection, and jailbreaking, and so on. And also most importantly, like hallucination detection, right? So we want a large language model to be creative, but unfortunately, the side effect is that it hallucinates. So that's actually something comes with the creativity. So we need to make sure that we want to detect those hallucinations.
Yeah. It'd be great just to dwell on that a tiny bit more. That was a conversation that we were having at the previous Evident AI Symposium in June in London, and the one before. If you could just say very briefly how you feel like research into that XAI approach has evolved in that time, really, just in the recent year.
Yeah, sure. So, in the old days when people work on interpretability for machine learning, right? Some example like called LIME, try to create another like simpler classifier to mimic the more deep like a complex model. So that's LIME, and then people started working on make the deep learning neural networks more explainable, right? So something called like layer propagation, try to identify which layer, which weights contribute more to the final conclusion. And then the attention itself, I was fortunate to contribute to that self-attention when I was at IBM. And also get cited by this famous transformer paper. So self-attention, so we can visualize the results, right? So let's say summarization of the documents. We can highlight the document, the phrase in the summary, and then point to people, this is the major information that come from the document. So right now, like when we work on these large language models, most of you heard about this reference, right? So people see the results, they want to see the citation or reference where you get this summary or these insights from, so they can easily click the link and see. I would put that under the explainability also.
Yeah. Terrific. It would be great, Deborah, before we move into the kind of the discussion on how research drives the practical applications, the use cases, just to get your response, your thoughts from a different perspective from Bing's, but do you see the same imperatives around the responsible, explainable side of things?
I think it's critical to the growth of the industry in the financial services area. We're one of the most regulated industries in the world, and your credibility can disappear on a very minor hallucination. And so we spend a huge amount of time working to, we understand that large language models, we work with multi-language models, and the research that we have to do on all of them we determine and turn on and off depending on which ones have strengths and weaknesses. So we're much more on the application side of understanding the strengths and weaknesses. And of course, there's only so much training that can go into a large language model because it's relatively a dumb model. What it's missing is a layer of experience. We were talking about the importance of understanding the financial services industry's vernacular, the understanding of the firm's language, the type of individual that you want to speak to, the target audience, and be able to have the language model actually speak to the numbers that you present as opposed to loading all this confidential information. So it's really important to build something that is practical. And the way we understand is by 1,000 mistakes, 10,000 mistakes. Malcolm Gladwell talks about 10,000 hours.
Right.
It's 10,000 mistakes, and then it's 100,000 mistakes, and that is the evolution curve for experience to get to more responsible AI.
So those parameters complement the guardrails that you were mentioning, Bing. So with that as the context, I guess, for this conversation, it'd be great to turn to you, Giuseppe, to talk a bit about how research is flowing up into use cases. What are you most excited, involved with doing at the moment in terms of that translation, where you're seeing applied research becoming a capability, a technology, an application?
Sure, and thank you for having me here. We obviously got the white shirt memo. I guess there's obviously a huge amount of stuff going on. I mean, a testament to all these people here. I would say that we somewhat split what is Gen AI and LLMs versus I think what nowadays is called narrow AI. Obviously, Gen AI is the big excitement. We're awfully excited about it. We obviously care a huge amount about governance, especially when it comes to LLM and Gen AI, which is a very important and I would say somewhat new topic. In terms of the actual applications that we're interested in, from the Gen AI standpoint, what's really new is that we have algorithms that can read and write. That is, in essence, what's happening. And this obviously is very useful. Maybe, and this is, what I am seeing is that most of the interesting applications when it comes to Gen AI are really centered around deploying tools that, firms, more commonly in the West Coast, that focus on just that are developing. There's a lot of interest in adjusting this stuff, but fundamentally the real successes are, hey, we have a coding copilot or code generation. Let's use that. And we're not really adding a huge amount. We're just mainly deploying. Some exception, I think, is centered around manipulating the vectors that come out of the sort of LLMs, sort of the embeddings. Those tend to be pretty powerful. So when you look at sort of the news or documents, whether they are for loans or what have you, those vectors can be very, very useful. So we have some interesting applications there that we're studying. I would say that beyond LLMs and Gen AI, the most interesting area for us, certainly for me, is centered around reinforcement learning. Not necessarily deep reinforcement learning, but if you think about it, most people in banking, what they do is they take actions under uncertain environment, hoping that and the reward will probably come in the future. That is basically what reinforcement learning is set out to do, and we find applications of this pretty much everywhere. Think of hey, we have algorithms that route our orders, whether to New York Stock Exchange or to the NASDAQ. We have, algorithms that quote, prices of where our clients, can borrow stock. So many of these applications are about optimizing actions. And thus, we're finding more and more success in applying these techniques. And maybe here, I would say that the area which has, for us at least, contributed the most to successful application is the area that presents, I guess, that solves the exploration-exploitation conundrum. So much in finance is centered around, or traditionally has been centered around, looking back at our history, seeing whatever worked best, and copying that behavior. That's great under two fundamental assumptions, neither of which I think are correct. The first one, that the optimal behavior is somehow in our history. I mean, is it? And then the second is that the world is going to stay exactly as it was, for the last 2 years. These two things are generally not true in finance. And so having, we really focus on creating algorithms and applications that learn. And that learning fundamentally is centered around experimentation. And there's been so much advancement, think of like protein folding, AlphaGo, a lot of, there's a huge amount of innovation around it, but at least in my opinion, at the center of it has really been, balancing exploration and exploitation, using those learning tokens wisely. And that, I think, is a very exciting area.
It was so interesting, of course, to hear earlier today, David from Morgan Stanley and others talk about the incorporation of context into decision-making. On exactly that point, unless you're incorporating novel context, new data, you're essentially falling foul of the assumption that you've just described, assuming that the past will be like the present and indeed like the future. Maybe we turn that over to you, Bing, just to talk a bit about whether you see the same trends in the research flowing through to practical applications, and maybe then a bit on the kind of the broad buckets of actual use cases that Goldman are interested in and that you work on.
Sure. Yeah, I will just briefly add on top of what Joseph just said. Yeah, we see three key pillars. So first one is like increase the developer productivity. So including either software developer or quant developer or even data scientists, right? Like to use something like Copilot to help you to code generation, autocomplete, and so on. A second pillar, we call it like knowledge worker operating efficiency. This includes analysts, people deal with document processing day by day. I try to extracting information from the document. In the old days, people use customized model, BERT model, and now people rely on more and more on large language model or fine-tuned model. And third pillar, it's more like about increase the business growth and enhance the client experience. So as you see, like from first one to third one, we're moving from the impact of the bottom line to the top line, right? So one of the speakers mentioned this morning, it's more and more challenging if you want to impact the revenue. So I think that's the ultimate goal for all of us. So last one, the client experience. I want just give a quick example. Right? So imagine for your portfolio manager, before they go to meet with their client, what if they can just use AI to quickly pull up some insights, customized, personalized, and then generate slides for you before you go to present it to them, all within a few minutes, rather than wait 2 weeks, 3 weeks, right? So that's the example, and I think it's not a dream. I think safely there's a practical use case there. I would say just this three pillar, and then of course everything has large language model as a backbone, right? All the research goes into that over years. I think those all contribute to make these things more practical.
Yeah. Well, maybe we should double click on that third category with you, Deborah, because that's very much in the remit, what Daisy does. Can talk about, how in practical terms you're doing some work that's enhancing that customer experience side, because I think be a broad consensus in the room that's top 5, potentially top 3 most value-adding, most important priority for a lot of the organizations here.
Yes.
How do you see it?
I'm very glad that Goldman and Daisy are doing things that are quite similar framework, which is there's must-do activities and then activities that move the needle, right? And many of us love to innovate and spend the time to amplify the human innovation. That doesn't happen in the past. You need humans for that. So you want to clear up the workload that can be replicated over and over and over again from a compliance reporting and other things that you have a mountain of things to do. The part that we spend a lot of time is getting that feedback loop from our third-party users, from commercial banks, asset managers, even working with some stock exchanges to work with us to get that feedback loop, which then continues to, once you make that mistake, the 10,000 mistakes, you're not going to make that mistake again. And that kind of institutionalized learning can help you start moving from must-do activities more and more to the value add help you raise AUM, help you increase marketing effectiveness, help you with sales enablement tools.
Yeah, that's what I was certainly struck by in thinking through this conversation, was the kind of layering of different types of research on top of one another to build towards a particular enterprise goal. There was also something I suppose we could get into. We've gathered here, obviously, by Evident in the context of the Evident Index, and it'd be remiss not just to make the point that some of the banks and organizations that are being ranked have applied research divisions. Some have very large ones, some have smaller ones, some don't have any at all. I wonder if I could get your thoughts, Giuseppe, on the value of research divisions. How do they serve as a differentiator, as a competitive advantage? And it would be interesting to turn the same question over to you, Bing.
Sure. I mean, I'm going to say there's a lot of value, since that's my job. For the avoidance of doubt. No, I suppose it's a super exciting time to be researching this area, and I do think that I have probably one of the most exciting jobs in banking in general. Now, there is a catch, though, which is, like, at the end of the year, you've got to have something to show for, at least, and I think this shapes very much the research agenda. I think when we look at, what topics do we research, how quickly can we deploy it, how much is it going to move the needle, and how measurable that movement is going to be. Like, those are things that sort of shape, hey, we might have one or two more speculative research ideas, and they may run for a few more years, but you can't just have those, because you're going to have a down year, and that's not going to be a good look. I think you want to have also things that you are more certain, maybe they're a little bit less exciting, but you are more certain, and having the right book of work, I think, is quite important. Not only that, I would say what is quite important is to match the right people to the right, kind of book of work. Generally speaking, researching the moonshot may be exciting, but not that many people have the whereabouts to, do something for numerous years without any real results. Right. It takes a certain type of personality, whilst, maybe, that personality might feel pretty bored if they are doing, stuff that churns more quickly. So all of that really features into what I would say is the, finance and banking research management.
Yeah, and obviously we heard earlier today on that conversation about experimentation. Experimentation for experimentation's sake is not going to last very long. There has to be a view to value creation and to at least the provable learning that you're describing, Deborah. So let's talk about what's most exciting now, because I think what we've teed up for the rest of the day is a conversation about the big topic that feels like it's coming down the road. Obviously, there are some practical and in deployment examples, but the language around it isn't really settled, which is the agentic systems side. But what else is there? Maybe we stick with you just for now, Giuseppe, to give us a sense of the kind of the big building blocks of that other agenda for research and the most exciting part of what's coming down the line.
Sure. I mean, there is so much, really. This would be a couple of hours, at least for me. But we've
got like 5 minutes.
5 minutes, great. 1 minute for me. Look, the agentic stuff has been talked about, and I think there's better people in this room and certainly on this stage that are equipped to talk about it. But it's certainly very, very exciting. Maybe the part that is most exciting to me from an academic standpoint, for sure, is what I often termed sort of conditionally activated neural networks, but more broadly, I guess, is the idea that the standard operation of neural networks, which is the building block of all the exciting stuff that we're up here talking about, is that the entire thing has to be computed, or at least a constant portion of it, regardless of the task. This, if you think of our brain, would be, ridiculous. Whether I lift a glass or I try and explain the theory of relativity, which I don't understand, there is a clear proportionality. This is a topic that's been researched certainly for many years, but hasn't been cracked. There's early exit, networks. There's a variety of solutions. Nowadays, the ubiquitous mixture of experts is a way to conditionally activate a neural network. But that proportionality with the difficulty of the task is really, I don't think we're quite there yet. But the power of that, since we've had numerous panels before here talking about like energy consumption, time, what hardware do you use, NVIDIA stock price is through the roof. All of those are fundamentally the funnel that is stopping the real leap forward. And I think researching that area is probably one of the most exciting things out there.
Yeah. Well, I'd love to turn the question to you, Bing, and maybe just to sprinkle something else in there. I'm sure most of the people in the room will have seen reporting and research around a potential plateau in the performance delivered by scaling LLMs in the way that we've seen in this kind of current era of development. Perhaps you could kind of answer the same question as Giuseppe. What are you most excited about in the context of that potential realization and the turn to other techniques, other approaches for delivering performance?
Sure. Yeah, so suddenly the agentic somehow become the most popular word these days. So I saw many companies now try to collect their product with.
It's too late to change the slide later.
Put a label there. Our products are agentics, but it itself is not new, right? So as Luca just said, there's so many building blocks under it, and years and years of research going into it. So it's not like overnight somehow suddenly there's AI agents. So in terms of research or direction, one of my most favorite topics has always been reasoning. So in my view, reasoning probably is one of the most important topic between going from AI to AGI, right? So most of you probably saw those like jokes online or some silly example people share, like AI is like giving very silly answers. So that's one example of common sense reasoning, which I think Giuseppe mentioned a little bit there, right? Common sense, so even for something like maybe 5-year-old or 3-year-old knows, but the AI sometimes makes those silly mistakes. Then a few other examples in terms of reasoning, because this is not an academic conference, I will not just pick a paper, I just stay a little bit higher level, right? So reasoning itself is not just one area, it's a large scope there, so itself. Let me give you a few examples. I mentioned earlier explainable AI. The entity itself can rely on reasoning a lot, right, to show people how the model going step by step and then eventually reach the final decision. And then for finance, a few important examples like temporal reasoning, for example, right? So there's like all the different events happening in the world for finance, or let's see if there's the weather. There's a thunderstorm somewhere, then there's affected shipment, right? For people who work on commodity, so you may know that's important. But then can AI figure out the sequence of all the information, events, and the relation of that? And then another example for finance is causality, or people call causal inference. So I know some of them have been interested in that, like, let's see, they want to figure out which factor in the macroeconomy changes contribute to today's market move, right? So there's so many things happening, everyday wars and inflation and so on. So causality that's also part of the reasoning. So try to figure out what caused that.
Yeah.
So it's all lots of interesting, exciting research going on in this
Undoubtedly.
space.
Deborah, we'll give you the last words. What most excites you? Emerging from the research your company's doing, or the academic and peer research that you see elsewhere?
Well, I'm most excited about the promise of mass personalization. So this is something that humans are not able to do. You target market, you speak to one audience, and you can only have maybe 5, and your financial services only really resonates to a certain groups. My daughter is a next generation investor. She finds all the finance jargon terribly uninteresting. But if you mention that she likes musical theater and you put it in the context of something that she understands, and the story of investing resonates, then you can break down investing gaps among different groups of people, the female investment gap, and lots of really interesting things by breaking down language. And the machines are very capable of doing that at scale, right? So this is one of the things I'm most excited by.
causation, sequencing, hyper-personalization, a revolution in the architecture. That's exciting enough. We'll close it there. Thanks so much for listening. Thank you to our speakers.
Thank you.
Thank you. Thank you very much. Ladies and gentlemen, we're going to take a short break. We'll be back with our next session at 4 p.m. 4 p.m. Thank you.
Please take your seats. Our program will begin in 5 minutes.
Maybe we should all just get along with each other and put away our problems, or whatever it is. We just need to forget about everything and just have a good time here tonight. It's really that simple.
Please take your seats. Our program is about to begin. Please take your seats. Our program is about to begin.
Please welcome to the stage TD Bank's Senior Vice President and Chief Analytics and AI Officer Luke G., DeepSea's President and CEO Steve Shillingford, JP Morgan AI Research's Multi-Agent Learning and Simulation Group's Sumitra Ganesh, PhD, Cognaze's founder and CEO Vahe Andonians, and Evidence editor Luke Bedema.
Terrific. It's good to be back. The time has not yet come where people can send their AI agents to the last mile of a conference and have them report back. We might be living in that world soon, and I actually think that this conversation could be a step on the way there. But thank you so much for coming to listen in to what I think really is the headline of this conference, the two panels that we've lined up towards the end of the day to tackle with, to grapple with a question that really is front of mind for the industry, for the media, I think for the public to an extent, and it's a topic that's really crashed to the fore recently, but has deep roots in the science, research, technology layers that banks and other organizations have been laying down for a while. So I hope we're going to be able to talk about what we talk about when we talk about agents. We're going to be able to level set a bit on how adoption of agents will actually work. Once we've started to disentangle what I think at the moment is quite an unsettled language. It puts me in mind of some of the big waves of technological change that have come in the past, and there was a time where people could have disagreed about what a website was. That sounds crazy now, but they could have and did. And I think there is a bit of disagreement about what an agent is. So I think we're going to try and disentangle that, as well as talking about the real value-adding capabilities that can come from human model, human-machine partnership. So we've got a great panel to do that with, and it would be awesome to start with you, Sumitra, not least because this is the core focus for you, one of 8, I believe, at JP, pushing forward the frontier of agent capabilities. But I understood when we talked before that this is not the start of the journey for you.
Yeah, so interestingly, I started working in this area when I joined the AI research group in early 2019. So right from the beginning of the AI research group being set up at JP Morgan, multi-agent systems was one of the core focus areas. We worked on building reinforcement learning-based agents, and we worked on building multi-agent simulation of markets and very large complex economic systems like the US mortgage market, for instance. So it's a very varied space, like you said, Luke, in terms of what is an agent. It's not something new. It's a concept that has been in the field of AI for decades, going back to the 80s and 90s. And interestingly, it's also, there's a parallel concept in economics as well. But I do think that there has been a step change in the types of agents we can build and the power with the advent of LLMs and generative AI. So the field has been changed, definitely, with these new technologies coming in.
Yeah. Well, I'm the person on the stage who can look like an idiot, if convenient. So I'm going to ask the question, Vahe, what is the difference between an agent, in your mind, and the current generation of LLMs that we are so used to hearing about and using now?
I think it's actually much more difficult to define what an LLM is than what an agent is. Agent, I think, is rather easy because it is a series of 3 things that you need to have. You need to have a sensory input, you need to have a reasoning engine, and you need to have tools to do some action. And then you give it a mission, like book a flight for me. And it gets the sensory input from websites, does some reasoning engine, and then has of course, the possibility to take, I don't know if this works now or not, possibility to take actions.
We can't get the agent to fix that. It's going to have to be done yourself. Is that all good?
Yeah.
Awesome.
So I think that that's the clear definition of it. much harder it is to understand what an LLM actually is, because that is something that is debated not only in science, but with lots of money. Is an LLM really intelligent? Is it not intelligent? Is it just a new computing architecture? Is it, is it just a non-deterministic platform? So it's very hard to define it right now. We don't know. But it is very exciting. And it gets very exciting because LLMs have one property, which is they can dream. And I mean it in exactly the way that I say it. An LLM is actually, I think, a dream machine. So you give it a task of, imagine you are a business analyst, imagine you are a rating analyst, imagine you are a trader, and then do some action. And the interesting thing is that it is very good at mimicking that. And now when you take several of those LLMs and have them communicate with each other, then you achieve something wonderful because they can challenge each other and they can find new paths, new ideas because of challenging each other. And that is, of course, the beautiful thing of it.
Yeah.
The difficulty, of course, is you need to channel this conversation somehow, because if you don't, it can very easily get out of this, what is called a policy zone, and then, do some weird stuff.
When you say policy zone, what do you mean?
Yeah, so a policy zone is you want, so generative AI is obviously not deterministic, so you don't have this, is it?
Yeah, I think it might be best to switch unless.
Okay.
Sorry.
So, yeah, no worries.
Is that better?
No idea. Yeah.
Thank you.
Perfect. So it's a non-deterministic platform, and you have to think different when you think about generative AI. There is not necessarily an answer is correct or wrong, but it is somewhere in a spectrum of being correct and wrong. And what we mean when we say policy zone is it in that spectrum where you would accept the answer or not?
Right.
And that's very important because the error that it makes is cumulative. So along the context window, when it once leaves or is close to the edge of the policy zone, it's very easy to jump out of it. Right? And that's what you need to challenge, to make sure that it stays where it does and finds an interesting solution to a problem.
Yeah. Steve, you put to me a very interesting kind of concept here when we were talking before the panel about how organizations are going to consume agents. And I thought that, in a way, that makes sense to me. The realities of actually getting an agent as such into use in an organization. I wonder if you could talk a bit about the consumption model for agents, as it were.
Yeah, I think the framing is really important because I think we've heard a lot today about sort of deploying AI as an advisor or as a generator of ideas and dreams and sort of new concepts. And I think that's great, and there's really interesting use cases there. There's the other side of sort of AI, which is how can I, in essence, automate or give the mundane to the machine and let the humans who do their best, most creative work sort of, hovering above that, more capability. And I think that agents in that context are really doing the heavy lifting of a lot of, especially in financial services, of the deterministic work. The work in the back, front, middle to back office, affirming a trade, confirming a trade, clearing a settlement. The things where it's a 1 or a 0, there can be no hallucination. And I think what teams struggle with in terms of building those applications is it's not just all about the model. It's not just is it Llama or is it somebody else's model. It's really about the packaging of that training and inference task against what does ground truth and what does sort of right look like, and how do you codify that over time. And I think the combination of that package is what really can make an agent super powerful.
Yeah.
And imagine that for a number of different tasks, and you sort of concatenate it along like a train with boxcars, right? All of a sudden now you have a very complicated but very powerful sort of multi-agent train that can really, not only power the organization's efficiency and sort of resilience, but I think, I heard it earlier this morning, which I loved, which is how do we actually make money? How do we actually find, what I like to call competitive alpha, right? Like, differentiation amongst my peer set. And that's, I think, we all lived through the Gen AI bubble. I say bubble, but you know, it was a hype curve, right? I think that now that that's subsided, we're really trying to use agents as the consumable package that we can deploy incrementally and get real value.
Well, I'd love to turn that over to you, Luke, in a city that is big enough for both of us. But the idea, I mean, you're coming at this from a bank perspective, kind of unique on this panel, but not in the room. It would be awesome to hear how you're looking at the balance of human model, human machine in that partnership. What do you see as the value creating aspects of this, what we've termed the kind of the arrival, the revolution around agents?
Yeah, sure. I mean, we operate in a very complex environment in TD. We've got a full suite of financial services that we offer to our customers. And so that brings with it a blessing and a curse. A blessing in that we can meet a bunch of financial needs, and a curse in that our agents and our colleagues need to understand a lot about a lot. And that's difficult. And in the scenario that Steve was mentioning in terms of a deterministic outcome, the beauty of that is you can hand the mundane activity to the agent, and then our skilled people can be involved in the more skilled pieces of work, whatever that may be. I think what's interesting is as you start to get into this and you start to work with compliance and risk functions, obviously we're heavily regulated and that can make things difficult. You start to get to a point of, you know, we make an assumption which humans are doing this perfectly. And the reality is none of us are perfect. I'm very, very imperfect, as you can see. And as a result of that, we know that actually we need to baseline first. And as we baseline the human capability, that's what allows us to think about what could be possible with an agent, and therefore, can the agent be more consistent? The reality is, the agent will be consistently consistent or consistently inconsistent, but it will be consistent. Unless, of course, we're getting into an LLM thing, where actually it could be a little bit, there could be some level of dreaming, but actually we can guardrail that.
Yeah.
Can I just, I think there's one thing is very important though, right? You're all from banking. You know how to extract information from a PDF, for example. Why would you even do it with an LLM? You're doing it with an LLM because it is not that easy, because that field is not always at the same position, that is not always written the same way, that even extracting the easiest thing, like a maturity date of a credit agreement, requires actually lots of reasoning. So saying that we don't need hallucination, I think, is just not going to work. Because if you don't have this hallucination, you wouldn't even need an LLM. Do it with RPA. Why are you here even? You can't solve it with RPA. You need actually hallucination because you need a tool that can find a new way of extracting it without you telling it to the tool, so that you can do the fun stuff, right? So I think that we have to be very careful how we define this hallucination. I think it's essential for the work that we wanted to do, and if we would not have that, it would not be able to find any solution to any problem. It would just be able to repeat exactly what you told it, right?
So are you saying, Vahe, that you see the problem-solving capability of an agent and the hallucination, or just the description you gave around dreaming, as more coupled than most people?
Yes, you cannot, well, I wouldn't say most people actually, because I think it's a very clear thing. You just think about this. If it is fully deterministic, then it can only repeat what it has ever seen before.
Right.
Okay? So that would be a Google search engine. If generative AI would not be able to hallucinate, any answer that it gives to you is something that it saw before at some point. Mm-hmm. That's not what you're experiencing. You're actually training it on a much smaller set and then letting it new data points to it, and you trust that it will find a solution to the problem. Mm.
But
please.
Please. I think it depends on what you define by hallucination, right? Just because it's sampling from some distribution over tokens doesn't mean it's hallucinating, right? Well, that's part of what it does. So it's, I think we have to be a little bit more careful about what we define as a hallucination. Yeah, exactly. Right? So yes, it is producing patterns that it was never trained on before, correct, but based on what is in its context window, right? So I think we typically think of hallucinations as places where it's not even just making a mistake. So for instance, agents might make a mistake in terms of picking the wrong field, even though it exists in its context. Hallucinations is when it starts making up entire concepts that simply don't exist. So it is not a reasonable kind of draw from your distribution. So anyway, a little bit off topic, but
hallucination is defined though, right? Hallucination is defined, right? It is an answer that is not represented in the training data. That's the definition of it. And per definition, if it always would answer that it is defined something in the distribution set, then you can just draw from that.
I will have to disagree with that definition.
Not because I'm sitting next to her, but I'm going to agree with Sumitra here 100%. I think where you sit matters here. Like hallucinations in a generative context, super interesting, can create new patterns and new connections and build new quote-unquote neurons. But in a setting where it has to be a 1 or a 0, especially in certain capital markets functions, you can't hallucinate. You can't hallucinate because you risk breaking a trade, you risk having a fine, you risk a lot of trust. You risk a lot of reputational damage if you get it wrong. And so I don't think you're wrong. I think it matters what you're talking about.
Yeah, but again, if it would be something where you can exactly say how to do it, okay? So simple question. Can somebody tell me how to identify a table in a document? You cannot define that. It's not explicit knowledge. And you will need hallucination in the model to be able to find a table in a document.
So that's the first.
And as long as you don't have that part of it.
So that's the first step of extracting data, right? Absolutely, 100%. That's learning. You have software routers that will, essentially model route and figure out where the content is. But at the end of that process, if I'm affirming that trade, I sure as hell better not hallucinate.
And of course.
Right?
You're right. But it needs at the beginning.
Yeah.
The reasoning part.
That's
in the
the
middle.
content, right? That's the feeding of the model.
And without it wouldn't find the information, right?
Yeah.
So that's the point.
If I may, one of the big themes, I think, in this conversation should be the definition of entitlements, permissioning, creating the estate within which the agentic systems that we're talking about can operate and perform tasks. And I think that might be something good to turn to because that's really where the mitigation of the mistakes, hallucinations, etc., however we want to gloss that, that's really where they can do damage, where they exist outside of that permissioned environment. So I think a lot of organizations ought to be thinking about that. And I wanted, Steve, that's something you presumably have thoughts on, and
I also
maybe
think
Luke as well.
It's so hard not to get down at the bare metal of these conversations around, okay, what does this mean? What's the meaning of that? And like sometimes you have to toggle up and say, what is the use case? We're all living in a regulated environment. And so there's always at some endpoint going to be a human in the loop that either ratifies a series of dispositions or on a disposition by disposition. They used to call it 4-eye, 8-eye checks, right? And that's what we're trying to sort of economize away. And I think that depending on where you are in that automation, where you're deploying LLMs or where you're deploying just straight machine learning curve fitting, the idea is you sort of know, I can't remember who said it today, but you should know where you're ending and then back into what the right agent structure is. And is it one agent? Is it multi-agent? Is it a bunch of tasks that form a use case? I think that's a really important consideration when you're deciding where to deploy.
Luke, Sumitra, perhaps you first. How do you see that challenge of, like Steve is saying, defining the end goal, the limits, and how do you think about that at TD, in fact?
Yeah, I mean, I think Steve made a point of, each one of the use cases that we're looking at are different. The data's different, highly regulated, exactly as you described. We have to be really, really sure. And we have to work out whether there is a save and a benefit to building a system like this, and then actually work out whether the human in the loop is qualified at the end to actually check the output. Those things all have to be true before we even put fingers to keyboard. And so the reality is that we have to look at our data really specifically. We have to make sure that the quality is strong. We have to make sure that it's labeled appropriately. And then we have to make sure that we build the routines with the human so that they check the output and they don't just take it and go. And we're really clinical on our side and where we're building in TD, which is there's a human in the loop in every step that we do right now. Now, we may get to a point in the future where that's not necessarily the case, but right now, I would say that's definitely where we are.
Yeah. I just want to say, if there are thoughts, observations, questions in the room, just raise your hand and we'll get some mics over. But if I could just turn it to you, Sumitra, quickly on that question of, are we really talking about moving to a place where there are no humans in the loop with agents? Or is that condition going to have to be maintained throughout the innovation development we're talking about here?
I think there are kind of two good reasons we have humans in the loop right now, and one not very good reason. One is, that most of these systems, and these are really systems around LLMs. LLMs are only one piece of it. Any agent-based system right now requires a goal, and most of the systems we are building are reactive. So essentially, humans are providing the goal. So the whole agent-based system gets fired off when some human comes and asks a question, sets a goal, might be even clarifies the goal. So I think that's a valid way, and that will probably continue. We will probably evolve to more proactive systems where agents come up with their own goals. But a lot of the systems we are building are places where humans are providing the goals. I think the second important ingredient is knowledge, and especially in a domain like finance, where when they're interacting with humans and trying to replace human workflows, a lot of these require a lot of domain knowledge and nuance. If you think about the types of credit analysis we do, if you think about the type of market analysis reports that we produce, et cetera, there is a huge amount of knowledge, and part of that is what humans are providing now. When we deploy these human in the loop, and they're providing this feedback and information. So what we are really focused on is how can we build agents that can actually learn from this on an ongoing basis to improve over time, because I don't think it's really practical to really sit down every person in the firm and say, okay, now let's get all the information that's in your head, because that's where some of this resides, into some structured form. So I think those are two good reasons. The third not very good reason is what Luke alluded to, is that there are of course regulatory reasons why you need it sometimes, but we don't have a lot of trust right now in these systems. So we have to slow walk it to release it to people who are experts, who can verify the output and go, okay, that looks fine, you can take that action, that's fine, that's fine. But that's kind of babysitting these agents at this point, but hopefully it's like training wheels. At some point we will be confident enough to let them go.
I like that idea. Yeah, babysit them in the short term. So do you see the kind of frequency of human intervention getting lower and lower and lower as the systems improve?
I think that is what we should be aiming. That's our objective, yes.
Terrific. Do you want to tell us your thoughts?
Yeah, in the context of the previous conversation about hallucinations and the whole thing within financial institutions, could we say that all the training models must be non-deterministic to allow for inference and reasoning? But once you finish training, the deployable model has to be deterministic?
The way I think about this is system one, system two thinking, where you the training and inference is really system one, right? It's really doing exactly what you described. And then I think system two depends on what is your use case? What is the goal of the agent or the process that you're trying to automate or solve for? I think when I talk about sort of above the line, below the line's all the back office, capital markets, sort of boring work, but super, super important to get right, has to be deterministic, right? It's like, otherwise, it's consent decrees, right? Above the line, if you're giving a wealth advisor some, tips and tricks or, alpha for a trader to go after, the penalty for getting that wrong is not as severe. And I think that's kind of the toggle in this, I'm just using system two as a label. Sure. That should be your heuristic for whether or not it's deterministic or not. If it's a 1 or a 0 and that's got to be the answer, it's pretty obvious. And also the penalties matter.
I think, can I just add something here to it? Because I think there's a little bit of a confusion that the outcome needs to be deterministic. The process can't be deterministic. And if you want an AI model to be deterministic, it's very, very easy. Just don't use transformers. Go back to LSTM. Why weren't you using it? Because it didn't deliver the result that you wanted, right? And it was very deterministic, because the same input would always give you the same output. In transformers, it doesn't, because it has a context window. Now, if you remove this context window entirely, you end up with a very deterministic system, but you had that system already. And it didn't solve your issue.
Can you move from the LLM to a regular system after
that's the thing, right? You're absolutely right. That's the importance is exactly in this. You want the outcome to be deterministic, right? Because of, and it's not only because we are in a regulated industry, you also want it in non-regulated industries, okay? So you want the outcome to be deterministic, and you want it to pair with all other computing architecture that we have built, which are von Neumann architectures, and they are very deterministic. So you need to come through a non-deterministic process to a deterministic outcome. And yes, you can do that, and I think after this, there is another panel where people will probably show exactly tools and methods to achieve that point of view.
I think there's a question back here.
Speaking of more down-to-earth things, have you encountered or thought about the more pragmatic aspects of having multiple agents, like in agent description language? How would you find them? How would you maintain them? Agent ops, when the core foundation models underneath the agents get updated, what do you do as the data drifts and so on and so forth? So the real nuts and bolts of having agents in the wild 6 months later.
Yeah, I think this is a fantastic question. Where the rubber hits the road, we need to talk about permissioning, about interoperability. Do you have thoughts on that, Sumitra? Maybe we work this way. Go ahead.
No. So we've actually built an in-house agent framework because precisely as you said, like if you're trying to build multi-agent systems, you need to have some framing around what is the definition of an agent, what are its capabilities, how does it actually communicate with other agents, and how do you kind of demarcate what is the role and responsibility of an agent and the corresponding entitlements and tools that you attach to the agent. So one thing I want to emphasize, just if I may make a point like from this discussion, I think it's very, very important to keep in mind that agents that we're building are not just LLMs, to your point also about determinism and non-determinism. So the LLM is just one piece of it. There is, there is a whole system and architecture around it. So if you think about any typical agent, one of the important pieces it has is memory, right? And with an LLM, you already get this short-term memory, so you can inject things into that working memory of the agent. But what we also find highly effective is to have longer-term memory, and in terms of what the agent can learn over time and persist. And so this whole notion of, if you want to get to your, when you talk about a deterministic outcome, for an agent, it is always taking actions in the context of all the information it has at that particular point in time, right? So there's a temporal aspect to this as well. So the way you get to better and better outcomes, more correct outcomes over time, is to make sure that you are actually injecting the right information and the agent is learning and persisting the right information over time.
No,
Sorry.
Please go on.
Yeah, I'll stop there, please.
I just wanted to sort of comment and underscore what Sumitra said. I can see a world 5 years from now where really agents proliferate. I'm not going to say it right. They're everywhere. And much like exchanges are today, where you have like exchanges that are dedicated with sort of certified agent stacks that work and interoperate, and an agent from JP Morgan can communicate with an agent from Goldman Sachs and actually, automate a particular process, with that outline that Sumitra talked about. Makes a huge difference, and I think that will catalyze adoption over time once we kind of define what the stack is. And to her point, which I really like, is it's a whole series of things. It's not just the LLM that matters in that stack.
Well, we're going to hear a lot more about that from some more rockstar speakers in a moment. So before we close, I'd just love to take that question from the back, and then we'll very quickly go round on what we might talk about a year from now when we talk about agents.
I love to talk in use cases. I come from banking and have brought AI workers and coworkers to Shopify brands. I'd love for you to tell me on the calendar when you think your killer use case of AI workers will be out there in production.
You've asked the question for me. Very nice. Go ahead.
I'd say about a year. Like we have pilots going out right now. And I think the first use cases are going to be fairly constrained in terms of scope, essentially to be able to guarantee that you get a very high level of performance and reliable performance from the agent-based system. So I think it's going to be about a year's journey to get to a point where some of these things are in production. But I think there's a huge amount of potential impact here. Luke and Steve already alluded to many use cases, but we are really seeing several use cases where you can cut down the amount of time it takes to do something from anything from several hours to several weeks to a matter of minutes. So it's really about, I think, at this point, really getting the performance to a place where it is reliable, consistent, and we are ready to let that kind of roll into production with those guarantees.
Just briefly, are you in agreement on that? Maybe Vahe, Steve, Luke, and then we'll finish.
Yes, of course. I mean, to be frank, one of these gentlemen is my client in the area of extracting financials out of balance sheet, income statement, and other documents. And I think we achieved some successes there. You can definitely go down from hours or 45 minutes to minutes and seconds sometimes even. And there are other use cases too in the area of processing documents. That is definitely an important use case.
Stephen, Luke.
I think the only thing I would add is I think it gets really interesting when you start to think about multiple agents and the potential compounding of errors if you get this wrong. And so we have to be really tight on every one of these, right? And understanding the interoperability between them is critical. And the moment as we move to production, to go back to the last question of, it sounds like our timings are probably fairly similar, actually, Sumitra, in terms of how we're thinking about this. But as we go to production, we've got to make sure that we are contained and we're clear about what we're trying to achieve. I think any of these that pop create a massive problem for us and for our customers. So we are tight on the benefit for the customers. If you're not clear about what you're getting back for this and the customer will win, then it's basically not worth doing. And I think that the reality is that I'm really excited about the opportunity, but I'm also realistic about what's possible in the time that we have. We're learning every time we deliver a use case, and the amount of learning that we get fuels the fire from our seniors. They want more, but the reality is this isn't cookie cutter. This is actually something that we have to look at very specifically for each one of the deployments.
Yeah, and I'm not a forecaster, but I agree with everything they said. I think there's going to be a moment in the next year where people come up with not to go full nerd, but like Kubernetes version of the agent stack that looks like something that everybody can get on board with and start deploying, to Luke's point, sort of consistent agent interoperability, and then start just demonstrating, okay, what use cases are going to work the best initially, and then learn and grow. I think that's got to happen in some way to really kind of standardize in some ways. Someone will do that.
Well, we might be about to see some of those someones, so we'll move on to the next panel. But thank you so much to each of you and to the audience for taking part.
Please welcome to the stage Microsoft's financial services industry lead, Jacqueline O'Flanagan, Salesforce's Executive Vice President of Product and Industries Marketing, Patrick Stokes, Sambanova Systems co-founder and CEO, Rodrigo Leung, BlackRock's Head of Tech Sector Fundamental Equities, Tony Kim, and Bloomberg's Jackie Davalos.
All right, everyone. How's everyone doing? I feel like we were leaving off on one of the most interesting topics today. It's kind of how we bring all of this together. Patrick, I feel a little conned. You didn't bring your hat today.
That's a ridiculous photo. I don't know where that came from.
Well, I would love to kind of kick it off with maybe some of your observations from that last panel on agents and kind of from your perch at Salesforce, how you guys are thinking about this. I mean, it's kind of a big topic of conversation, not just from who's building it, but then ultimately where we'll get to in this discussion about how to integrate it.
Yeah, I mean, I guess I'll start by being a little bit spicy. So I agree with kind of the take of the last panel that we're going to move into a world where we have agents potentially everywhere. I think it'll happen faster than we think. I don't think it's 5 years out. I think there's a world where a year from now we'll look back and think, I can't even imagine a world where we weren't working with agents, similar to the way we think about maybe mobile phones now. But the spicy part is, I think we're kind of there already. I think companies like mine at Salesforce, companies like Microsoft, have already put forward this new kind of idea of an agentic platform, a platform that can connect your data to an LLM, to automation workflows in a complete kind of trusted system that you can build on top of and roll agents out. I think the platforms now exist, and I think we're seeing, certainly in the last short term, 8 weeks or so, a huge surge in companies and businesses starting to adopt that. So I think we're there. I don't think we're thinking about it anymore. I think we're now delivering it and executing on it.
Let's pick up on that. Jacqueline, why don't you kind of walk us through how Microsoft thinks about integration? I mean, like, one thing is having the tool outside of the box, and then you bring it into, an institution as kind of specific of a use case as finance. And what are some of the initial observations you've seen as you've seen some of these actually, make it into this new tech stack?
Yeah, and I would say if we look back possibly a year ago or even 18 months ago, the world was a very different place. And so at that point, we launched Copilot. Other companies launched various tools as well. And those were really the infancy of what we were seeing with AI. And so we've seen a lot of take up with these tools over the course of the last 12 to 18 months. But you also had to think about governance, organizational change management. And as organizations started to embrace and become more familiar with AI, I think they've become more comfortable in embedding it into systems, operation, usage, and so on and so forth. And so when you think about, and Patrick and I were actually talking about this right before this, it's been a bit of a big week for Microsoft. And so we've made significant announcements at Ignite, most of which were centered on agents. And so when you actually think about the tech stack for agents, and Steve actually lined it up perfectly in the last panel, but now what we're starting to see is where people were originally embracing Copilot, now they've moved from Copilot into Copilot Studio, into Copilot for AI. And so now you have a full stack where you can actually use kind of standardized tools, but then move into a more agentic type model. And so we're starting to see organizations take that up. I would say probably even within the last 48 hours. The number of agents that I've seen even created in our own team and how people are starting to use them and think about it, it's astronomical. And so to Patrick's point earlier, where we are today and where we are a year from now, people are using it today. And it's how will they cohesively use it to drive productivity and operational efficiency across organizations is going to be a total game changer.
Tony, I'd love for you to weigh in here, kind of, from the bird's eye view. You run the Tech Center Fundamentals team at BlackRock, and like Jacqueline said, we're 18 months in. Are you where the market should be, or do you think that the market is where you think it should be, kind of as we see this adoption pick up, or has there been anything that surprised you about that adoption up to date?
Yeah, I wear two hats. So I lead the investment side, but I'm also building an agentic system internally. So I see two perspectives. The investment perspective is where's the use case? People are wondering where these use cases are. We're wall-to-wall Copilot, by the way. We have 20,000 people Copilot. But I think people are looking at the average investor is like, well, there's all this money going in, And where are those real big use cases? And so there's still questions there. I would say in general, that is the perception that, and this agentic future is basically, most investors don't see it yet. They ask, I must get hundreds of questions about use cases. What's the use case? What's the use case? And so that's the investor's perception. And I must get 10,000 questions on ROI. What's the where thou is the ROI?
What's the ROI of an agentic system?
So then there's reality, and then building an agentic system. And so that I started this process 15 months ago. The first 6 months was just wrangling people internally. Nothing to do with AI, just organizationally, different teams getting wrangled together, and then starting building different pieces of it. And I'm sure Patrick can comment on this as well. But and the goal is to, this ROI concept is not just something much above the Copilot or a chatbot on a RAG database, but to really change the workflow. And so it's like the dog eating the dog food. We're applying it to the investment research and investing arm. So we're building that to transform the workflow of investors.
Rodrigo, maybe weigh in here a little bit, because there's a lot of different tools out there. And so part of the challenge, I'm sure, for some folks in the audience is not just picking, but then it's weaving it in. But then also, what if it doesn't work? How easy is it to kind of pick up another solution along the way? How do you think about the integration process, but also what happens if you need to switch gears?
Yeah, I mean, it's, look, we're in the lower part of the stack, right? Someone we build the chips, we build systems, we build this platform that allows us to let our customers use open source models and bring in kind of the best of the best that's out there, and then use them for their private application. And that's really what we do with enterprise AI. Turns out, kind of what happened over the last 12 months or so, a lot of people started using that same platform to figure out, well, how do I experiment with this? Especially with infrastructure, it's extremely expensive to experiment, because you bring in a model, you do all the work tuning it on a particular hardware platform, and then you're not sure if it's the right one. Now you got to switch, and you got to redo all of that work. And so one of the things that SummitNova started thinking about is you need three things that you want to enable people to do when they're thinking about experimenting with agentic. One is you need flexibility, right? And so we created this platform that allowed you to just bring in hundreds, thousands actually, of different agents. And there could be small variants of different ones, and put in a single platform, one system. You can't do it on any other platform today. And so we create a special platform just to host that, because you want to be able to actually use that within dynamically, not have to wait for you to actually bring new models in. The second one is you need to be able to actually chain these things together and get very, very low latency. I think with agents, it's one of those things where if you take too long, you string 10 of them together, no one has the patience to wait for that. And so we create this platform that allows you to swap very, very quickly, 0.06 seconds in time to first token, so you can experiment. And then, like you say, you can go back. And then finally, you need checkpoints. You need to be able to go back and say, well, what worked and what didn't work? And go backwards. Maybe you tried a few things, and then you say, oh, wait a minute, that's not better than, you have to be able to go backwards and figure out which ones of the combination, especially once you start getting hundreds of agents and you want to experiment, what is the combination that works best?
Do some companies have advantages versus others when it comes to, I mean, Jacqueline, I think of Microsoft, who doesn't use Copilot now. I mean, it's embedded in everything, especially, I think about how engineers use Copilot. For some of the smaller guys out there, Tony, maybe you can kind of weigh in. How is it going to be, competition-wise? And what if kind of the big guy doesn't really feel as nimble as, for a smaller firm, for example? Maybe you don't need to pay a Microsoft. Does it allow room for perhaps a smaller competitor to come in, or will we kind of revert to, you know, the big incumbents that kind of have it already baked in?
I think, and Patrick could clearly, we talked about this before with him, but in terms of the agent competition, I guess, my feel is this is, I mean, it's still very early, but, you know, we're building a custom thing. Patrick and Microsoft's Ignite and all what they just announced on agents, they weren't there 6 months ago when we started on this journey. But most firms don't have an internal AI labs team, a data team, it's stitched together, a whole mosaic of tools and scaffolding that sit on them, and then to re-engineer entire workflow. Most companies won't be able to do that. So then you need standardized platforms.
Talk to us about those,
I think
Patrick.
you have two of them right here on this table.
I mean, how standard? You know, something off the shelf is nice, but the idea of like a customized product is also pretty appealing depending on, you know, who you're selling it to.
Well, I think you can have, I think you can certainly have both. It's funny, Tony and I were joking a couple days ago, we were talking about this. We do a lot of events at Salesforce, and so there's a lot of opportunity to have panels, and I always, when we're organizing them, I say, if you can't find some disagreement in the panel, just don't do it because it's boring. There always needs to be a little bit of disagreement. So I'll maybe apply a little disagreement on Tony's take here. So building any type of AI system, especially an agentic system, it's really hard and it's really, really expensive. You know, the first fundamental problem you have to figure out, and Rodrigo certainly, this is, I think, part of their approach as well, is you've got to get data to the AI. And if your approach to that, which this was everybody's kind of first response is, oh my God, I've got to go train a model. Because I can't just give all my data to OpenAI or to anybody else. I've got to train my own model so that I protect my core asset of my business, which is my data. But training a model is an insanely difficult task. It is absolutely not something that any organization should be doing at kind of broad scale. Maybe there are some specific use cases where you need to really develop some piece of IP and train your own model. But for, you know, certainly the world that I live in, which is, you know, kind of the broad CRM space, you know, the tools that your CRM, your customer service, your marketing, your HR, I don't think you should be training models for that. Even if you trained a model, it's out of date immediately. The second you've trained a model, it's now out of date. Your business changes every single day. You can't be retraining a model every day. And then even if you could, you lose all data governance. Now the data's in the model. It's like telling someone a secret. You can't control whether they give up that secret. I can come up with all sorts of different ways to trick you into revealing a secret. You can do the same thing with an AI model. And then even if you got past that, you can mess up your AI model every time you train a new piece of data into it. So you have to retest it and re-red team it every single time you've trained it, when that's a whole other expense. And you say, oh, that can't be true. Once I've done it once, it's probably, if I make incremental changes. No, it's not. Just like you as a human being, this is a crazy analogy. I apologize ahead of time, but like, I can radicalize any one of you in the room and make you completely change your behavior, everything you've ever known in your life, by telling you one thing. The models work the same way. By the way, that one thing, this is the crazy part, is like, I could tell you that I've just kidnapped your children. That would totally radicalize you. Everything, every like thought that you have would immediately change in that instant. Putting a new piece of data into an AI model can do the same thing. You cannot trust that to run in your business. So how do you get the data there? Well, you've got to use RAG, right? Retrieval augmented systems, and you've got to have vector databases, and you've got to be able to do unstructured data and search and query. So there, you can do it, but that's an expensive system to build. Now you've got an AI and a system that you can talk to that knows about your business, and you can talk to it, and it'll answer questions, great. But then you get to the next part. Well, how do I get it to do something? Now you've got to hook up your APIs to it and your workflows and your business processes, because an AI that just tells you what to do is not nearly as useful as an AI that can actually go do it. So this is what we're trying to build, and I think what Microsoft is trying to build as well is how do we build a platform that the small businesses can go and build on top of. Otherwise, there's a massive, expensive barrier to entry, and the rest of the world can't come along. So that's our approach, is to build that system and then deliver it in a way that any company, no matter how big you are or how small you are, can go utilize it.
Where does synthetic data come into this? Jacqueline, maybe you can kind of kick us off.
I mean, I actually want to go back to what Patrick said before I jump into that one for a second, because I think when you think about AI, we're in a position where we need to democratize AI in general. And so we don't want the large companies to be the ones who only succeed. And the way that we look at our mission across our company is to empower every person on the planet to achieve more. And this is not just tech for tech's sake. There is intended outcomes and ROI that are contributed to that. And so making sure that this is accessible to everyone, and I know both ourselves and Salesforce and Amazon and GCP and others feel the same way. It's not intended just to be for all of the large institutions. And so what we're starting to see now is what this means across partnership ecosystems. A lot of the panelists that you've had on here today play within the same ecosystem. They connect into us as agents and other. And so I think that there's a bigger opportunity for us to scale and drive productivity and efficiency and revenue savings and all of the other benefits that come from this across an entire industry. And then that will lend itself to a sentient industry. And so as we start to think about individual use cases today, some of the time we're looking at individual POCs over the course of the last 12 months, 18 months, we've seen a radical shift in how organizations are looking at this. But now people are not just looking at proof of concepts, they're looking at broad industry transformation. And so as Tony said, they're looking at the overall investment process. Some people are looking at payments. Some people are looking at fraud. And so as you start to think about how not only Tony's organization connects with the rest of the asset management ecosystem, there's even more changes that come. And so we need to think about how agents and AI can drive that productivity at scale and think about kind of agents differently, because it's going to transform. And so I think back to your point originally, we need to be provocative, but it's not about just scaling for large organizations' sake. Back to synthetic data, I think that's definitely top of mind for everyone these days. A year ago, people were looking at the difference between structured data and unstructured data, how you feed it into a model. And so we're going to see an evolution of all of these various inputs, again, as things start to evolve even further.
Rodrigo, did you want to weigh in on that? I mean, kind of, if this really is the next frontier, the cutting edge, what's kind of the next hurdle to kind of get that into, you know, a steady state versus, you know, we're still kind of on the ascent? Where do you see kind of the biggest hurdle there?
Yeah, I think what Patrick said here resonates with me a lot as far as how much work you have to go create if you go by yourself. And so one of the things that we really advocate for is leveraging the community, leveraging open source. There's a lot of IP that's getting created by a lot of different people that over time is continuing to get better and better and better. Now, the one thing that I would say that from SumOf's perspective, we see a slight deviation from that is that people are using a significant number of agents that are open source, standard open source models that people have trained and do certain things well, in complement with a small number of very kind of tightly fine-tuned agents, experts for their business. And that's kind of used for some hard tasks that is just really hard to kind of customize for your application. And that's really a high value thing for them, or in some cases, a differentiated value that they want to go and compete on, right? That we want to go and be better at something in the market. And so we're seeing that construct, that if we can actually enable people to leverage 80, 90% of whatever they need to use from an open source community that continuously gets better, right, and we're learning, then you democratize it in a way that's not only the largest companies in the world that get to have their AI model, and if you're able to then take some of your private data, some of your private processes, some of your secure processes, and train your own separate thing that allows you to regulate and certify and all of those things, and keep control of it, then that gives you that best of both worlds.
Well, I would love to open it up to the audience for any questions for our panelists. Okay, great. Sure, up here.
Back to synthetic data. Favor or against or neutral or?
I mean, you've got to use some synthetic. I think about synthetic data as useful for testing. So you roll out some sort of system, you want to test it. One, you're going to want to generate a bunch of synthetic data just to use as utterances. In other words, ways to test the inferences that you get out of the model. There's 1,000 ways to ask a question, so generate synthetic data of all sorts of ways to ask the same question so you can check whether your model is performing the way you think it should. And then there's certainly a use case for using synthetic data to train models, but for me at least, I come back to the original question of why are you trying to train a model? If you can get your data to a model in an efficient way, you probably don't need to really be training it in the first place. And I think that if there's one big kind of distraction over the last 18 months, I think it's been this idea that we have to train our own models, and the entire kind of press and media being enamored with, what are the models on Hugging Face and how many parameters do they have, and it's like a CPU or an internal combustion engine. It's a piece of a system that needs to exist, not the thing itself.
I'll add to that. All the work we're working on our project, the AI, the model itself, and I'm not diminishing any of the amazing inventions of a foundation model, but it's one line of code, and we just can plug in anything. What is the most performant? It's the everything on top that is. That you need to connect into, the connective tissue of your enterprise, of your company, how people work, what's their data, what's in their brains, how do you get that context learning out into some logic, and then you just plug a model in, and of course the models will get better and better and better and more performant, but you plug that intelligence into this whole system that you. And then that is where the agent magic happens. But there's a lot of hard work there, and these companies on the stage will help.
How long does that hard work take? I mean, what kind of time frame are we looking at here, where this integration process isn't going to feel so clunky?
I think it depends on the use case, on the application. So, go back to the investor question. They'll say, "What's the use case?" And they'll wheel out, and most everyone will say, well, it's coding, it's call center, and maybe customer support / call center and something else, right? And that is like the totality of the imagination of what people think a use case is. But I think there is innumerable use cases, but to get at it, you need to kind of integrate it and get into the workflow of that particular industry.
It's iterative, it seems, and you got to get it
we're 15 months in. We'll have beta first half 25. So call it a year just to connect all the plumbing together and then figure out what are people actually doing, and can we change that and unlock lots of value. But I'm sure there are dozens of use cases above and beyond coding and call center. But to get at that, I don't know, Patrick, what do you think?
Yeah, I think the use case is literally every single part of your business, every function in your business. This is no different than the cloud or the internet, where, it's crazy. Every system in every one of your companies right now runs probably on the cloud. Right? We transformed our entire business. The same thing is going to happen here. So it's everything. And if you approach it use case by use case, by the second or third use case, what you'll realize is I don't need a different system for every use case. What I need is a platform that I can build these use cases on top of. And that's very much like cloud computing. You all probably work for a lot of banks that maybe 15 years ago were like, what we need to do? We need to build our own cloud inside of our bank, and you probably tried really hard and spent a whole bunch of money and you probably failed, and now it's insane to think of doing that. You're just like, no, we're going to use Microsoft, we're going to use Google, we're going to use AWS, or if we're in China, we're going to use Alibaba. That's it, right? I think the world will end up in the same place here.
But the funny part of it is, and you can probably attest to this as well, what we're starting to see is, yes, there are a lot of these large general purpose AI tools that are available, But there are still a lot of organizations, back to your point about people thinking that they could build their own cloud back then. There are a lot of financial services organizations and others that are thinking, oh, I've built a knowledge exchange internally, and I'm using that as a replacement for Copilot or a replacement for agents, and I don't need to do that. But then they start to see advancements in technology come out, and they realize, wait a second, am I going to continue to invest in this, build the infrastructure, continue to run the models, put the data in governance, think about security, how am I securing the core foundation of the organization, where's the data going, what does the graph look like? And so over time, people are now starting to see, even 12 to 18 months in, wait a second, we need to pause and reflect, is this going to be a build or buy situation? And if it's going to be a build, what type of long-term investment? You look at JP Morgan, for example, who's very high on the index for Evident AI. They're leading the charge, but they've made significant investments in their overall technology stack and how they think of themselves as an organization. Lots of organizations have to think about what the future of their industry looks like, where they want to be, and how they're going to go on that journey. This is a very pivotal moment for a lot of organizations, and we're going to see leaders and laggards as we move forward, but now is kind of that time of reflection as organizations make decisions.
And one other thing, you know, I'm going to link it into NVIDIA's earnings last night to today. So, you know, I would say 80% of their revenue today is training, to Patrick's, training these models. And a little bit is inference. But inference is, to me, production. It's AI in the wild, in production. And it's still small. But if this agent, and agent force and Microsoft agents go wild, it'll go from 80% inference, or 80% training, 20% inference to 20% training, 80% inference. And the computational load of agents running wild, I mean, it's gonna just completely it'll index to agents, and then that will be the marker in which you can see is this agentic revolution happening, and because you'll see these AIs in production.
It'll be really good for Rodrigo's.
It'll be great for Rodrigo. Yeah.
Well, it's important. Look, I mean, you know, these types of things, as we've discussed here, they're complex. It's not like you wake up one day and say, hey, I have an agentic platform. It's not. You know, you have to go through these different things. And so the things that we work closely with Tony and folks here to just understand how are we evolving this? Right? How are you evolving it? It's going to be at scale. It's going to be a lot of agents. It's going to be dynamic. It's got to be very low latency, low power, low cost, because it is going to be 80-90% of what we deploy. Right? And so I think we have to be thoughtful about it. I do think that the one thing I do think that is interesting is as a platform company, you know, we always thought, hey, world's cloud. Turns out a lot of people don't want to move their data, and their data's on-prem, and so we're shipping we don't care. You know, we ship cloud and on-prem, but so there's another reanimation of old data that's happening that we have to go understand why people are doing that. But they've got decades of data that sits on-prem. They've never used it. They don't know what it says, but we're using AI to go reanimate that data and actually bring it back to life. And so I think it'll be interesting to see. But I do think that the world, like Tony said, I think inference is coming. It's going to be 80-90% of what we all have to do. I think we all have to be ready for it. It's going to be what we actually get the return, the ROI on, because until then, you're just, would you say, Tony, it's basically training is going to school.
Training's college.
Right.
Inference is going to work.
Yeah, so let's go to work. Right, let's go to work on AI, right?
Well, we're well on our way. And to wrap up the evening, Annabelle and Alexandra, I'm going to greet you guys. Thank you so much.
Stay there. I'm going to be like 1 minute. We've had a very long day, so like 8 hours of panels. I know everyone's knackered. Just wanted to say we've covered like the most practical kind of right here, right now use cases. We've talked about the innovations on the horizon. We've gone some crazy, interesting sessions on geopolitics. So just wanted to say before we all go for drinks, thank you so much to Bloomberg for being such excellent moderators today, all the production crew. Thank you to our headline sponsor, EY, who's been a fantastic partner throughout. And thank you to all of our supporting partners, Snowflake, Sambanova, Cognaze, Writer, and Rogo. Without them, the event wouldn't have been possible. And thank you all for coming, and we hope to see you in a year. So thanks so much.